Welcome to the main stage of the SOSV Climate Tech Summit. If you're watching me now, you're in the right place to watch the second of 2 days of interviews with founders and investors finding ways to decarbonize the atmosphere around our precious planet Earth. In case we didn't already meet yesterday, my name is Sean O'Sullivan, and I am the founding and managing general partner of SOSV, which is the host of this event. SOSV is a multi-stage global venture capital firm. We invest from inception, meaning right at the very start of a new company's existence, in companies whose technology will improve human and planetary health. While I'm normally based in New Jersey, I'm speaking to you today from Cork, Ireland, where SOSV's back office team is based. SOSV is one of the world's leading climate tech investors, with more than 150 climate tech firms in our portfolio. The co-investors in our portfolio companies include virtually every climate tech investor, from DCVC and Costa Capital to Temasek, Prelude Ventures, and Breakthrough Energy. Many of them are our partners in this summit. Today, I will be introducing sessions with the help of my SOSV colleagues at our program locations in New York City, Newark, New Jersey, and San Francisco. At the start of the summit yesterday, I made some remarks about the complicated state of climate tech. In short, I argued that no matter what's happening in Washington, climate tech will roll forward thanks to market forces and technological innovation. You can go back to the agenda and watch it on demand if you like. I did close my remarks with comments addressed to the 1,000 or so accredited investors, VCs and CVCs, corporate venture capitalists, in the audience. I'd like to take a minute to repeat those remarks today. 5 years ago, SOSV formed something called the Genesis Consortium, a committed group of leading VCs that manages tens of billions of dollars of capital and are committed to deep tech, both in climate tech and in biotech. Many of the VCs you'll see at the summit are members. Today, we have 30 VCs participating in our consortia, providing access to our earliest stage investments. They are managed by SOSV, but there are no management fees. If you are a CVC or VC that would like to get early access to leading startups in climate via these no-fee consortia, we have something to talk about. You can reach me via email at sean@sosv.com if you want to know more. That's SEAN@sosv.com. Just mention Genesis in the subject line. Together, let's keep increasing the supply of startups flowing so we can continue to help this industry thrive. Now, back to the Climate Summit. To finish introducing the summit, let me turn to my colleague, Dr. Susan Schofer, who is a partner at SOSV and our Chief Science Officer at our office in Newark, New Jersey, also known as SOSV's HACS program. She holds a PhD in chemistry from Caltech, and prior to joining HACS, Susan served as Senior Vice President of Business Development for Modern Meadow, where she led product from early ideation through commercialization. Susan works with our early-stage startups to define key milestones and go-to-market strategies, while also providing scientific oversight. Over to you, Susan.
Thank you, Sean. Well, we're back for the second day of the summit. In case there are folks here who missed my introduction yesterday, let me provide a quick rundown again. Today, November 6th, is the second day of the main stage programming. The main stage sessions began yesterday. These sessions have been pre-recorded, and anyone can view the stream during those hours. It's completely free. You can send or post a link to this page anywhere, one click and they're in. Easy, so send it to a friend. After the summit, on or before Tuesday, November 10th, all these sessions will be posted in the SOSV account on YouTube. If you have registered for the summit, you will receive an email from us with links to the sessions. In other words, whatever you miss, you can catch later on YouTube. In addition to the main stage, we have what we call the live breakout sessions. These actually started on Monday, November 3rd, and they continue through tomorrow, Friday. These breakouts are live, I repeat, live events produced by our partners. They are listed on the agenda page, which is linked at the top of this page. And one more thing, a big shout out and thanks to the law firm Goodwin, our returning and all-time favorite sponsor. Now, let's kick off our first main stage agenda session of the day, which is entitled Chris Sacca, Why He Is Still Betting Big on Climate Tech. Rockstar investor Chris Sacca jumped into climate investing in 2018 with the launch of Lower Carbon Capital and a rallying call to un-F the planet. More than 200 investments later, Lower Carbon has become a force in climate tech investing, with deep moves in many categories, including fusion energy and carbon capture. The firm also has one of the deepest teams of technical experts in venture. Despite the downturn in climate investing, Saka argues that climate tech is more compelling than ever. Our moderator for this session is Eric Newcomer, who founded and runs Newcomer, the startups and venture capital media and events company. Take it away, Eric.
Chris, great to be with you. So give us the snapshot just to start off. Where is lower carbon today? Like activity level, like focus, just give us a sense of the investing that you've done.
Yeah, so Lower Carbon is a multi-billion-dollar fund. We might be the most active, if not among the most active investors in early stage climate tech. And that spans basically every aspect, every technology, every part of the economy that is carbonized right now. We're looking to decarbonize it because frankly, carbon is expensive. So anytime we take it out of a process or a product, a service, we find an opportunity to profit. And so, but we also invest in some later stage stuff. Particularly, we double, triple, quadruple down into our favorite portfolio companies, the high flyers, and then opportunistically pick off stuff we see out there too. And so we're
how much money?
I'd say a few billion. Look, every time I come to you, we're basically actively fundraising at all times.
What are the portfolio companies you're most excited about or feel like have real traction?
I mean, look, electrons are the ball game right now, just moving electrons around. And so whether that's in terms of generating across energy, so we have the world's only dedicated fusion fund. And I'll just say this because it's public record now as a result of being in a state meeting, but we are out talking with investors about our second fusion fund. It's fun. Fusion is this thing that had just this bad rap for decades. We would hear fusion's 30 years off and always will be. But we try to address everything we can with fresh eyes. And so when we went and started hanging out in the actual fusion labs, we started looking over our shoulder and we're like, look, anyone who's dismissing this technology just clearly hasn't been in the lab. They haven't seen the throughput. They haven't seen the net energy happening as a result of these ignitions and these reactions. And so, earlier in my career, I might have spent more time trying to convince people of this. And instead, this time we just started buying it all. And what we're seeing is across multiple diverse approaches to fusion, incredible success. I mean, exponential growth, and in some cases, double exponential, where the exponent is
growth of what metrics? Yeah, can they share? Growth of what?
The key metric in fusion is the Q value, and quite simply, the Q value is: are you getting more energy out of the reaction than you put in? And so it's happening. I mean, when we raised our first fusion fund, we called it Q is greater than 1. That was the holy grail of fusion. That's literally the name of the fund. And so 4 months after we announced that fund and raised it, Q is greater than 1 was announced as achieved at a lab called the National Ignition Facility at Lawrence Livermore. And our newest fund is called Q is greater than 10. Again, it's one of these things where it's really funny when we go out to raise these things, how people roll their eyes.
Right.
Like it's not like we have any shortage of capital. So if you don't believe, don't believe. Feel no pressure. But already,
in terms of companies, like what companies?
Well, I was just going to say already, NIF, that same facility, has announced that they have a Q value greater than 4. And I'll just say, our companies, some of them aren't yet publishing Q values, but they're private companies with the flexibility to move faster, use next generation technology. And so if the public labs are stating Q greater than 4, I'll leave you to draw your own conclusions. And so these are companies like Commonwealth Fusion, one of the pioneers of the space, based up in Boston, Massachusetts.
Okay.
And by the way, there's tokamak approaches, stellarator approaches, inertial confusion. We have some really crazy shit I don't think anyone's really talked about yet. We have a company working on basically fusion reactors that look like a server. They're literally like a 2U server unit. Some of these are tabletop, and then some of them look more like a small industrial facility. Depends on the application, whether they're pushing electrons to the grid, or whether they're going to be at a forward operating military base, or whether they'll be in an airplane,
or fueling AI training runs. I'm curious, how do you think about the potential that AI training and inference changes sort of the energy demands in our country?
Yeah, there's no doubt that AI is the biggest impact to the demand curve in energy globally. And remember, 20 plus years ago, I was one of the core people building the data centers at Google. And at the time, we were already, this is basically 2003 to 2007 were the years I was there. We were the largest power consumer in 3 states in the United States and in 2 countries outside the United States. building and powering servers is an exercise in consumption. But essentially, compute requires electrons. That's the nature of a silicon chip. And so, but without that, even if we carve that out, with a burgeoning middle class, with a planet that's getting increasingly hotter and the growth of air conditioning, you're going to need just more electrons generally. That's just how we're electrifying the economy overall. We would like to hope that we move away from hydrocarbons as the base of the economy and need more electrons. And so as a result, even if you weren't working in AI, you were seeing an accelerating growth curve for electrons. Now, AI is the customer for so much of this stuff, but it is also the scientist behind so much of this stuff. So fusion is a great example of where, one of the reasons why fusion did move so slowly is that considering those temperatures and the magnets necessary and the superconducting tape necessary and the lasers necessary to experiment with that, a lot of those fusion companies could only attempt one experiment per year or longer. So now with AI and machine learning, they can conduct literally thousands of experiments per week in the computer in high fidelity, including the insane shit that would never make it through the risk committee.
Too dangerous, yeah.
And so, I mean, look, fusion is so much safer than fission that it's regulated like an MRI machine. And so, there isn't the waste component, there isn't the meltdown, evacuate the neighborhood component. But as you're experimenting with fusion, you're perfectly capable of melting everything in the room at those temperatures. And so again, some of those early experiments would have never been attempted because of the impact they could have had in the facility. And yet, if you don't try the craziest shit, you're never going to unlock the real breakthroughs. And so it's funny how, and by the way, this is across the entire portfolio, the impact of AI. We see it everywhere, whether it's in making industrial chemicals with enzymes instead of oil, whether it's storing energy and the calculations around battery charging and efficiency and discharge, whether it's even around discovering new enzymes and proteins that help displace natural gas and ammonia-based fertilizer with microbial-based fertilizer. I mean, it is across the entire. We always ask.
You're getting me and hopefully the crowd excited about these ideas. How much are you getting follow-on investors excited, or what specifically sort of? Traditional venture capital, it's stage funding. It's like, we're going to do seed, Series A, are we seeing that take off? Like, it feels like we've seen funds like yours, which are really loud on the early stage. Is there the growth stage money that you need to sort of see these ideas through?
I mean, there is, and we could use more, but it's there. There was a gap for a while between those of us and look, I mean, Ned and his team are fellow travelers in this and actually pioneers in this space. And so we're not the only ones. And I think what we started to see was the math from early investors in climate had changed. In the beginning, those companies needed subsidy. They needed regulatory permission, or the buyers had to pay a premium for that stuff. And we started to see the math change, just the unit economics, such that because of orders of magnitude improvement and everything from compute clusters to electrochemical membranes to biological processes and reactors, just all coming down by at least 2 orders of magnitude, as well as the substitute goods. And by the way, I mean, that's one of the things. Almost everything we make is a substitute good for something that's already out there, whether it's energy, whether it's in transportation, whether it's in storage. Everything we make, whether it's green steel or wood as strong as steel or concrete, we actually know who the customer is and we know the demand curve. We know the pricing, the specification, how they buy it, when they want it, how far in advance they order it. And so we're building to something where we don't actually have to go out and spray and pray with CAC and buy a bunch of TikTok ads and hope that somebody installs our app. Right. And so the businesses get to be businesses faster than any other businesses. Because look, if we know, it's essentially like the world is one big RFP for the stuff we do. And so if we know who the customer is and what they want and what they're willing to pay for it and the characteristics they need, the strength they need, the certifications they need, the speed they need, whatever that is, then we're able to offer them something that meets or exceeds all of that. Hopefully is cheaper, faster, sourced domestically, a more reliable supply chain, happens to blow up less. And we're basically beating all of them on the merits. And that's the goal. I mean, it's funny. People have asked, like, so now that the Trump administration is in place, how screwed are you guys? And I want to remind them, we started this fund during the first Trump administration. The entire thesis was we weren't counting on any help. There is so much culture war grandstanding coming out of this administration. And yet green little secret is that there's more clean energy jobs in Texas than there are oil and gas jobs.
Right.
It doesn't make for good country music songs and it doesn't make for good ads, but that's just the reality of where the growth is in this economy. And, when the IRA was passed and free money was falling out of the sky, I have no allergy to money. I'll accept it. But we didn't need it to build these businesses. And so ultimately, when somebody comes to us to buy, in the case of Solugen, one of our companies that makes industrial chemicals using enzymes instead of oil, I referenced them earlier. When somebody comes to them to buy those chemicals, they ask two questions. Is it this chemical and is it cheaper? And, maybe sometimes they ask a third question. Where is it being made? Is it here in the United States so I can count on it and not being tariffed or not getting stuck on a slow boat or not being caught up in a trade war? If it's those three things, then F it, I'll buy it. And often that buyer is literally the oil and gas industry, who is not particularly concerned with the scope 3 emissions reduction that results from adding this into their supply chain. They just want it. They want it cheaper. They want it, either better as an equivalent to what they've got, and they want to be able to count on it. And so that's my favorite customer, honestly.
Do you have our portfolio companies would have trended here if it had been Kamala versus here with Trump, or do you have a sense of how much it impacted the sort of forecasts for your investments?
No, not on the climate part specifically. The supply chain stuff is a pain in the ass. There's components that are now either stuck up, held up in tariffs or just not available now. And, I think with increasing decoupling, we really do have to rehome some of that manufacturing. And it's a bummer to see this administration trying to beat up the CHIPS Act. I mean, the CHIPS Act was the biggest shot in the arm for rehoming industrialization here in the United States and advanced manufacturing. It just kills me to see them banging on that because it was a Biden policy, when that really is the type of factory we need here. That really is the national security we need here. It almost feels treasonous when I see people trying to push back on that kind of manufacturing incentive to happen in the United States. We really are in this race between the democracies of the planet. I won't just say the West, because this involves Latin America, Asia, Africa as well, and the authoritarian states. And by the way, I hope we don't devolve to be one of those ourselves, but we really are in a race. And I do believe that AI is the ball game.
Are you doing investments in Europe or even something like China, or this is sort of an American focused strategy?
I would say our territory is the democracies of the world. Who knows what an ally is anymore? Again, I'm just rolling my eyes at some of the perpetual existential crises and just the unwinding of I think the foundations of a collaborative planet. But at the same time, we have a substantial part of our portfolio in Europe. We go where the innovators are. We go and Europe had a head start on thinking about this stuff. And one of the few silver linings to the awful war in Ukraine is highlighting that energy independence is an important pillar of running a democratic society. You cannot be dependent upon an authoritarian state for your energy supply. And so that absolutely accelerated a lot of our work and a lot of other folks' work in this space. And in parallel, I appreciate China's recent lip service to how they're advancing clean energy there. They are just the wildest example of they're putting up God knows how many. I mean, multiple people in your audience have the latest stats on how much damn coal they continue to burn in their opening every week. But at the same time, you cannot look away from their insane progress in solar and their insane progress in wind and what they're doing in fusion. I mean, it is a race in fusion right now, and how quickly they are able to get fission reactors up. And, we don't touch fission, not because we don't think it's the cleanest power in the world for now, but it's because it's 10 years of asking permission and billions and billions of dollars of navigating your way through a process, rather than, we believe, and I would just say no, that we'll be delivering fusion electrons to the grid before any of these new SMRs will. And that's crazy, right? Because the planet needs those SMRs.
We're hearing fusion a lot. Like, what percentage of your your focus is fusion versus everything else that could be in this sector?
Well, one of the things we do is I think the biggest risk for an investor is starting to believe your own bullshit. and having too much of a thesis. And so, what happens is our grand thesis is, look, carbon's expensive, we'll take it out. But at the same time, if you have too strong and firm a thesis about a specific battery technology, and you will be blind. First of all, every company that comes and pitches you with that technology will be confirmation bias, be like, oh, my blog post was right. My letter to investors was right. And so these guys are working on that same technology. I better put more money into that. But it'll also leave you blind to new developments in a parallel technology that might actually just be better. You will not be as open to the innovation curve. And so what I'll say is, early on, we had a couple small investments in fusion. We were probably myopic to the potential of it because we had been conditioned by the overall market about, all that pessimism I described earlier. But it was, I remember when Alan Eustace, the top engineer at Google and one of my favorite people and a mentor really when I was at Google, called me up and was like, you got to go check out one of these companies. And he sent us to Commonwealth, was the first one. And I kind of rolled my eyes, but when Alan Eustace says something, technical or encouraged me to look at something, that's one of the strongest signals in the world. The other strong signal is anytime we feel aggressively negative about something, that's probably a signal that we need to go double check that thesis. And so it was when we dug in and saw that data, it made sense. Now, at that point, when the facts on the ground had changed, we realized, look, these are mispriced assets. They are cheaper and more available because most of the market is stuck in this conventional wisdom. And so when that happens, it's like when, you're dealt some mediocre cards in poker and then something flops that makes your hand much more valuable. You're like, shit, I'm pushing chips in.
Right.
So that's what happened for us is we saw that fusion that had been a small part of our portfolio suddenly created one of the biggest opportunities for alpha. So for us, unlike some investors, what we did was we built a separate vehicle. And then we went back to each of our LPs and said, look, we're not going to foist a new strategy on you. We're going to let you make an independent decision. Is this something you want more concentrated exposure to? We could cram it into our existing funds, but then some of them might look eventually like fusion SPVs or something like that. And so,
right.
So we built a separate vehicle, and that allows us kind of two opportunities. One is to maintain great relationships with our LPs and say, you know the allocation strategy you have. I don't. I'm not a professional LP, but I also know the strategy and how bullish I am. So you decide independently if you want to go there. But it also gives us the opportunity to test the thesis over and over again. We also did this carbon removal, by the way. Carbon removal was not a market when we started. We had a couple of interesting projects there. The first generation of carbon removal startups could not remove more carbon from the atmosphere than was spent in traveling to the ribbon cutting itself. I mean, they were just more like first generation demonstrations, and bless them for doing that because they walked so we could run. But once we saw the demand side start to build up through Frontier and companies honestly and directly willing to buy millions of dollars of carbon removal, and once we saw the technologies on the supply side, we started to see that those solutions were scalable and could actually deliver removal at multiple gigaton scale. So that's when we decided, look, the facts have shifted. Let's build a concentrated portfolio here. We hired Ryan Orbuch from Stripe, who I don't know another person on the planet who knows more about carbon removal and is more exposed to the carbon removal space than he is. So
are your funds more concentrated than traditional venture funds? Or it feels like, there is clearly a lot of pull towards, okay, once you find a company that you think has a really great idea, to leaning into that company. And that obviously has also been true for you throughout your career with Twitter and Uber, seeing companies are like, okay, I really think this is the one, pile in. What's that mean for your portfolio construction?
Again, I mean, look, this is a little bit of inside talk just because, I think a lot of your audience isn't necessarily LPs, but there are household name firms that force LPs to invest in all of their strategies rather than actually, taking that decision-making power away from the LP. And so there's a really famous fund that has a really underperforming healthcare fund. They're like, if you want access to our other stuff, you got to put money into healthcare. And maybe the LP doesn't want that, or maybe they don't like the manager. Of that
you let them choose.
But yeah. And so, but along the way, if you talk about the lowercase example, so early on, Uber was one of the investments in our portfolio. A lot of Uber was coming together basically, in our house, and we worked on that thing for 6 months before it was incorporated. I felt like I had an absolute information advantage. I felt like I had a familiarity with that team and with the market. Bill Gurley wrote later about how it was actually growing the market, not just replacing the existing market. Right. We knew that early. And so, a lot of what we do, it's funny, I'll just call it insider trading. If we did this in the public markets, they'd put the cuffs on us. But we are in a position where we are sitting in the boardroom, we are working side by side with these entrepreneurs. We are seeing who the customers are and the sales stack up. And then before the whole world knows that and there's an auction, we want to make sure we can shortcut that process often and say, hey, dear founder, let's give you a fair price. We're going to buy more of this company. We'll skip 6 months of you going on road shows, et cetera. And let's just keep our noses down and get back to work. And so anytime we start to see a misprice or that we have an information asymmetry, we're going to try and own as much as we can of that company and not wait around. And so that's how I am. And so what ends up happening is we do have concentrated positions, but those concentrated positions come from like, holy shit, we just see this thing went to obvious all of a sudden. This thing just inflected from pretty damn good to holy shit. And so when it goes to holy shit, I don't really want to share that with a lot of people.
Any free startup ideas for people, or this, ability to see sort of where the future is going? If somebody's in the audience saying, oh, I want to dream up the next big thing, are there areas where you'd point them to, or specific ideas you're looking at?
Yeah,
I need to find the company for.
There's a couple of things. One, for entrepreneurs, I think this space is ripe right now because everyone just presumes it's bruised, right? So now there's a few things. Like, I wouldn't want to be in the hydrogen economy right now. It's a hot take, but I think hydrogen is a waste of time and a lot of money. Not only they're overpriced, but frankly, hydrogen is the smallest element in the world. It's just impossible. It leaks from steel. You can't contain it. It's hard to compress. It tends to blow up. And what we now know is that when hydrogen escapes, it's actually radiative forcing. It's a greenhouse gas. And so I would love if we all spent a lot less time on hydrogen. We don't have exposure to it in our portfolio. And that's a hot take. And a lot of great people would tell me I'm full of shit. And so good for them. Put their chips where they want to. We also didn't get banged up because we didn't have exposure to stuff that is in the project finance category, where it's basically an interest rate exercise like EV charging and that kind of stuff that requires a lot of permitting. And so I would take any real passionate entrepreneur and have them focus on an area where they don't need permission to start something. But while everyone else is focused in the other direction, this is the place to pay attention right now. And so how do you push electrons around? How do you store electrons? There's just so much there. And so I would encourage anyone to jump into this right now. And from the LP side, there is still a gap between what's happening in the early stage and then the project finance level, where people who don't actually care about climate can still make these projects paper out. Windmills in solar are going in by bloodthirsty investors who just know their finance exercises and they work. It's just cheaper power. Trump can deregulate coal all he wants. It's just not going to pay for itself. And so you're starting to see clean energy just work on its own. But in the meantime, there is a Series B, C, D gap still. And I would just encourage anyone out there with checks to write to grab a couple of people who can actually deeply understand some of these technologies, be there to actually evaluate them as businesses. We didn't expect to start in that space, but I remember saying to somebody we were recruiting, I don't know if we'll ever have more than 6 employees at Lower Carbon. Now, as dozens of us across not just the technical side, but also the business side, there are so many of these companies that are just obvious businesses that we're going to finance as many of them as we can, but we can't do them all. And so I would invite other Series B, C, D investors with all of their complementary skills to come in and actually see these businesses as businesses.
How do you stay, energized and upbeat? You've talked about sort of the potential threat to democracy. This is a space that, attracts a lot of true believers, and to see sort of the president of the country turn against it. Like, how do you, I don't know, stay the happy warrior when it feels like such a negative moment?
Well, okay. So this is going to sound completely counterintuitive, but we don't hire climate people. And so climate people burn out. Like, we hire people who obviously give a shit about the climate at the end of the day. But what we found was climate obsessives who work for us. And by the way, we learned this lesson from another big company. I don't know if the CEO says it out loud yet, so I won't throw him under the bus, but climate obsessives tend to burn out because even when they close their laptop, they're still in code yellow. The cortisol is still there. They're still freaked out. And so a good entrepreneur is kind of in an obsessive, like, I don't know what day of the week it is, I'm busting my ass. But at the same time, if you are just heavy with existential fear at all times, you just can't do your best work. And so I would actually tell you, and this sometimes comes as a shock to people, I am not climate obsessed. Like, I eat beef because it's fucking delicious, right? I drive a truck because I live in Montana. And so there are aspects of my life that I have a high carbon footprint. Let's never forget that the entire concept of carbon footprint was invented by Ogilvy and Mather, working as a client for British Petroleum to foist the responsibility back on individuals to distract from the impact their business is having. So carbon footprint is a bunch of bullshit, and all it's really resulted in is paper straws and an entire generation of super anxious kids. And so I really try to focus on business builders. And some of my favorite people who move into this business do not have the resume for climate folks. And by the way, the very best of them come from oil and gas. They come from waste management. They come from big aero, big pharma, big ag. They're the people who have the relevant skills. And so when they're not panicked and they're not freaked out, they do their best work. Now, in my spare time, I freak out about this government and about the breakdown institutions and stuff like that. That would certainly, you'd see that in my cortisol levels. But when it comes to this, the other thing I would just remind people is it's fucking working, right? Is that increasingly when you look through that audience and you'll see heads nodding right now, it's working. These are real businesses. This is not charitable. This is not philanthropy. This is not concessionary capital. At Lower Carbon, we will not take $1 from somebody's nonprofit concessionary capital pool. I'm like, put me up against your oil and gas and I'll kick the shit out of it. And so that's what's happening right now. And I love it. I want the bloodthirsty entrepreneurs who might not even vote the same way I do to come in here and start kicking ass and building real businesses.
Love it. Chris Sacca, thank you so much.
Thank you, guys.
Thanks, Eric and Chris. That was great. I'm always amazed by Chris Sacca's compelling and lucid way of talking about the climate sector, even in these tricky times. For our next introduction, let's turn to Dr. Sabria Stukes in New York City again. Sabria was with us yesterday, but in case you missed her, Sabria is a partner at SOSV and chief science officer at our IndieBio New York program. Sabria earned her PhD in biomedical sciences from the Albert Einstein College of Medicine. She was the founding associate director for the Masters in Translational Medicine program at the City College of New York, where she focused on training scientists and engineers in the hands-on process of medical technology commercialization and healthcare innovation. Over to you, Sabria.
Thanks, Sean. Our next session, What It Takes to Scale Tech for Climate Impact, is a one-on-one with another leading climate tech investor, Meta's former CTO and Gigascale Capital founder, Mike Schrepfer. As AI reshapes industries and drives global power demand, the next wave of innovation will come from founders building next-generation physical systems rooted in scientific and engineering breakthroughs that can scale in the real world. These are the builders turning deep tech into durable businesses, solving global challenges, and scaling climate impact through innovation. In this conversation, Mike will address how the innovation landscape is shifting, what it takes to build enduring deep tech companies today, and where new opportunities are beginning to open. Our moderator is James Temple, the senior energy editor at the MIT Technology Review. Thanks for joining us, James, and over to you.
Thanks, SOSV. We're very happy to be here, and it's great to get a chance to chat with you again, Mike. Thanks for making the time. I was looking back. I think you initially announced the launch of Gigascale Capital in May of 2023, and that was in some ways a very different time. The U.S. had just passed some of the most ambitious climate packages that they've managed to put in place, most notably including the Inflation Reduction Act. We are in a pretty different world now. The big, beautiful bill just rolled back a bunch of climate subsidies, and we've seen various other efforts to roll back, unravel various climate supportive policies. I'm curious how that has shifted your thinking at Gigascale, your strategies, what areas you see as opportunities in this current environment.
Yeah, I mean, the vibes have shifted. Let's be honest about that. Like, people were very excited back then. I think, I get more skepticism than excitement when I tell people what I'm up to these days. I think the actual underlying is actually better than it was then, which is, my bet was pretty simple that long-term technical trends are going to deliver technical solutions that are just cheaper than existing options. And if you sort of look at the battery prices, solar prices continue to fall. And I think the X factor that a lot of people, are looking at now is, AI and ML being applied to so many parts of infrastructure planning, permitting, to plant design, to new material and biodiscovery, robotics. We're seeing a lot of excitement in advanced manufacturing in the U.S. with onshoring and others that is a great crossover to climate because basically we just need to build a lot of stuff. So, I'd say that like the atmospherics are like clearly worse. and that creates a bunch of headwinds. I think that the policy landscape has shifted quite dramatically, as you mentioned, and I think it creates actually some good. So, fission's having a moment.
Mhm.
I think permitting reform is a really important thing, and definitely some bad. But the underlying technology trends sort of continue unabated, and I think continue to create some really meaningful opportunities for people. And then I'd say the other thing that I somehow didn't mention in all of this is that in that time frame, even months ago now to now, the pace of data center build out, which is pulling forward energy demand and all of the supply chain resulting from that. We're pulling decades of development into years. And so I think this creates, I think it's like challenging, and we're playing in hard mode now. But I think the opportunities are actually even more exciting than ever.
Interesting. Yeah. I mean, I think there's absolutely no question this massive build out of AI data centers is driving huge demand for new electricity generation. Unfortunately, it's not always being met with the resources we might want it to be met with. We are seeing some of it being met with, if it's just running on the grid, some large share of that's going to be natural gas, maybe coal. We're even seeing this uptick in demand spawn proposals for new natural gas plants. So as someone who both has expertise in AI and as a climate tech investor who's interested in driving forth the energy transition as fast as possible, how are you thinking about that problem, that conundrum, and what can be done to sort of ensure that more of this added demand is being met with
Yeah.
low carbon or carbon free energy resources?
Yeah. I mean, at the highest level, I would prefer a high demand for energy world than a low demand world because, like, if we have demand and there's growth, there's opportunities for investment. And if we're stagnant or falling, it's like just hard to do. And that's what we saw over 20 years. I mean, imagine you had a long duration energy storage in 2000 company in 2015. Like, who's going to buy your product? No, nobody really cared. And it's very different now. So that's the highest level. And then I think there's some good and some bad. And so let me tell you the good and the bad, which is the good is that hyperscalers are compared to the commodity markets a lot less price sensitive. So
Mm,
if you can deliver,
mhm.
they will pay. And so even a year or 2 years ago, I'd be looking at new energy things and we'd be doing TCOE analysis and TEAs to try to really understand, can you compete with existing things? And it's sort of my answer is flipped, which is like, how much capacity can you deliver how quickly is actually the only thing that matters. So hyperscalers are willing to pay for delivery,
Mhm.
certainty, and sooner, and they're less price sensitive. So that's the good news. The bad news is not everything is ready in that time frame,
Right.
right? And so if you're not ready and a turbine and a pipeline is, then they will make a rational decision and buy that technology. So I think it's like back to our first conversation, first part of this conversation is like it's just like up the urgency for me. It's like we got to get more of these solutions sort of commercial ready faster. Like we don't have time for the 2030s. We need them now. We need them in the next couple of years.
Yeah. So what do you think of the available options right now? What are some of the clean electricity options generating resources that most closely fit that bill that can be spun up relatively quickly to meet these sorts of demands? What are the interesting plays you're seeing in trying to meet those needs in clean ways?
Yeah. So I mean, so yes, gas is being built. I mean, the other thing that's happening is on the non clean side, but the other thing that's actually sort of good news is the timelines for delivering gas turbines and the prices continue to go up there,
Hmm.
and so your competition is sort of, and this is our bet in technology in the long run is that would fundamentally get more expensive over time, and things like solar would get fundamentally cheaper over time. So like you're just trying to figure out when those lines cross. But the biggest I think unappreciated asset right now is batteries.
Mm.
Um, because batteries can do two things. Well, in a congested grid situation where my peak load exceeds my grid tie, batteries solve that problem for me.
Hmm.
And if I want to start doing completely siloed off grid data centers with solar and wind, batteries or a gas peaker can kind of
Hmm.
make that happen. And the scale of battery deployment, I don't think people like still probably even watching this understand. You and I were looking at some charts the other day, like ERCOT in Texas. We have evenings now where 10% of the grid power is discharging batteries.
Right.
So that it's at the scale of nuclear on the Texas grid. So I think that we're going to see a massive build out of batteries. And I think that will be a way to sort of manage sort of demand and supply there. I think if you could tie that to wind and solar, in the places where you have land and permits and can build quickly, you can build a very large solar farm very quickly,
Yeah.
much more quickly than a gas turbine. If you have the land and capability. And I think you have other nearer term things. So I think geothermal is having a moment. Fervo is obviously on a tear. Tim is doing a great job, but it's an underutilized asset. Fission is also having a moment. I think there's a bunch of next generation reactors that have a chance of coming online maybe late this decade. And then I think there's some other, we're invested in a offshore AI inference data center company called Panthalassa, who is basically putting buoys in the ocean that bob up and down and run inference workloads. And that is getting a lot of attention because it as something that you could scale very quickly, like could be deploying gigawatts this decade. So I think there's, kind of a lot of different things. And then in the 2030s is when I think, I'm mid to late 2030s is when I'm hoping commercial fusion is really a sort of a unlock for a whole variety of new things.
Yeah. Yeah, you had mentioned yesterday this company, I'm gonna say it wrong, Panthalassa? Is that how you say it? So, it's funny, I've been at Tech Review writing about these things for about a decade now. I've gotten pitched, I can think of, like, 2 times on wave energy, and I've never really done anything because this is just an area where folks have talked about the potential for a long time, but it's been a very difficult area to figure out a way to do it scalably, economically. Um, Pathologic, it's a pretty interesting novel approach. It looks I was on the site today. It's these big floating orbs in the open ocean. Can you just talk a little bit about why you think this might be an approach that could crack this problem? Could actually get us to a point where we are starting to tap into wave energy in a more in a meaningful way.
Yeah, I mean, this is why it's so important to think about these things from its overused word. So forgive me, but first principles and sort of like, okay, why is wave energy hard? Wave energy is hard really for 2 reasons in all most traditional installations. One is many of the systems are tethered to something. They're tethered to the seafloor, tied down, anchored down, or they're tethered to a pier or something. And so as soon as you are fixed on something and you have waves crashing into you, you now need to worry about storms. So in the outlier case where a very big storm happens, like you have to have enough structural rigidity to survive that. So you've immediately just put a really big cost base on what you're doing to fix it and deploy it and reinforce it. Problem number 2 is you typically have moving parts. There's a lot of different ways to do this. You can have a pneumatic, you can have flappers, like moving parts and salt water, means maintenance and challenges therein. And so Panthalassa looked at this and they said, let's do neither of those. And so the node just is like it's a floating buoy, so it floats out in the ocean. And intuitively, we have, as we're talking now, we have cargo ships plying the seas right now. We have had them for decades. They're steel structures that do just fine when a big storm happens. And the idea of building a steel structure that floats that can manage a storm is like a solved problem. So that's number 1. And then number 2, in terms of moving parts, it has one thing, which is a turbine. So water runs through a turbine, and that's the only moving part in the system. We know how to make turbines. Dams have been built for a very long time. So water turbines is like a solved technology. So those are the 2 big sort of unlocks there. And then honestly, this is you couldn't have built this 10 years ago because you needed Starlink. So with Starlink, I can now, the problem is these things are best offshore where the waves are big. If you zoom out and look at the Earth, there's this band of the Earth right between Antarctica and South America and Australia where you have just a massive amount of energy.
Okay.
Huge waves, lots of wind, median wave height of 12 feet, 10 terawatts or more of, we think, harnessable energy, in that zone. Untapped resource on Earth. If you can put these there where the energy is, then your energy utilization goes way up. Your compute's on board, you're using Starlink, you're also using the ocean as a giant heat sink. So your cooling costs go way down. And again, last thing I'd say here is in data centers, I built a lot of data centers. The original ones were air cooled. So we brought fresh air in and fresh air out. That wouldn't work super well in this environment. Most systems now, GPU systems, are water cooled, liquid cooled. And so that adapts really well here because you have the chips being cooled to a liquid in a liquid and then like in a box that's immersed in seawater that does radiates the heat out. And so again, very few moving parts inside the compute envelope as well. And so just like, it's kind of like it wouldn't have worked 10 years ago, but it really does have a shot now because of all of those things. And then these things are built to be built quickly. So you can build them in a factory line in a very fast order because you're reusing the same technology we use to build wind turbine and oil and gas bases. They're basically just big, cylinders of steel. And so in some ways, it's kind of boring technology. It just has like found its moment.
Yeah. There is, of course, an added challenge right now, and frankly, a pure unforced error on the US's part in meeting our growing energy needs in clean ways right now, which is that, at least with some forms of clean power, the Trump administration has, taken steps to cancel projects. We've seen some big wind projects, a big solar project in my state, Nevada. They've been clawing back funding for projects they had agreed to support. And I'm just curious, how are those sorts of actions sort of affecting the overall business and development climate, our ability to trust the government as a good faith partner on projects, and whether these sorts of dynamics are slowing things up, whatever other progress is happening at the technical level right now?
Yeah. Well, I would say that everything I'm talking about requires years to develop. And I think things that take years to develop do better in times of stability. So I need to know whatever the rules are, subsidies, no subsidies, whatever, just like decide it and keep it. So I do, if I could ask for one thing, it would be, a 5-year plan for the United States where the rules don't change very much. And then I think we can do a lot of creative things under a lot of different sort of consistent rule sets. So I think the change in thrash in supply chains and permitting is sort of bad for everyone. It's bad for the country. So I think we should stop that. And I think there's a bunch of cases where federal leases got pulled on things. I think I disagree with those. I think those are bad. Those are actually a minority of the, like if you look at solar deployments, 90+% of it's on private land. So, and I think Texas is the most interesting, Texas is the most unregulated energy market out there. And Texas is like racing to beat California in battery and solar installs. And it's not because they care about, it's because they're good business. Like it's cheap. It's the thing that works. And the reason why Texas had a really good 25 in terms of summer and no emergencies, we think, is because of batteries and solar. And so I think that like we have to figure out how to let the free markets run on this one, because when you let the free markets run and give consistent rules, I think we're already at a point where batteries plus solar kind of wins in a lot of examples, and we'd see it sort of massively deployed. So that's what I'd hope for in that, and we'll see what happens.
Okay. When we were speaking to prepare for this call, you had mentioned that there had been a bit of an evolution in your own thinking about our ability to confront some of the growing challenges, some of the differing timelines between supply and demand, but then that you kind of came to realize there were a handful of pathways that could get us to terawatt hours of clean power, or terawatts of clean power. Can you kind of sketch out? I think you mentioned maybe wave and fusion. What are some of the others that you see being able to really just ramp up rapidly, and then how does that abundant clean power change how we're thinking about some of these challenges today?
Yeah, I mean, I think the good news about all of this is like the solution space is innumerable. Like you can count it. It's not infinite. It's not even actually that big a number. And so you can just like walk through what are all the different ways in which we can produce power. Obviously, there's traditional fossil fuels, coal, oil, gas. And then, as I said, fusion, I think I'm super bullish about this about a decade out from now. It is sort of the end game for us in terms of power delivered anywhere with no inputs and outputs. Highest energy density reaction we know of in the universe. Like the U.S. should be investing tens of billions of dollars to be ahead on this, because I think the country that has this is going to be in a great position. I think, fission is under deployed. If you plot, I have a chart that plots energy systems in like how fast they got to 1 to 10 I think it's 10 terawatts of energy, like they're first, and you align the timeframes. Solar is the fastest form of energy generation we've ever deployed as humanity. Fission's number 2, and the chart is like a very sharp slope until the 1970s, when it just like falls off a cliff. So like humanity in recent history has been able to add a lot of fission power very quickly. It's not a technological problem. It's a regulatory, social license, environmental safety challenge. But I think that there are some pathways in there that are really exciting that are sort of new technologies that help solve those problems.
Hmm.
I think geothermal, is literally like we dig down and we get hot rocks. Like it's kind of magic. And we're seeing oil and gas technology being deployed in companies like Fervo. We're
Hmm.
seeing AI being deployed in companies like Zanskar to like make traditional geo work. And we've got some really great ideas from companies like Quaise. We're like, hey, let's like drill differently, and then you can drill 3 miles down, and 7 wells would power all of San Francisco. And so I think that's super exciting. Wind, obviously, solar, and then wave power. So we've got like and I didn't even talk about biomass. So like you've got like a number of different shots on goal here. And
Hmm.
I think some people in the climate space try to like figure out which is, and I'm kind of just like do them all. Like we just
Yeah.
need to maximally invest in all of these things and like see what happens.
Right. And then getting into the sort of second part that I brought up, when we were talking yesterday, you were making some points about if suddenly we go from sort of a limited supply of energy to abundant supply of energy, it starts to change the equations on how we deploy certain resources, what kind of AI data centers we decide to develop, how much we do desalination. Can you talk a little bit
Yeah.
about your thinking on that stuff as
This
well?
is I don't think people understand how much cheap energy is an upstream problem, meaning if you make energy really cheap and abundant, how many other problems immediately get solved for you because of that. And I'll just give a couple of examples.
Sure.
We're having trouble in the US right now. People are concerned about data center water usage.
Mhm.
Why do data centers use water? Like the computers don't need it. Like they're not powered by water. It's typically in the cooling system, and
Right.
evaporative cooling is a very efficient way. So if you're managing energy use, you can basically trade water use for energy use. So let's say I showed up and I said, you know what, I can build you a 5 gigawatt fusion plant in 100 acres,
Mhm.
and it's unlimited clean energy. You'd be like, great, I'm going to build an inefficient cooling system, dry cooling,
Mhm.
that uses very little water. And so you solve the sort of water problem, and you solve the like people are nervous about having it in their backyard because there's no waste, there's no safety issues, all the rest of it. So like that all of a sudden makes that problem go away.
Mhm.
And then if you think about providing clean water for people, desalination is a proven technology. Its
Yeah.
primary cost is energy.
Right.
If I make energy way cheaper, we can desalinate in a lot more places. Sustainable aviation fuel. We know how to turn electrons and CO2 into fuel. It's
Mhm.
just like 4 times more expensive than drilling it and refining it. And so and most of that is energy. And so if both in the carbon capture and in the actual production, again, if you make energy near free, you just can decide how much of that do I want to use to make basically carbon neutral jet fuel. So I can fly in planes across oceans.
Yeah.
Like and I can just keep going. There's just so many problems where you're like, oh, if the energy was a third the price, we would do it this way because this way is better, easier, cheaper. And so that's like every time I look through a lot of these things, I come back to like, we just need a whole heck of a lot more energy and it to be a lot cheaper. And that solves a number of problems for humanity.
I can based on some of the trends that you're talking about here, the technological development, the cuts in prices we've seen just in the last decade. Um, I can basically get my mind around how we're gonna clean up our energy systems, how we're gonna clean up our transportation systems. Increasingly, I'm even sort of seeing the pathways to some of the major categories of heavy industry. An area that I always have my a harder time sort of seeing a clear pathway to is food, which is a huge contributor to overall emissions, and in particular beef, because uh, I see beef as being a big challenge, a vexing challenge, because cattle are just a huge emitter of methane, which is a very potent natural gas, and because steak and hamburgers taste really good, people don't want to give it up. Um, and so it's hard to solve at a policy level. It's hard to solve at a lifestyle change level or a technological level. We've seen some alternative protein burgers and so forth that have, at least are gaining some traction. But you've got a company in your portfolio that's working on that problem. Can you talk a little bit about Pasture Biosciences and why you see that as a potentially promising approach to that particular challenge?
Yeah, I mean, so Pasture Biosciences is building a novel vaccine for cattle that can help reduce their methane emissions. And
Hmm.
so, and this is a technique that we've already used already. There's a product on the market that's a food additive that sort of has a similar effect, and it's an elegant application of advances in DNA sequencing and modern vaccine development, to solve a really tough problem. Cattle get about 7 vaccines typically in the United States already, so it's a process people already understand and know. And so adding an eighth is not really that big a deal. And so it's a really scalable, sort of cheap way to attack the problem. It doesn't totally solve it. It doesn't eliminate the problem, but it does, dramatically reduce that. Has a bunch of, co-benefits. The company's still a little bit in stealth, so I can't talk about all of them. But I would say that the thing that I'm excited about this company is the business case is obvious for the rancher. To them, they get an economic benefit that's very clear, that has nothing to do with methane or carbon emissions, that would make them interested in this, irregardless of that. And so it's one of these like, oh, it has a co-benefit that's good for the rancher, but it also happens to be good for the planet. And so
Right.
solutions like that, I think, can get very rapid adoption.
Yeah, I mean, we've been writing about and reading about the various seaweed supplements or supplements kind of based on the active compounds in seaweed that also have a similar effect in cattle. One of the less appreciated challenges I think that emerges there is that if they're dairy cattle and are in a barn all day, you can feed them whatever you want. But a lot of these grazing cattle, farmers won't interact with them that regularly. So I'm guessing that vaccinations is one way around that particular problem. And so is that right? And also, is this like a once a lifetime or once every couple years, or is that
Yeah, so James, you nailed it. And this is, I think, the important. I'll just give away my secret and what we look for in investments. Is I spent a bunch of time looking at those food additive companies, and I came to the same conclusion you just said. Is like it only works when they're in the feedlot, doesn't work there, and it's a daily intervention. You have to give them to it all the time. So you're asking a lot for them to change. And I like things that are easy and more persistent. So we kind of said, vaccines are something they already get. You would need probably 3 in the lifetime of most cattle, which is like consistent. There's a normal vaccination schedule that just like slots into that normal vaccination schedule. So a daily intervention that doesn't even work when they're in the field versus a 3 times in their life that works when they're in the field, like, and it's very cheap to make. Like, so the economics are just like so unbelievable. So it's just like structurally a better solution. It's back to like Panthalassa, like, yeah, being untethered and having no moving parts is like just a fundamental advantage to that approach. And those, I think these are the sorts of solutions. When we think about solar and batteries, the idea of solar is because it's manufactured in a factory, we've done so many optimizations to the total material input of those. There's a joke that if you took solar panels from 10 years ago and recycled them, you could make 10 solar panels out of the rare materials from one solar panel from that time period, because we've gotten so good at making them have higher output with fewer expensive things in them. And it's just this process that we're churning over and over again. And so I think there's like these solutions we have on deck that if we choose the right ones, they give us the optimization points to be able to do this. In this case, like, okay, great, we can like change the formulation of the vaccine and just like it's just like a trivial change. It's fast to
Mhm.
manufacture, easy to deploy, and you can improve it every year. It's a platform for optimization in a way that many technologies are not. I build a giant thing and then it is what it is. So like, I just, I, I'm excited about these things, James. Like, I'm excited when the pitch is like, I want to make you some money here. Like, great, I'm in. Like, oh,
Yeah.
by the way, we're doing some good stuff for the planet. Like that. I think there's a lot more of those than people realize.
Yeah. Another area where you've been doing work for a while, both on I think originally on the philanthropic side, but you've also invested at least 1 or 2 companies on the venture side, is carbon removal. You've been doing stuff on to try to drive forward the research and science for ocean alkalinity enhancement in particular. There is a sort of growing view right now, I think, that in that space that we are past the peak of inflated expectations, to adopt the Gartner language. Where do you think uh, it goes from here, and what do you think it's going to take to really get this sector scaling up from here and getting us to the megaton, gigaton scale that the models suggest we may need in the coming decades to be able to really check climate change?
Yeah, I mean, I think there's a simple answer here, James, which is cost.
Mhm.
Like, carbon removal is an invisible thing. You don't see it, you don't notice it when I do it.
Yeah.
We do have a willingness to pay. There are lots of laws on the books in Europe, in the United States, that have various prices from $85 to many hundreds of dollars.
Mhm.
And so if you can deliver a solution that can actually remove verifiably carbon at low costs and high scalability, millions of tons, there is a market for you. I think the challenge we have is this is a hard problem. It's a very small inert gas in the atmosphere. And again, it takes a lot of energy. Most solutions require a lot of energy to
Mhm.
separate that carbon and distill it down into something, and then you got to sequester it. And so if you look at, the sort of approaches we've taken, we've done two investments. One is in biochar, one is enhanced rock weathering. And then on the philanthropic side, I've been doing a lot of work to support ocean alkalinity enhancement. These are all effectively supercharging natural solutions that already work. We know that, like, when rain weathers rocks, you can see it in the geologic record. You can see the emergence of the Himalayas in the geologic record with a drawdown of CO2 in the atmosphere because a lot more rock got exposed. It gets weathered. It alkalizes the water. It creates a chemical reaction that captures carbon. It's like we know this works. So it's just a question of, can you make it work at human timescale rather than geological timescale and at low cost? And I think because these things are natural, they have a natural scalability to them that makes them possible to do at low cost because the energy inputs are very small. So I think, this is again the key with anyone looking at solutions here is just the numbers don't lie. You got to be ruthless with how much energy is involved in this thing, how much steel, how much mass, and then okay, how much is it going to cost, and then who's going to pay for it and why.
Yeah.
And unfortunately, a lot of stuff flunks that test. But there are things that don't or do now, but could pass it, in 2 years or 4 years. And that's where I get excited, which is the fundamentals say, because you're doing this at subscale, it's not cheap enough. But at scale, this will be plenty cheap because the inputs all make sense. And
Right.
so, I think it's a tough time for carbon removal now. I think if you're doing $300, $400, $500 a ton carbon removal, I think you have a tough business. But I think if you have a remit to get under $150 a ton at massive scale, I think there will be a market for you. And all the math says we need this.
Yeah.
We need it no matter what.
Yeah. Do you think it is gonna take additional government support, more nations, more mandates, more cap and trade, or just whatever levers governments can pull to really get this going? Only because we're not producing a product that is of particular value to anyone. We're taking carbon out of the air and sticking it underground. So do you think governments are to get to millions and billions of tons, governments are gonna have to play a bigger role in that particular sector?
I mean, I think it's very simple. It's an unpriced externality. If
Mhm.
I burn gasoline in my engine and emit emissions in the atmosphere, I pay $0 for that. And you can decide that that's totally fine, or you decide that that has an impact on other people, and thus I must pay for it in some way, or somebody needs to pay for it. And so I do think that there is a need for that. I also find like governments, whether that's true or not, there's a long history of, particularly in the United States, if you look at the chips industry, where the United States is the leader in chip IP. This wasn't totally an accident. There was a long government collaboration. Solar panels came out of research from the U.S. government. The internet. I mean, I can just name technologies that we live our lives on that started with some sort of government-private collaboration, and then at some point it became commercially viable all on its own. You don't need the governments there anymore.
Mhm.
And so, I think we have a number, so for example, I would say fusion, I would put in this category. It's not yet commercially viable. The US government should be pouring a lot of money into this. And at some point we'll make it work. We have big companies off making money doing it. Great. We don't need to invest any more federal dollars. I think carbon removal right now, I think there's a chance to drive down the cost curves on a lot of these things. And so I think that government participating, even just in that, let's just over the next 5 years help make sure we get down the cost curves. And then as a society, we can figure out whether it's voluntary or whether there are regulations, whatever it may be, that allow us to pay for this. So, and I think in many of these cases, it's billions or tens of billions of dollars. It's not trillions or hundreds of billions. And I think the net economic value will pay itself back 1,000 to 1. So, I'm again, all of the above, government support, get these things going, private enterprise, get this thing commercial, and then we're off and running.
Yeah. I mean, the cost savings from reduced damages and suffering from climate change. You would think would more than pay for it. But unfortunately, we are at time. I feel like we were just getting started here, but this has been a great conversation. Always enjoy chatting with you. Always enjoy hearing how you're thinking about these issues. But yeah, with that, I think we're going to wrap. And thanks SOSV for having us today. It was great.
Yeah. Thank you, James. Thank you, SOSV. It's always a pleasure to chat.
Thanks, Shrep and James. It's really encouraging to hear from a great technical mind like Mike Schrepfer about all the possibilities he sees in climate tech. At SOSV, we feel likewise. This category is only just getting started. For our next introduction, I'm going to bring on Dr. Wesley Dang again. He introduced a session yesterday, but in case you missed it, here's a quick intro. Wes is our Chief Science Officer in San Francisco. He leads deal sourcing and diligence, as well as working with startups to poke holes in their science and bomb-proof their business models. He landed his PhD in neuroscience at the Scripps Research Institute. Over to you, Wes.
Thanks, Sean. Happy to be back and introduce yet another VII, aka Very Important Investor, Galvanize's John Delaney. This one is entitled Plugging the Gap, Galvanize's $1.3 billion credit and capital solutions fund. Tom Steyer's Galvanize launched a new $1.3 billion climate fund in September to bankroll a credit and capital solutions strategy, which aims to, quote, close that gap and meet a growing need for flexible non-bank capital across power, manufacturing, efficiency, and resilience. Galvanize believes there will be a $5.6 trillion, yes, trillion, invested in infrastructure renewables, transmission, manufacturing, electrification over the next 5 years, and as a result, there will be a big demand for flexible private smart credit to sit between bank lending and equity raises. Spelling it all out for us is John Delaney, who heads up the new fund and is a former member of Congress and a founder of several large-scale specialty lending companies. Our moderator is Kia Kokolicheva, senior editor at PitchBook. Over to you, Kia.
John, thank you so much for being here today. I'm so excited about our conversation.
Thanks for having me, Kia.
I have to ask you, why did you decide to take this job right now, especially given how unpopular politically climate change and fighting it has become?
Well, so part of it is personal, part of it is professional. On the personal side, Tom Steyer and Katie Hall, who are the co-founders of Galvanize, I have known Tom for over 30 years and Katie for over 20 years. Tom's prior firm, Farallon Capital Management, was the largest shareholder in my two prior companies. I started my first company in 93, took it public in 96, and I ran it as a public company until I sold it in 2000. And then in 2000, I started my second company, took that public in 2003 and ran that to 2012. And Farallon was the largest shareholder in both those companies. And Katie Hall's prior firm, Hall Capital Management, advised clients who were big shareholders of my second company. So I've had a business and personal and friendship with Tom and Katie for a very long time. So that was a big part of it. Also, I just, again, my background, I started two direct lending business, and then I served in Congress in what many of my friends describe as a midlife crisis, I will say. But it was actually a privilege of a lifetime. But it was while I was in Congress, I became very much focused on climate and energy transition and the role of the private sector has to play in driving and building the low carbon future that I certainly want. So post public service, I decided to dedicate my career to taking my skills, building large scale lending businesses. And both of my companies, again, were publicly traded, large scale direct lending businesses, and combine that with my passion and policy interest in climate and energy transition. And so when Tom and Katie were building the Galvanize platform and they asked me to partner with them and chair and help build the credit strategy, it aligned both with my desire to work with people I really like and know, but also with my view that this is an incredibly not only important, but potentially exciting and very rewarding business opportunity. So it's kind of both the professional and the personal.
Wow. I wish more people having midlife crises went into public service and
Right. Yeah, there are.
like yourself.
I joke. I use that term because I guess how old was I when that happened? I was 2012, so I was in my late 40s. there's people have lots of options for midlife crises. This is a good one, I suppose.
Yeah, I mean, it's probably more climate friendly than buying a bunch of Ferraris or
Yeah,
whatever people
exactly,
do.
exactly.
Um,
But it was an amazing privilege. It's an extraordinary country, and the privilege to serve it is very unique.
well, I would be remiss if I didn't ask you about the current AI boom and all of the energy demand that it's asking from the world and
Right.
the planet. Um, what do you make of that? Especially with all the data centers cropping up seemingly everywhere, but
Yeah.
probably in your neck of the woods, right across in
Yeah.
Virginia.
Yeah, in Virginia, it's interesting because, obviously the ad demand is extraordinary, and the amount of energy, the amount of energy needed to fuel it is equally extraordinary. As I think Sam Altman said the other day, electrons equal intelligence. In other words, creating a direct linkage between energy and electrification and our ability to advance artificial intelligence and the collective capabilities of the world. I'm generally on the side of an optimist about technological innovation. I think across time, by any measure, innovation, whatever kind of innovation, and more recently technological innovation, has made the world better, safer, and more prosperous. That doesn't mean it makes every human being better, safer, and more prosperous at every moment in time. It doesn't. But in general, it improves the condition of humankind. So I'm very pro innovation. I'm very pro AI and what it can do. I tend to be an optimist about it. I'm not a pessimist about it. Not because I'm smarter than anyone else, but I just think that the history of innovation has led us to conclude that the facts favor the optimist. And the demand curve that is projected by it is extraordinary. And again, I'm not smart enough to question it. You know, I go off the projections everyone goes off of, and the capacity we're going to need and the energy we're going to need to fuel it is breathtaking. Now, is there a chance that innovation also changes that energy curve in some ways, or changes the demand curve? Yeah, there's absolutely a chance of that because one of the problems we have right now is we need too many data centers, and we need a lot of energy to fuel them. And so it would be surprising to me if innovation actually, without reducing the growth of AI, also reduces the demand for data centers capacity with new and better chips, et cetera, and energy needs with also similar innovation. But, I'm pretty bullish on it all.
Do you really think that innovation in energy would reduce the demand for energy? Because I feel like historically making things more efficient has just led to wanting more of it
Yeah,
because we
no, I
have
think
it more efficiently.
no, I think innovation in manufacturing and in chips and processing power, et cetera, that could make energy demand. I don't think energy demand is going down, but I do think similar to, and because you think about what happened in the world kind of for the last several decades is energy growth grew at less than global economic growth. So in other words, global energy demand lagged economic growth. And people say, well, how is that possible? Because there's a direct correlation between energy needs and economic growth.
Mhm.
And the reason that happened was because we actually did become more efficient with how we used energy. So even as the world was growing, we were becoming more and more efficient with how we used energy. So which is
Mhm.
why energy demand lagged economic growth. Right now, energy demand is exceeding economic growth, right? Because all of the AI and technological investments that are being made are actually I mean, if you think about OpenAI's revenues compared to the amount of money they're spending. Do you see what I mean? So it's
Yeah.
a little bit going the other way. But would it surprise me over time if technological innovation and growth becomes more energy efficient in terms of how it uses energy? No, that wouldn't surprise me.
Do you think that the energy industry, the data center industry, the AI industry, do you think they market forces are going to naturally lead them to not only more efficient, energy production and all that, but also just more climate friendly ways to provide that? Or do you think that government needs to step in and steer that in the right direction?
Well, I think what'll lead to more climate friendly ways is not because they want more climate friendly ways. They do. Let's face it. The big technology companies for a while announced that they wanted to have their energy demand satisfied with clean energy. And then the growth of their energy demand just outpaced their ability to keep those kind of commitments. And they just said, we need the energy, period. But I do think where we're going to get the marginal increase in energy is from renewables or other sources of clean energy, nuclear, et cetera. And so I think without them specifically prescribing that the energy is going to be low carbon, let's put it that way, I think a big part of the demand will be satisfied with it because it is the fastest and cheapest source of incremental energy.
So you think the market forces will win out mostly because renewables and clean energy are going to just be better?
Yeah, I think the market forces, if you look at the signals the market is saying, the signals the market is saying is we need more energy, right? That's the clear and unmistakable signal.
Right.
And, for a long time, this country had a debate about where our energy should come from. There was the fossil fuel camp, which I'm not in, and then there was a renewable camp. And then there were some people saying we need the all of the above. I think what the market is saying right now is all of the above, right? The market just wants energy. Now, if you look at where we can get exponential energy growth, it's actually from renewables because they are cheaper and faster. Putting aside the fact that they're cleaner, the market's not going to make decisions based on that. They're going to make decisions based on speed to market and cost.
Right.
So I do think the market is not saying it wants clean energy. The market
Right.
is saying it wants as much energy as possible. And where can it get it cheaper and faster? It's from clean energy.
hmm Do you think government should have a role in that?
Absolutely. So I was a big supporter of the Inflation Reduction Act. When I had the privilege of serving in the Congress of the United States, I every year introduced a very large piece of legislation around carbon pricing.
Mhm.
With my view that we subsidize fossil fuels, and we should price for the cost of them, and we could do lots of things with the money, including just giving it back to the American people in a dividend. So the kind of the carbon pricing and dividend structure. So I'm a strong believer in public policy that accelerates this transition. Now,
Mhm.
they also am a very strong believer that you can't solve climate change on the back of working families. So
Mhm.
you cannot create a government policy framework that, while it may accelerate energy transition, increases costs to hardworking Americans,
Mhm.
right? So the framework for public policy has to be acceleration of, from the continuum, in, research and development. One of the most successful research and development programs in the federal government, even more successful than NIH, which is the marvel of the world, is actually the basic research that was done in the Department of Energy. It's been extraordinarily successful if you look at the ROI. So,
Mhm.
so I'm in favor of public policy that encourages basic research. I'm in favor of public policy that creates incentives for the deployment of renewable energy assets. I'm in favor of public policy that brings back a safe, reliable nuclear energy industry in the United States. And I'm in favor of public policy that accelerates permitting reform so we can actually build the grid and the energy infrastructure, the clean energy infrastructure that we need. And I'm also in favor of public policy that takes a look at that whole continuum and figures out the right way to do it so it doesn't increase cost to consumers.
Mhm. So I'm going to ask about the Inflation Reduction Act in a second, but since you have been both in Congress as a legislator and you've also been in the private sector, how do you, now that you've done both, how do you think about the best ways for both sides to work together? Like, what are their weaknesses and strengths? How should they take on this problem?
Well, the each side has a weakness, and the
hmm
weakness for the private sector is short-termism, right? There's an enormous amount of incentives in the private sector for short-term results.
hmm
So a lot of advocacy work slash lobbying work that is done in Washington is done for short-term gains for corporations, and a lot of these problems are long-term problems.
Mhm.
And the public sector has the similar problem, which is they have elections,
Right.
and elections get in the way of good long-term planning because, incentives matter and politicians are incentivized to get reelected. So, which is the essence of the U.S. government is the most extraordinary thing ever created at responding to a crisis. If you look after various crises across our history, how the U.S. government responded to the crisis, the resources it was able to marshal, the programs and things it was able to launch were extraordinary. What the U.S. government is not particularly good at is responding to long-term to responding to what I'll call slow-moving crises. Crises that don't appear to present an immediate sense of urgency, but are crises nonetheless. The best example of that is the fiscal condition of the country. It's clearly a crisis, and everyone knows it's a crisis, and everyone talks about it being a crisis, but no one does anything about it because it's not actually causing short-term events that they have to respond to. And so the ultimate problem with the public and private sector working together is they've got to align a little bit more on a long-term plan. And, look, there's no question when the private sector, the public sector, and the nonprofit sector work well together, you get the best economic outcomes. You travel around the
Right.
United States, you travel around the world, you see situations where business, government, and nonprofits are working together, you get much better economic outcomes. And that's what we need more of in the federal government. But it's got to
So,
have the right time frame and lens because a lot of these problems, they're big and they take time, and policy has to play out across time.
so if both sides are afflicted by short-termism,
Yeah.
even, slightly different time frames, but still short term, who's taking care of the long term?
Well, that's the ultimate problem. If you were to criticize the United States of America, which which I do believe, as someone who had the privilege of serving it, is the greatest country in the world. If you criticize it, you'd say we don't have a strategy. Like,
Okay.
we don't have a strategy. We don't have a strategy for our debt crisis, and we certainly don't have in my judgment, the right energy strategy. And that's ultimately the American people are going to have to. The good thing about this country is we can change it all by
Right.
the people we elect.
Yeah. Are you saying that the voters need to be thinking about the long term?
Do. Yeah, do. But we digress a little bit here.
Yeah. I mean, good luck with that platform.
Yeah. No, that's the problem. As I
um,
said, it wasn't designed for that, right?
right. So back to the IRA. Have you been surprised at this current administration like hostility towards
Yes.
Inflation Reduction Act?
Yeah, what has shocked me is that I believe because I founded something in Congress called the Bipartisan Climate Solutions Caucus, which was
Mm.
actually a group of bipartisan lawmakers, Democrats and Republicans, who were working together on smart policy to drive energy transition and strengthen the renewable energy sector and deal with climate resiliency, et cetera. And there was, you know, even people like Marco Rubio were talking openly about, the climate issues in Florida, et cetera, et cetera. But this new administration has really had a profound hostility towards, solar and wind.
Mhm.
Not so much nuclear, right? I think they've been constructive on nuclear. And I think some of the stuff they've done on rare earth, et cetera, has been really smart, actually, to be honest with you. But, again, I would have expected this administration to be much more of an all of the above energy strategy.
Mhm.
It doesn't surprise me that they're supportive of the fossil fuel industry. That's not a surprise to me. But what is surprising to me is the hostility towards renewables because we're if you just look at the facts, and they have some very knowledgeable and skilled people in the administration who understand energy. And these people look at the facts and they know what the demand is. They know what China's doing. They know the economic opportunity around renewable energy. They certainly don't want to penalize fossil fuels. In some ways, I always thought of I thought the current administration would kind of be the Joe Manchin energy model because Joe Manchin's energy model was very simple, which is I'm fine supporting renewable energy. I just don't want you to hurt the fossil fuel industry because it's a big part of West Virginia. So I don't want carbon taxes. I don't want any of that stuff, but I'm happy to subsidize the energy infrastructure of the future, right? That was kind
Right.
of his philosophy. And that's what I would have expected the administration to do because they understand the energy demand. And I would have thought they would wanted to ensure that America was competitive in renewables. But the actions they took with the Inflation Reduction Act will actually obviously hurt the American competitiveness in these sectors.
hmm If there's one part of the Inflation Reduction Act that you could save or bring back, what would it be?
Would be the tax credits, the solar tax credits. I think
hmm
if you look at the residential solar industry is dead largely because of the tax credits, and that was making great progress. And there was so much optionality around residential solar. It could have been, with battery technology, it could have become, kind of a bunch of, effectively a whole series of backup power capacity for the grid. And there was a lot of innovation that I think could have happened there. And now the industry is completely sidelined. So things like that. This mass rush to like vest in your tax credits where no one quite knows the rules. I just think that's very disruptive.
hmm So back to your current job now that we've solved, all of the problems around
Or at least
energy
identified them.
policy. So you joined recently. I know Galvanize announced the new $1.3 billion credit capital solutions fund in September. Have you made any investments yet?
We just launched. I'm the chair of the strategy. I've recruited a terrific team, including the former chief investment officer of the Department of Energy Loan Program, a gentleman named Chris Creed. And the Department of Energy Loan Program in the prior administration was the largest energy transition lender in the world. So we've got a great team. Chris, former CIO of the Department of Energy Loan Program, 20 years at Goldman Sachs before that. Megan Pastrika, who was at Riverstone, a leading energy private equity firm where she did credit. Suresh Vasan, who worked with Chris at the Department of Energy Loan Program, and Anatoly Bushlu, who was a partner was an investor from Farallon, where he worked with Tom Stars. We got a great team. And we just closed our first capital raise, if you will, or part of
Mhm.
it. And so now we've got an active pipeline and a bunch of deals that we're trying to close before the end of the year.
Since you mentioned solar earlier, but we still have a little bit of the tax credits. Is that an area
Yeah,
in the US that
absolutely.
you guys are going to be focused on?
I mean, we have a macro view that renewable energy assets will be more valuable than people think. And the
Mhm.
reason for that is, sadly, there'll be a somewhat of a shrinkage of supply while the tax credits expire and before energy prices go up to cause the next wave of development, and that existing assets will be very valuable, and that optimizing existing assets and owning existing assets is a good strategy. So, we obviously have to invest against the backdrop of what's happening with the tax credits and the implications there. But when we get certainty around that, we're very bullish on the asset class.
Do you have sort of a plan in terms of, first phase of prioritization and then maybe looking into other areas or other regions?
I mean, our strategy is very unique, right? So it's called a capital solution strategy, which means it's a combination of loans, but highly bespoke structured loans, both
Mhm,
senior and subordinate, in other words, mezzanine loans, and also preferred stock. So not common equity, but equity that's senior to the common. So it's kind of the middle of the capital structure. It's not bank loans and it's not common equity. It's everything in between. And we're very flexible with our mandate, meaning we can move around within that kind of middle section and we can
mhm,
structure unique solutions. And so we kind of lead with our flexibility and
mhm,
our ability to solve problems. We don't lead as much like our colleagues in the venture and growth business who are making, venture capital investing in the next wave of promising companies. They're much more thesis led. In other words, they have
mhm,
macro views about things that are going to be uh, much more valuable in the future, and they invest against those themes. We tend to be more situational, right?
mhm,
So a company comes to us and they're like, this is what we're doing, but we've got this capital need that's not well met by bank debt, and we don't want to raise more equity because it's too expensive. Can you finance a solution? So we tend to spend, obviously we focus on energy transition and decarbonization. That's all we do. But we can move around from sectors in a very nimble way. And our
Right.
financings are out for 2, 3, 4 years. We're not the long-term owners of the business. We're helping them
Mhm.
finance typically an opportunity that they think will create a lot of value, or maybe they got ahead of themselves and they didn't line up financing and their business is doing too well and they've got a liquidity squeeze. Those are the kind of things that we play in, which we think is the most attractive risk-adjusted returns in the sector because we have very good downside protection and we earn equity-like returns, but we're not involved in the situation for more than 2 or 3 years typically. So we tend to
Mhm.
be less thesis-driven. And we obviously have some underwriting themes. Like I said, solar assets we think will be more valuable than people think.
Mhm.
We have some beliefs, but we tend to move around in a nimble, flexible, opportunistic way, solving problems for our borrowers, helping them create value, and creating very attractive return investment opportunities for ourselves.
So do you expect you'll be mostly working in with technologies that are, well
Yes.
established, especially
Yes.
economically?
We don't take technology risk and we don't take
Okay.
public policy risk.
Okay.
Right? We wanna provide capital where we have strong downside protection, help
Mhm.
people solve a problem, and then, make an equity-like return, but we're not in there for 10 years, we're in there for 2 or 3 years. So even though it's an equity-like return, it's less money because our investment is not out for as long. So
Gotcha.
we call it growth credit or hybrid capital, because most of our situations are growing businesses that got a little ahead of themselves or they're a stable platform and they're seeing opportunities, unfortunately, based on the distress in the situation. And they need a flexible capital solution to either solve the problem, handle the growth, or allow them to execute on the opportunity quickly.
You keep saying companies that got ahead of themselves. That makes me nervous.
No, it's listen, I've been around financing. I mean, in my business career, I've financed 5,000 companies. And small to middle market companies that are growing fast, they're not like big companies.
Mhm.
Like Walmart will spend half the year in their capital forecasting and planning. They have
Yeah.
everything down. They have armies of people who project their cash flow and liquidity needs, right? They've got it all down. If you're an entrepreneurial company and your employees have gone from 100 to 300 in 2 years, and suddenly one of your competitors is under distress and you can buy them, you haven't lined up the financing to do that. You're like, "Wow, I've got this good opportunity. Now I've got to finance it." So it's the getting ahead of themselves part is typically for all good reasons.
Okay. Okay.
I mean, because
Good to know.
if you've got a 200 person company and it's growing fast, you probably don't have 50 people doing financial planning. You have a
Right.
CFO who's trying to build up their team. You know what I mean? Like, so companies kind of get ahead of themselves. And they need
Gotcha.
financing. That's actually
Well,
what we're looking for, because that's like a good reason to need financing.
totally hear you. So my last question to you, give me your top 2026 climate prediction.
Well, I think people are gonna wake up and realize that the, changes to the Inflation Reduction Act were really hurt US energy competitiveness, and I think that's gonna become the conventional wisdom.
Well, I guess we'll have to check back in a year. John,
Yes.
thank you so much for the
No,
conversation
thanks for
today. It was
the
great.
good and intelligent questions, and sorry to take us down some political digression there.
No worries. Thank you, John.
Thanks, John and Kia. I think the new Galvanized Fund is a sign of great things for the climate sector, especially around energy. It's smart for investors to design financing about the very specific needs of emerging companies, not just the standard stages of venture development, the mindset of private equity, or the world of bank lending. There are huge opportunities out there. For our next session, let's bring on Ben Joff, who is a partner at SOSV, producer of our wonderful VC founder matchup events, and co-producer with Ned Desmond of this summit. Over to you, Ben.
Thanks so much, Sean. I'm delighted to introduce the next session, which features David Keith, who is one of the world's leading authorities on solar geoengineering as well as carbon removal. This session is entitled Carbon Capture and the Future of Climate Tech. David Keith is a unique figure in climate tech. The University of Chicago professor is a leading researcher in the field of solar geoengineering and is also a climate startup veteran who founded Carbon Engineering, a CO2 capture company acquired by Occidental Petroleum, Oxy, in 2023 for over $1 billion. This session will address technology and business of carbon removal, a sector that has absorbed $3.6 billion in investment in the past 5 years, and that the IPCC has called essential to meet mid-century net zero goals. Our moderator is the amazing Kat Clifford, who is an independent climate and energy journalist and formerly the senior science and economics correspondent at Cypher News. Over to you, Kat.
Thanks, SOSV. I'm really excited to be here today. I'm with David Keith, professor of geophysical science at the University of Chicago and the founding faculty director of its Climate Systems Engineering Initiative. We are here today to talk about carbon capture technologies and the role they currently play and the role that they could play in the future. Very relevant to that conversation, it's important that I mention that in 2009, David founded a carbon capture technology company, Carbon Engineering, which the oil and gas company Occidental bought for $1.1 billion in 2023. David, thanks for being here with me.
Thanks a lot. Excited to be here.
So just as a starting point, let's sort of set the table. The most recent IPCC report, which is the Intergovernmental Panel on Climate Change, a global body of scientists who put together an assessment report, they said in their most recent sixth assessment report that it will be unavoidable to deploy carbon dioxide removal for particularly hard to abate sectors. So it's just helpful to have that context of where sort of the global conversation is. Specifically, they said in order to reach net zero CO2 or net zero greenhouse gas emissions will require deep and rapid reductions in gross emissions and the deployment of CDR, carbon dioxide removal, to fill everyone in on the jargon, to counterbalance hard to abate residual emissions. And the examples they gave were agriculture, aviation, shipping, industrial processes, and they said that's unavoidable, and that was with high confidence. So helpful context there. And also relevant for this conversation, in the first half of 2025, venture capital firms put almost $5 billion into carbon capture technologies as of 2020. $4.8 billion, that's according to data from Sightline. And so far, the lion's share of that funding has gone into direct air capture, which we're going to address momentarily in case you're not clear about all the different kinds of carbon removal. So first things first, there are two broad categories of carbon removal technologies. We can sort of subdivide this sector in different ways, but I think the first categorization that's important to make is permanent and non-permanent, which is relatively obvious, but David, maybe you can just give us a brief sense of why that's relevant in this sector.
Happy to, but first I just want to comment on this IPCC stuff you started with. I think it's important to say that the claims about very rapid deployment or the necessity of rapid deployment of carbon removal are predicated on assumptions about meeting Paris 1.5 or 2 goals, and also on assumptions that no use is made of sunlight reflection, the other way the world could be cooled. So those are unavoidable under some key assumptions that may or may not be true or make political sense. And also, I think it's important to say you've said carbon capture and you mentioned carbon capture VC firms. I don't know where that data came from, but remember, carbon capture, at least as I use it, many people do, is capture from fixed sources like cement plants or whatever. And I think the topic here is carbon removal, and there's some overlap between the two in technologies, but I think they do distinct things. So jumping into carbon removal, I think the first category are basically methods that increase the amount of standing biological material, trees and soils, which means there's more carbon stored. And this is something that is in principle pretty easy to do. You do it by growing forests or changing farming practices to make more carbon in the soil. And the benefit is it's cheap, and that foresters or farmers can respond quickly to economic incentives. The challenge is it's inherently not permanent. The flow of carbon into biological systems, it also flows out, and it does that quite quickly. And so I think the way to think about this really is more than like carbon banking than carbon removal. But carbon banking is worth something. I mean, if I had a technology that had no environmental impact and no cost, and it took a ton of CO2 out of the air and it was going to release that ton 20 years later, that has some value to climate policy. And so I think we shouldn't assume that things that are not permanent are not valuable. Some of them could be quite valuable. I think there are deep challenges in accounting here that will not go away. And I think what's crucial in my view is that we don't fool ourselves by thinking that these biological methods constitute permanent carbon removal, which they don't. And maybe one other last fact that I think is important. The influence of all this biology, all the change, incredible changes in land cover in the last 150 years where forests have been cut down and regrown and so on. I think it's important probably for listeners to know a fact. Some of what I'm going to say is controversial, but this is just a plain fact. If you look at the change in the atmospheric carbon burden since 1850, and you ask what fraction of it is due to coal, gas, oil, and cement, the long-lived fossil fuel emissions, compared to all these biological changes, the effect of all these biological changes is just a few percent on the accumulated carbon emissions, accumulated atmospheric carbon. So that gives you a sense that there's just not a very big lever.
Okay. Thank you very much for putting the context about the IPCC comments. That's very helpful, and I should have made that clear. But yeah, no, that is. I'm glad you mentioned that, and it's good to talk. I like how you talk about this sort of not the biologic or not permanent methods as carbon banking. That's a helpful framework for that makes sense to me. So, and also, just in terms of the biologic processes, it might be helpful also to mention that there are ocean-based biologic methods, right? That's also sort of part of this non-permanent category?
Yes, that's right. And I think probably
What
not
would
a
those
very
be?
important point. So it's possible to add iron to the ocean or to add macronutrients like nitrogen fertilizer to the ocean or phosphates that would increase biological activity. But at least for some of those things, say for iron, there's a very clear kind of rob Peter to pay Paul. So if you grow more oceanic biomass in one place, that depletes those other macronutrients. And when that water upwells again, then there's less biological activity. So that also turns out to be something that looks a bit like carbon banking. It may or may not be useful. I'm a little skeptical, but there's really thoughtful people working on it. But I think it's clear that it's not permanent carbon removal.
Okay. Okay. So now let's move into the permanent carbon removal. And there's a couple of categories there. First, maybe big picture, why is permanent carbon removal relevant in this context? And then, maybe you can give us a brief overview of the sort of the two buckets under that hold, the different kinds of permanent carbon removal. So we have enhanced weathering, and then also putting carbon dioxide underground. So maybe if you can talk a bit first about why the permanence is relevant, and then these two different categories, explain to our listeners what the pros and cons and the challenges of these two categories are.
Sure. Well, the reason that permanence is relevant is if you care about kind of the really long term climate change and climate impacts extending out hundreds and hundreds of years, the only way to, in the long run, reduce the environmental change, the environmental harm from these historic emissions of carbon dioxide, the only way to do that is to permanently remove it. There's no other way. There are ways that we could temporarily reduce risks by adaptation or by sunlight reflection. But if you want to, in the long term, reduce the way that we've altered the Earth system, then you need to permanently remove carbon. In some sense, I think about it as building the time machine. So putting in all these emissions of coal, gas, oil, and cement, all this carbon dioxide and other greenhouse gases, that's changed the climate. And that climate change will go on a human timescale essentially forever. And that's true even if we cut emissions to zero. Emissions add to the problem, but cutting emissions to zero doesn't make the problem go away. The problem is these historical emissions, or it is one of the problems. And if one wants to deal with that, if our children or grandchildren want to deal with that, then permanent removal is the only way to deal with it in the long run. And as to the two, everybody divides these things up differently. There's buzzwords around nature-based solutions and a bunch of stuff that's very confusing. And because there's all these little companies involved, everybody's trying to spin their thing with some name or oversell. I think it's useful to think that there's only three fundamental ways we store carbon. One is the one I've already talked about, basically in what a chemist would call reduced carbon, biological material, cellulose, trees. The other one is as a stable base. So high school chemistry, carbon dioxide, when it dissolves in water, forms a weak acid. And acid plus bases make salts. And when carbon dioxide is reacted with a base, you have a stable salt, and that salt basically constitutes permanent carbon removal. That salt may be dissolved in the ocean, or it may be a stable salt on land, but in either case, that's permanent carbon removal. So that's all these things called accelerated weathering are in that category. That's the second category. And the third category is you actually take carbon dioxide as a gas and put it deep underground, which it turns out industry actually knows how to do for other purposes pretty well. And that is another way to do permanent storage. And to get that carbon dioxide, you need to either take CO2 directly out of the atmosphere by an industrial process, that direct air capture, or you can burn biofuels and capture the CO2 from that and put it underground. That's called now biomass with carbon capture and storage, or BECCS. Both of those things have the end point of making compressed CO2 stored underground, whereas the accelerated weathering or geochemical things all have the end point of carbon kind of stored as a stable salt, probably in the ocean.
Right, right. Okay. Okay, good. So we've set our table here very well. And I think the next question that's really relevant to this conversation is how much it costs to do this now. So the various methods that we've just discussed, if you can give us a sense of how much does it cost to remove carbon in these different methods, which one is sort of the most expensive and which one is the least expensive, and then maybe put that cost in some framework, because I think it can be very hard for these numbers sort of in isolation to make much sense. Like how expensive something is relative. So what are they cost, and how expensive is that really right now?
So lots of these costs are not clear. This is emerging industry, and many of these things are not being done at commercial scale. So, for example, one of the ones that I think is potentially the most important for the capacity to do large amounts of storage with relatively low environmental impact and relatively low costs is adding alkalinity to the open ocean. But nobody really knows what it costs because we haven't done the engineering analysis and science. I think it's extremely likely it's less than $1,000 a ton carbon. I think it's a ton CO2. I think it's probably possible to do it around $100 a ton CO2 or less, but we just don't know that answer. And say for direct air capture, where of course I founded that company, I'm not involved anymore, and I've got friends who founded a bunch of the other companies, so I know that pretty well, have a lot of inside information. I think as of right now, the contracts for actual direct air capture projects are sort of order $500 a ton, the actual cost of the early projects. But the big question is, what will the cost be after people have built a few million tons a year of actual capacity and begun to go down the early part of the learning curve, begun to actually shake these technologies out? And I think the honest truth is we don't know. I think it's possible that number is a few, $200 a ton carbon. I think getting it below 100 is really hard. But we just don't know these costs well because we don't. In general, there's no way to forecast costs accurately until you have a developed industry doing them. Put those costs in context. If you want to remove 1 billion tons a year, which would be sort of a 40th or so of current emissions, at $100 a ton, that's $100 billion a year, which might sound like a lot of money, but in context, the world's now spending almost $2 trillion a year on clean energy. So maybe another useful way to think about it is if in the long run, people wanted to really take a lot of carbon dioxide out of the air, 1,000 gigatons of carbon dioxide, building the time machine going backwards, that could be achieved over a century for about 1% of the world's economy if costs were about $100 a ton, very round numbers. Whether people will want to do that or not, I have no idea. I can't say, but I think it's clear it's a thing that humans could do. 1% of the economy is something we could afford. And I think there are reason to believe, because there are several different technologies here, that we can get costs of some of them to kind of that $100 a ton area.
Yeah. And and that was when the Biden administration had launched a program, the carbon negative shot, and I think that was what their goal was aiming for that $100 per ton. And so, do you have a sense of understanding that all of this is we don't know yet, that it's all still being understood, and which method is going to be the least expensive, or is it still?
And so I think there's no way to know that, and I think that's not just the right question. This isn't just about lowest cost; it's about environmental impact. All these things will have environmental impacts, and it's about a bunch of regulatory barriers and how these things connect with the energy system. I guess my view is that if you're talking about things that could be really big, meaning many gigatons a year of carbon removal, that the things that seem most plausible are different kinds of accelerated weathering, either open ocean alkalinity or enhanced rock weathering, and those are very different, and we can talk about them, or direct air capture. Um, and those are probably the things that feel to me most plausibly could scale to that kind of scale with relatively low environmental impacts and costs that could be of this order.
Okay.
But I
Okay.
think the crucial thing to say is that, first of all, important to say, there are startup companies that will claim lower costs because when you're selling and trying to raise money, people will make all sorts of stuff up. So in direct air capture, especially where I know lots, there's all these companies that claim to be able to make things at well under $100 a ton. I wish them well. I hope they're right. But I'm skeptical because I've seen lots of industrial costing. And when you're serious about actual capital amortization rates and the cost of simply building a contactor, simply building the shell that uses no energy and actually doesn't have any of the expensive equipment inside it, using the shell that moves enough air through it, that easily nets out to many tens of dollars, like $30 a ton CO2 and up. So I think this idea of getting really low is implausible. And that comes partly from people who sort of fantasize that, industrial innovative capitalism can find some solution to this that doesn't need government mandates. But I think that's unlikely.
So that's a perfect segue to what I was going to ask next is how then do you think we should can we collectively, work on bringing these costs down? I mean, you have venture capital models, there was a fair amount of money the Biden administration had put towards some, developing some carbon capture technology and projects. Those are currently the current Trump administration may be pulling some of that money back. It's sort of that is happening in real time. So the role of government investing in these projects, what is your view on that? How much should the government be investing in developing these technologies, and do you have a sense of how much that's happening in other parts of the globe? As we just mentioned, it's sort of being negotiated in real time here in the United States.
So I think a couple kind of big picture things. One is, at least in my view, the goal for even the next decade or maybe closer to 20 years for carbon removal should not be to actually operationally remove a substantial amount of carbon, substantial in the scale of the kind of overall climate system. I think the sensible goal is really about learning. It's about learning which of these technologies are doable at an interesting cost with low environmental impact. Because at least in my view, I don't think it really makes sense to deploy this really at scale, at kind of these gigatons a year numbers, until emissions are a long way down to zero. Not all the way to zero, but say emissions have been cut by 2/3 from where they are now. And I think, with some luck, we could get there early in the second half of the century. Things are going quite well in the emissions cutting world. But I think that's an important preconception. Not everybody agrees with that, but that's my view. And I think to learn what things cost, you can't just fund a bunch of academics to go study it, because academics like to admire the problem and they like to use the most complicated high technology because that's typically what they get publications from. And so that isn't going to do it. And venture capital, little startups can be useful, but the problem is there's a mismatch between the way that startups get going here, which needs to exploit some little niche early on, and what are reasonable, informed experts and technologists would think are the scalable possibilities. So what we're seeing is a bunch of startups in this area that I think have basically no chance of producing something that is scalable and important because it's not their fault, because they're going after a niche that they think they can make money in the voluntary market now. And you've got to do that if you're trying to start a company. So I think the startup world is not being, it's helpful. There's a lot of stuff coming out, but it's not as helpful as it could be. So I see there being a real hole here. And I think, first of all, I think there's a real obvious environmental justification for kind of option value for learning about whether which ones of these carbon removal scenarios could really work at large scale, because we are building up this environmental problem of the CO2 in the atmosphere, and the option value of figuring out how to reduce it is big. You can actually make calculations of this in these kind of global models of economic choices under climate change, and the option values can easily be many trillions of dollars, not making that number up. The value to society of knowing more about these technologies is large, because it changes your strategy if you care about public policy. So I just want to make that argument. It's worth spending money. How much money? I think in context, so I'd perfectly be comfortable with kind of across the world spending a good $10 billion a year fundamentally on developing these technologies. How to do it is the challenge, because it's easy.
And where's that money coming from? Is that governmental money?
So I said I'd be comfortable with that. It's not happening now. It's considerably less than that, and it's coming from a range of sources, and those sources are complicated because, of course, one answer is government funds stuff directly. The other answer is government offers some kinds of incentives or regulations that cause money to be spent. Both of those can work. Long, complicated conversation beyond this scope about which is better. But I do want to come to one, I think, really important thing, which is there's an assumption, widely shared assumption here, that this has to happen in some kind of market mechanism. And I think that this assumption is driven by the fact that a bunch of these early startups, including the one that I founded, have been tied together with voluntary carbon markets. My personal guess is these voluntary markets will not end up having really any role in the long run. They may play a useful role in lubricating things at the beginning, but in some kind of basic way of the way we should regulate capitalism. Companies shouldn't be doing a bunch of stuff that costs money that doesn't return shareholder value. And there's no question that if there's some real social value to doing removal, then the answer is you need some government structure to do that. I feel like that's kind of the basics of what an environmental economist would call an environmental externality. So the question is how to do it. So one answer is these voluntary things. I don't think they're that useful. Another answer is government kind of essentially pays for carbon removal at the marginal price for reducing carbon emissions. That's another way you could imagine doing it. In the very long run, I think for a bunch of these things, the right answer is that government procures this service in much the same way as government procures, say, sewer services. And I think the key thing there is it doesn't do it on a kind of dollars per ton basis. The government's procuring a public service, but when they do it well, and the US government actually doesn't do this very well, that's why infrastructure is so expensive, you can still have all the benefits of super competitive capitalism in the supply chain to build the sewers. But the point is that you don't need a market clearing to do that in the end. The actually asking for, say, a certain amount of alkalinity to be put in the open ocean, governments can have contracts to do that without paying people on a dollars per ton basis. And I think that's kind of, as I see them, packing a lot in here, key to having this work in the long run.
That's so interesting, the sewer analogy. And so if we were to talk about this like in 2050, imagine there being sort of this sewer system for carbon dioxide. What just because, I think it's something that many people, myself included, what can you help us envision that? What does that look like?
I think that the key points are that for many of these technologies, you need all the power of kind of focused hard work that happens at a startup and capitalism to make things cheaper. But these things also have environmental harms. And for some of them, it's very hard to measure how well they're working. Particularly maybe enhanced rock weathering is a really important example of that. And I think we know that we don't do a good job when those things are linked together in one entity, because one entity inevitably will oversell how well things are working and undersell the environmental harms. So that's why I don't think we want a market in the long run that just pays people dollars per ton for something where they then have a big incentive to exaggerate the tons or undersell the environmental harms. That's why I think we want independent agencies, either not-for-profits or governments, that are doing the science and assessment to understand what's being done and what its consequences are. And then we want strong competition to actually get this immense amount of materials moved around to remove the carbon. And that's why I think we need markets that look quite different from the way we're thinking about it now, that can address this problem using the benefits of kind of focused innovative capitalism without having the kind of trap of companies overselling and overclaiming about environmental impacts or removal amounts.
This definitely depends on a strong, robust regulatory framework.
I think that's essentially axiomatic. The cost, I mean, carbon dioxide, nobody gets a direct benefit from removing carbon from the atmosphere. It's a definition of a public good. There's no version of the world where we manage public goods like that without some government force. Government force can be done in very efficient ways that allow the markets, allowing them to work efficiently, or government force can be done in really inefficient, stupid ways. And obviously, I'd prefer the efficient ways, but I don't think there's a way we solve public goods problems like carbon emissions or removing carbon without some role for government. That's precisely what government's role should be in kind of Econ 101.
So we're getting towards the end of this conversation. I mean, there's so many questions here. This is just, I feel like we've just tipped, tip of the iceberg, as the cliche goes. But last thing I just want to ask before we wrap up, because it is currently there's a lot of involvement in the oil and gas industry in this sector. What is your view on how and whether the oil and gas sector should be involved in the growth of this sector?
I'm not worried about it. I know much of other sort of fellow environmentalists are, but I think you got to focus on the flows of power. The reason that the oil and gas industry is doing this is not because they kind of woke up feeling green. The reason is because of incentives and rules that governments have established that are starting to penalize using the atmosphere as a waste dump for our carbon. And those rules and incentives didn't just come because the government woke up feeling green. It came from the power of the environmental advocacy community pushing. And so I think it's driven by and should be driven by environmental advocacy in the long run. But when you ask who can actually execute these things, I think for some of the particular technologies, you need the kind of chemical engineering and execution skills, some of which are in the oil and gas industry, though actually more technically correct. They're really in the engineering and procurement and construction firms that work with that industry. That really is kind of where those core skills are. The industry is more an integrator. And so I think if environmental pressure is driving that to happen, that's a good thing. Obviously, it's also true that some companies will try and use this in a kind of greenwashing sense, over-claiming about what they're doing to avoid regulation. And obviously, I think that's a terrible thing. But I think you've got to distinguish that problem, which is real, from the fact that I've got no problem that if government and environmental advocacy has driven incentives that are driving some parts of the industry to kind of, if you like, turn swords into plowshares, I think we should celebrate that.
Well, listen, I mean, this is such an interesting topic. I love the idea of the sewer system for carbon removal is just so interesting to me. And thinking about that in the future really, really helps sort of bring a different perspective to this conversation. So, David, we're sort of running out of time here, but I just want to thank you so much for having this conversation. Really, really appreciate it, enjoyed it, and thanks to you, SOSV.
Thank you.
That was a tremendous conversation. David Keith brings incredible perspective to the carbon capture conundrum, especially on the big questions, such as how much will it cost and whose job is it to muster the massive scale required to make it work? Not startups, apparently. For our next session, let's turn to Dr. Sierra Brooks. Sierra is a senior scientist and analyst at SOSV's San Francisco office. She is responsible for sourcing and doing scientific diligence, as well as for supporting the SOSV portfolio companies working in our San Francisco office. Sierra completed her BS in chemical biological engineering at MIT, and she received her PhD in chemical engineering from the University of Texas at Austin. Over to you, Sierra.
Thanks again, Sean. Happy to be back. I'm calling in right now from our full bio and chemistry lab in San Francisco. But back to the summit. Our next session has the provocative title, Is Blue the New Green? Remember when blue just seemed too short-sighted? Here are some questions that this panel will grapple with. Is the climate tech crowd just being too purist in evaluating green tech? When is it a better investment to fund a partial or even blue solution that's also more economical? Is biology really better than chemistry, even if it's a green chemistry? Did EU Article 9 funds distort the market towards startups that maximize theoretical emissions reduction rather than maximizing the odds of success? Does having strict criteria for GHG emissions reduction really even make sense anymore? SOSV General Partner Po Bronson, Material Impact Partner Corinna Chen, Ozone Bio co-founder Francesca Badarova, and Chevron Technology Ventures investment manager Sindhu Balan will tackle this topic from their standpoints as VCs, climate tech founder, and hydrocarbon corporate investor. Our moderator is Po Bronson, SOSV General Partner and Managing Director of SOSV's IndieBio in San Francisco. Go for it, Po.
Thank you, Sierra, and thank you to the audience. Welcome to our panel and welcome to the panelists. Our title today is Blue the New Green? This was a phrasing that occurred in my head several months ago, and I was just reacting to what I was feeling. My startups have worked so hard for years to get to zero carbon, and they wanted to win, and winning for them was often defined as reducing emissions the mostest. But as they, scaled and they started to integrate with their corporate partners, the vast majority of them were learning that their products were going to be blended. Was it fuels? It was fertilizers. It was fibers. It was chemicals. It was going to get blended anyway, meaning the end customer wasn't going to get zero. They were going to get, blue, right? And that was for a lot of reasons, not just the emissions. It was to make sure that the product had consistency and went through. And if the end consumer was going to get blue, why were we so obsessed with green? As well, many of my startups were out in the marketplace of venture and working with partners, and they were being held to this seemingly singular, really high bar, often 1 gigaton a year, and they're being told, you're not eligible for investment or you're not climate tech because you don't meet this bar we drew in the line. And we would be like, what about being a really great company? What about we're going to make money? What about actually being adoptable? And it felt a very confusing path for founders out there. And, I want to today ask questions like, does having really strict criteria for emissions really make sense anymore? And did it ever? Are we being too purist in evaluating clean tech? And then, you know, as it happened just a few days ago, Bill Gates wrote a Gates Notes, and it's being described this way and that way. But one of the things he did very clearly did say is that we really must eliminate any need for a green premium, which is a statement that many investors say, but that we often don't see it. And he also did seem to indicate that some of his money was going to go more towards relieving human suffering than relieving emissions. And so this panel is convened. It's the title is inspired by the many shades of hydrogen, and we're here to explore these trade-offs as blue the new green. And I want to start with Ozone Bio CEO Francesca Badarova. As a founder, as a startup, you've navigated this world. Can you just tell us a little about how you've experienced this milieu that we're describing here?
Yeah, thank you for the description. I think this is really, really important point, and that's what we actually struggling and dealing with right now. As our startup producing bioadipic acid, it's the main building block of high performance polymer, nylon 66, also polyurethanes, polyesters, and thermoplastics. You can find it everywhere from car parts to running shoes. So it's around $30 billion market. And there is a huge emission related to the production of the adipic acid coming out of the petroleum sector, leads to at least 60 million tons of greenhouse gases emitted into atmosphere every year. And what we are doing, we're completely trying to replace petroleum-based adipic acid with a bio-based or emission-free adipic acid. And we actually succeeded to scale our production to 1 ton a year. We're right now at the pilot scale of making fully bio-based, certified biodic acid out of the wood waste, so which is second generation of the feedstocks. So what happened when we just started collaborating with the different corporate partners, also brands trying to integrate existing volumes of the biodic acid that we produce in the company into the supply chain, the question rises basically not just related to the emissions, but mostly related to the green premium. And we figured out that actually a lot of customers, a lot of industry manufacturing partners out there, they're not planning to use fully bio-based adipic acid into their product. They are actually trying to blend it with existing petroleum-based adipic acid for various reasons. It's either reducing the price of the final product or just because it's much easier for them to blend it as their scale of their facilities is so big. It's megatons, millions of tons of the adipic acid produced per year. So the equipment that is already in place that does not allow them to make a fully sustainable, fully bio-based material, they only can blend it. And because we're at the stage where we can produce only 1 to maximum 3 ton per year, they were like struggling to integrate it effectively into the supply chain. But the awesome thing about our process, we tried like to actually explain to the manufacturing partners is that, okay, guys, you're struggling to integrate like fully bio-based adipic acid at this scale because you're thinking this is small and that it requires changes of the some of the manufacturing procedures and stuff. So how about you guys give us some of the petroleum-based intermediates, which is like the key point of producing adipic acid in your industry, and that's like final step where you actually taking that petroleum-based intermediate, converting it into adipic acid. That is the step which releases tremendous amount of nitrous oxide, which is 300 times more toxic than CO2. So we were offering them, okay, give us that intermediate that comes out of the petroleum-based feedstock, and we convert it into the adipic acid without the nitrous oxide release. So we have an alternative approach, green approach, where instead of nitrous oxide, we release a lot of oxygen. It's around 420 liters of oxygen released per 1 kg of adipic acid production using our process, while in petroleum-based industry, in the same step, around 120 liters of nitrous oxide release.
So you're doing fully green bio nylon, right, at ton scale. Awesome.
Yeah.
But you're also now doing, it sounds like, blue nylon. And is there a blue premium, or does that help get us to something that's really much more an affordable commercial product that can be
That is
scaled much
much
more?
more affordable commercial product. It's a one-step green catalysis for us.
Great. Let me bring in Corinna here because I think she's been on the other side of the table from you, but done this great. Tremendous investor, Corinna. You've also worked through this journey as we all have. Is your philosophy changing in the last year or last couple years, or is it still the same? Share your point of view here.
Yeah, I think this is really important question in the sense of, are we too much of a purist when we're thinking about this? I've always been a bit more pragmatic in the sense that I didn't think that technology should lead the way, in the sense that we still need a product that wants to be adopted by industry, and that leads to a successful business. And so they're not really thinking about necessarily the underlying tech that is driving that, whether it be, bio or, green chemistry and so forth. And so, with that, we've always kind of led with this thought of, can it be a solid business? Do we understand the incentives for adoption? And, Korcheska mentioned a few things that I think is very, very real, which is, industries already operating at a mass scale. They can't overnight switch all the equipment, so you want to work towards, as close to drop in as possible, or to really understand how industry is able to not adopt change immediately, but to integrate that over time. And I do think it's quite silly to think that they're going to go from, petrol to, bio right away, because the machinery itself is very different. So I do think it's incumbent on the industry to think about this, and for us to find a good marriage between, I would say absolute zero carbon or, a particular, carbon emission standard. And really think of it also as how do we make sure that industry will adopt this and have that be a outsized consideration and knowing that it's okay. We want to make change, but we can't make absolute change and have no change at all. So integrating it and changing along the way, I think is much more suited to industries that's already established, which is what we're really going for. We're talking about trying to be more sustainable.
Corinna, just one quick follow-up question. It was often the case that VCs wanted, say, as few corporates in around as possible, right? Back in the day. Has that changed? I mean, I personally want as many because they're the ones helping us try to solve the problem. What is your feelings on that?
Yeah, I also like to take a pragmatic approach to that. I also think it's win. I think strategics too early when the technology is being developed is not necessarily as helpful as when a company gets closer to the strategic being a customer. We want them invested because we want to understand how industry works, but ultimately we want them as a customer. So I think later stage, after the initial innovation is a fantastic time to reach out to strategics and try your best to kind of get the entire industry because part of it is learning how the industry would adopt. And I think that's one of the best reasons to have a strategic involved.
Thank you. And with that note, Sindhu, my friend, thank you so much for joining us today. Um, we all obviously understand that like Chevron is part of this really significant shifting that's going on in our society, and it can't go zero overnight, and isn't that it's not feasible for them. So how is Chevron Technology Ventures helping Chevron itself transform the way it produces and delivers lower carbon energy, both today and looking ahead?
Thanks, Bo. Thanks for having me here, and thanks to SOSV. And thanks to Corinna for endorsing strategics. That was great. So, building on what Corinna just mentioned, right? Leveraging existing infrastructure, leveraging domain knowledge that has been accumulated over 150 plus years. Why should we diminish that, right? Because if we diminish that, we would have to start at the very beginning again. We would have to start at the beginning of the scale. But if you use this existing knowledge and infrastructure, we are going to build and ramp up quickly. So it's very important to keep that mindset. And as you know, Chevron's, vision or tagline that you would see everywhere is lower carbon energy. It's all inclusive. And at the same time, we don't want to compromise affordability and reliability. And also delivering this at scale. So the economics has to work, right? So it's very important to understand these parameters and the framework under which you're going to work and deliver lower carbon energy. So the way that you can think about, or at least when we in CTV, we are thinking about how we are enabling Chevron to deliver lower carbon energy. This is by bringing external innovation to Chevron. So you can think of CTV as an off-ramp to bring external innovation. And how is that helpful to Chevron? Because you cannot do everything on your own, right? And so it accelerates the pace of innovation within Chevron. It brings new ideas, new mindsets, and new thought processes to Chevron. So that is how CTV enables Chevron to deliver this lower carbon energy at a affordable, reliable, and evergreen manner to society.
Yeah, and Sindhu, can you give us an example or two of like a company that CTV is working with, regardless of how you might have whether you invested or not, but that sort of embodies this all of the above mindset rather than the either or mindset that dominated the climate tech conversation for years?
Yeah, so it is the all of the above mindset that Chevron has always embraced, and that is because throughout the history of energy sector, you would see that energy develops. The development has been through different pathways and different timelines across geographies. So why would that change now? So you do need a portfolio approach to energy transition, and if you look at our portfolio, you will see that same theme. For example, I can think of one of our companies, which is a point source capture company that offers modular membranes. But this membrane is not only for carbon capture, it's a platform technology that enables gas separations. So you can see where I'm headed with that, right? As the carbon market matures, this technology is now able to service other separations within oil and gas sector. So what happens with that is they are able to build their presence, their credibility, and as a group that can scale a technology. So when the carbon market is mature and when companies are ready to take that bet, they are ready. They have already scaled it up in a sector that is adjacent to where you need to be. So that was what really attracted us to this company. Another example that I can quote is one from circular economy. One of my portfolio companies is recycling batteries, and the reason we were attracted to this particular company is because the entire process was lower carbon, and the economics made sense. So you have to be cost competitive with your incumbents. If you're not, you really need to understand who is going to pay that premium and whether there is a robust carbon policy that is going to support the technology if a premium is required. In the absence of a premium, you should really be very, very sure and clear that the technology can stand on its own 2 feet and be cost competitive and can scale. Ultimately,
Uh,
it's about scale and economics.
Let me take that question back to Corinna for a second. Like, Corinna, I mean, I struggle with this. I talk to a lot of global corporates who will say, and they have sizable existing businesses in new sustainable versions of what they do, and they'll say, like, this coming year, we really don't even know what people are going to pay. Like, and they're actually selling stuff. Like, it seems very fluid. It seems it's more culturally bound, kind of like tipping is culturally bound. You tip a lot in San Francisco and you tip less in Florida, and like, do you feel like anybody really knows who will pay a premium and why? Does it ever feel solid ground?
Yeah, I think the idea of paying premium is something that we really hope for, but we don't really see practice in a capitalistic market from that perspective. It has to be competitive, or there is a premium. It's because there's a competitive advantage or product advantage, and we see that all the time in terms of paying more for value, paying more for better quality, and so I think part of it is incumbent on us to be able to position that well, to articulate those points if there were expected to be a premium related to that. But I think if you're comparing it to, let's say, general things, then it would be very difficult to pay premium just because of the way it's manufactured. Us as a society, and this is probably way too generalized, but we're not really, we don't have practice in thinking that way. We pay a premium for a reason, and I think and that reason in terms of sustainability is not 100% demonstrated yet. Of course, it would be great to strive to that. And I think part of that is, why does the premium exist? It's because we're trying to scale up something when the industry is already at scale and they're able to deliver an outsized advantage. So we still need to solve that problem. And I think some of the ways that companies are doing it well is being choosy about the markets. So, back in the day when you're thinking about going straight to, food or energy, the scale is so massive, there's no way to grow into that volume. And Corcheska even mentioned this in terms of where she's starting to where industry is. So perhaps part of the solution is to find pockets of industry that operates at a different scale and a different price point and grow into it. And we see this with biotech as well in terms of other industries that command more. There's a reason why a startup in drug development, drug therapeutics is more so than, let's say, a biofood. And that's because of the scale and the premium that the industry offers. So I think we need to take that into consideration.
So if I might just add on to
Yeah.
what Corina just mentioned. So Corina, one of our portfolio companies, for example, what we saw or what was attractive about that company was the feedstock flexibility. So that helps with the siting, right, and different geographies and builds in resiliency into the system. So it's just, the point that you were trying to make about how does a company select its beachhead market, and how that technology really aligns with that beachhead market, right? So that you can solve these problems about premiums, about resiliency, and about scale and economics.
I want to bridge back to Korcheska here off this thread. I personally have found that very often as I go visit some of my partners' facilities and factories, they've for a small expense been able to implement something. Essentially, it is kind of a self-tax, one might say, but what they're doing and what their actual goal is to gain market share. Because when they bring in for visits, say their own corporate customers, often retail, right? Big retailer, they win the account because the retailer likes and appreciates what they're doing and how they're operating. And so it's not about unit costs, it's about gaining that market share, gaining customers. Jessica, have you seen or heard this kind of impact for some of your partners in the nylon space or the other chemicals that you're doing?
I think like it's very, very straightforward, and that's what basically biggest industry is trying to implement right now. We've seen that change within this year, actually. So what's happening is the nitrous oxide abatement technology that been developed about 20, 25 years ago by DuPont that like requires like massive implementation of the filtration units and rare metals and stuff like that. So it's only can capture just small portion of the nitrous oxide, and then like a big players of that industry know that. So like what they're trying to do is find actually technologies that can remove that pain points from them, and then can help them to reduce the risks on regulation that industry on that such as like so toxic gas. And that's right now is the main interest is to focus on the companies that actually have some real technology in place and real volumes production of, let's say, adipic acid on nylon 66, so they can test samples. So we provided that then samples of the adipic acid. They made the nylon 66 polymer, and they even spin it to the thread. So right now we actually made first in the world spin down the nylon 66 into the thread that goes further to the retail and the textile. And these big industry partners took that samples to the biggest shows in the world, in the plastic shows in Shanghai and in Europe, and showed the samples, trying to win the markets. And then now can just say, guys, finally there is a company that can produce real high purity bioadipic acid out of the wood waste, and you can polymerize it to nylon 66. That never happened before.
Great. So I think, let's talk about the kind of 800-pound gorilla in the room, and Cindy, I'm going to steer this one to you to start, right? Like every startup says, oh, we're not relying on carbon pricing, we're not relying on climate policy, but let's just declare it as least what it, at the very least, it is meant as a bridge to help get us to a day of no green premiums. And yet we also know that it varies by continent. We know it is related to policy, so it might be temporary. Would love to hear how Chevron Technology Ventures factors in climate policy and carbon pricing when you're evaluating technologies specifically for investment. And are these external signals, shaping your strategy?
As an investor, definitely, CTV is not averse to anything that unlocks the value stack, right? Or anything that unlocks us to get to scale and get there quickly. But at the same time, we also need to understand that there has to be a framework for this. And if you think about it, carbon price, for example, can be a fundamental core framework, right? Or a point around which you can build out the other policies that support carbon price. And carbon price is something, for example, you can think about it from a global perspective as well to set a carbon price. And that can be a very efficient climate policy. And then the other policies, RINs and everything else can kind of complement this key policy, if you want to call it that. But at the same time, we should also have policies that support innovation, because innovation is key to where we need to get. I always talk about I don't talk about colors. I always talk about a scale where we are going to lower carbon energy, and maybe the lowest denomination is green, right? Or maybe it is not for that technology. Maybe it is 70% there, right, for that technology. So that is the lens that we are using. So if there is a way or a path to unlock value or to scale, definitely, and if there is, we kind of rate the risk that this premium or this policy is going to support the technology at least for the next 4 to 5 years. And then, the technology would be at a point where it could be cost competitive, stand on its own, and get there. Kocheska, the point that you made, right? You start here and you get there where you need to be. And then how you influence and you manage your narrative around that as you speak to investors and to the community. So these are some of the points that we look at when we are trying to assess a startup. And if policy and framework is required initially, so be it. But we definitely need line of sight of the company being able to stand on its own and do well in a competitive environment. Chevron always says we are built to win in any environment, but I think that's a huge statement. But you can define that environment. So where are you going to win, right? And what does that take?
Corinna, I feel like I gotta clarify, Rose. SOSV does not ban investors from talking book at our climate summit. This isn't one of those types of podcasts. Like, please share with us some companies that you're excited about that you feel like maybe speak to this topic that you've invested in or that you're looking at. Like, would love to hear like concrete examples of that manifest this.
Yeah. I think this is really important. Material Impact has a company. It's called Debut Biotechnology. And when we first invested, we were focused on, a cell-free technology for continuous manufacturing. I was particularly focused on that because industry doesn't manufacture in batches in so many ways. We're talking about getting to the same kind of scale that is required. Like many startups, there's been pivots along the way. And Debut right now is trying to figure out how do we introduce, a bio ingredient that doesn't necessarily need a price premium to get that through. And this goes back to my earlier comment about selecting that initial market, that beachhead that Sindhu's talking about, and we're focusing on beauty first because why? They don't command a ton of volume initially, and there's a high price premium, but we stick to performance in terms of high purity and so forth. And it's a interesting way to get into the market. We did not set out thinking we're going to be only beauty, but we also realized that we need a good market entry. So I think that's one of those examples that's well practiced and thinking about that. And then the other is actually a company called Hue, where we're both co-invested in, where what we're talking about is introducing biodyes that is literally a drop-in replacement because we know that the textile industry is steeped in its long-standing capital equipment and how they are, working to produce garments. And it's simply unreasonable to just say, you know what, throw out all that machinery. We need you to buy a bunch of new stuff and start with a new ingredient that you've never worked with before. And I think these are the practical ways in which we're able to, to the theme of the meeting in terms of, is blue the new green? I think these are pragmatic steps. There are different steps in these two companies, but I think pragmatic either way, where you're finding a market that fits and you grow to scale, but you're also realizing that industry is already invested and we need to meet them halfway because it's more important that we make some change than absolute change that results in no change at all.
As my follow-up question, I just want to ask here, Bill Gates described that that a lot of the climate funds have funded things that, aren't really like the 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 best businesses, at least yet. Though he does spend pages and pages in his notes kind of describing ones that he believes will be, right? The net result is there's certainly been a reduction in capital to the sector, without a doubt. Another way to say it is maybe AI is taking the money. So I am curious with when and less capital is going into these categories, has that affected what you invest in, how you invest, how you strategize about how to build a company?
I think in terms of less money, we also got to think about it in terms of perhaps that, in what we've experienced, we've also had a shift in what we think is a good investment. And I think part of that is to really understand the development cycle of these new technologies and what that length of time is, and also to really explore what is that not only product market fit, but the initial commercialization. And I think there's more critical thought in there so that companies can ramp and have not only sustainable ambitions, but also obtainable market and company goals. And I think that's really important. So we may have been a bit frothy early on in our ambitious goals, but I think part of that, as we're seeing now, is that we still need to have solid businesses. Back to your very first points, and so in my mind, this is really more of a correction in what we're seeing today.
Francesca, with that, I'm going to point to you or tee you up. I'm just curious because one might hear you and think, wow, that's amazing. Ozone's doing this great. That was a good use of $50 million. But you haven't used $50 million. You haven't even used $5 million to take the lead in this market. Well, less than that. And I just want to actually ask you about being extremely capital efficient, and how you've managed to avoid the temptation to take a lot of money and spend a lot of money and be actually so ruthless in how you use money at Ozone Bio.
Yeah, that's true. Like we're known as the stingiest company in the portfolio of our investors. So that's we've been very like cost effective with how we spend the money. So I think the main reason is like we both me and my co-founder, we're both technical people, and we try to minimize the amount of money we spend on nonsense. So like we've been actually very effective on using that money in the first 2 years, actually achieving the technical goals and getting our technology really well structured and developed to the stage where we can make sure that we meet the purity, we meet the actually conversion efficiencies, and we've done like really great. The main target was minimize greenwashing, focus on technology development. Don't waste our money on marketing when you're not ready for marketing. Don't waste money on actually doing some business development at the very, very early stages when you're unable to provide samples. So right now, we will be actually much more confident taking more amount of money and using that money to unlocking the deals with the big industry partners, because right now our main target is to scale our production.
All right, thank you. And on that note, I really want to thank our panelists for convening and discussing this. I really appreciate it. Means a lot to me. And I will say thank you and turn it back over to SOSV.
Thanks, Poe. That was a great discussion and another interesting reflection on the complex trade-offs climate tech companies need to make in their push to market acceptance and market economics. Holier than thou outlooks are not helpful. So coming up next, I'd like to bring on another SOSV star that you met yesterday, Mohan Iyer. If you saw him, you'd remember his incredible smile, but for those who missed him, here's the lowdown. Mohan is a general partner at SOSV and brings the deep operational experience of working for 25 years as an entrepreneur and leader at several life science startups, including Pendulum Therapeutics and Second Genome. He started his career as an engineer in the early days at Genentech and has a master in biomedical engineering from Duke. Throwing it to you, Mohan.
Thanks so much, Sean. I'm very happy to introduce this next session because as someone who grew up in India, it makes me proud to see India doing well on the climate front. We entitled this one, India, an Energy Transition Ahead of Schedule. India has achieved its goal of 50% non-fossil fuel capacity 5 years ahead of schedule, but the country still faces a massive challenge to scale clean energy. And the work is complicated by global complexities, including China's manufacturing prowess, tariffs, trade wars, AI data centers, and India's ever-growing per capita energy consumption.
In this session, we're featuring two key figures that represent the breadth of India's clean energy ecosystem. Samir Shah, who's managing partner at Peak Sustainability Ventures, India's pioneering climate-focused VC fund, and Amit Paitankar, CEO of Wari Energies, the country's largest solar manufacturer. Our moderator is my own SOSV San Francisco colleague, Parikshit Sharma. Over to you, Parikshit.
Thank you, SOSV, and welcome to our listeners. I am super excited to dive into this panel on powering the energy future of India, and invariably, impacting the energy trajectory of the world. When we look at India, there's this, on the one hand, there's this optimism, there's this golden opportunity to decarbonize by coupling, the rising manufacturing sector with the rising sustainability sector. And the other side is the reality of the fact that India is going to add 33 million people to the global consumer class. And that comes with it, that brings with it an insatiable demand for energy. So navigating this contending reality, I am so excited to have two veterans with me to delve into these topics today. We have Dr. Amit Paitankar, Director and CEO of Wari Energy, India's largest solar manufacturer, and we have Samir Shah, Managing Director of Peak Sustainability Ventures. Thank you both for making time. It's an honor to have you guys join us. And to just dive in, maybe I'll just start with a question to you, Amit. Wari Energies, and I'm sure you'll tell us more, has more than 5x production capacity of solar in less than 5 years. So this is remarkable speed and scale. Would love to know the market drivers as well as the capabilities drivers underpinning this spectacular rise.
Well, Parishit, thank you very much, first of all, for having me and Samir on the call. Yes, it's been a very, very interesting run for the last few years here. But Wari actually did start the journey a long time back. It's a 3-decade-old company and got into solar actually in 2007. So it has weathered the storms that solar. It's like solar flares, right? You get these solar flares, and there are these storms which you have. And so there is, there are sometimes it's up, sometimes it's down, and it's been for a long period of time, for the last 3-4 years now, pretty much on the upward swing, primarily because of the fact that solar energy is at a very sweet spot at this stage. From a price perspective, from the perspective of being able to produce fairly fast, being able to be deployed fairly fast, and then coupled with that, the demand is very, very high. And we are seized with the need for energy transition, and solar is placed very, very well. So combination of all of that factors really helped us grow very well. Government policies have also been very, very strong. So I think it's a combination of elements. It's demand, it's government policy, it's the manufacturers, it's the customers, it's the whole ecosystem which has actually helped.
Great. And yeah, we are delighted to have you here and looking forward to, unpacking some of those concepts a bit more over the course of this panel. Over to you, Samir. You're one of the first sustainability specialist venture capital firms in the country, playing a pioneering role investing as a VC. Tell us a bit about your firm and also about this journey of Peak Sustainability Ventures.
Yeah, thank you. Thank you, Parikshit, first of all, for inviting me to share my views. So look, at Peak, we run a firm focused primarily on sustainability. And yes, you're right. We are one of the first investors. And since 2019, we have been investing only in sustainability. I might add that we were investors in Wari, and I was on the board for 7 years. So I had some role in the journey of Wari in the initial years as well. At Peak, we see sustainability and climate as an opportunity where we believe we are at the foothills of the opportunity. We are seeing so much of opportunity ahead of us in terms of new sectors, new opportunities for investment. as well as for generating high risk-adjusted returns while meeting the goals on climate and sustainability. We focus on four main areas. One is new energy, where we focus on energy security, energy inclusion, energy transacting, energy in terms of grid, as well as energy transition into a cleaner energy future. We look at food systems. We look at water, a sector that is highly ignored by many venture capitalists. And I think that has been a focus for us for many years. And then the broad areas of climate. We are finding a number of opportunities in this space. In addition to the fund, we also are interested in platforms which help corporates decarbonize. And there are some examples I would like to share as the session progresses. So I think net, I think we are very committed to this space. We are very interested in this space. We continue to see a lot of opportunity in the years ahead.
Awesome. And yeah, what's interesting there, Samir, you mentioned risk adjusted returns and investing in these new energy transition modalities. And we look at the excitement in India, and Amit, you were mentioning that the market demand pull as well as the price is finally there, and the energy transition is already underway in India. Then you look at CATL's IPO this year, and there seems to be enthusiasm, and there's investments in battery manufacturing. And on the other hand, you look at the US and in EU, there seems to be a graveyard of battery manufacturing platforms and big capex investments that have gone to zero. What are we missing here in the West, and why are things different in your side of the world?
No, I think Asia in general is actually been pretty much at the forefront of um, this part of the energy journey, I guess. I mean, up until now, India, from a oil and gas perspective, for most of the last several decades, has been more of a recipient, right? Did not have a whole host of resources from that perspective. But sun shines here in abundance, right? And we have a fairly large coastline. We have a fairly good wind pattern, although again it ebbs and flows. You do have a substantial possibility of wind as well. So all of that taken together, India is in a sweet spot as far as renewables are concerned. And the government recognizes that, the industry recognizes that. It also helps India in actually saving some foreign exchange and actually, and so it all layers. It actually turns out to be a very important win-win for India to be pursuing renewables very, very aggressive. And that's the reason why India is slightly differently positioned across the world. And what has really worked is policy, demand, and industry picking up the cudgels of manufacturing together, along with making sure that there are projects which are sometimes through centers, sometimes through state government, sometimes pure private money, all of that taken together. Renewable energy projects are being deployed. And so we are at a point where 5 years ahead of schedule, we have hit the 50% mark for renewable, which is quite an interesting achievement, I would say.
Right.
So I think all of things are coming together. It's the right time.
It certainly seems so. And you brought up policy and the proactive role that policy is playing. And I do want to address the elephant in the room early on in this panel is, will we see a path to price competitiveness of Indian solar to Chinese solar? And what's your outlook on a path beyond China when it comes to solar and renewable energy? Because I believe Wari is now the largest manufacturer of solar outside China in the world. So clearly, you guys must see a path towards that direction, right?
Right. No, great question. And it is indeed an elephant in the room. Can anyone, anywhere other than China, be as efficient and as competitive in manufacturing? And China has done a phenomenal job. Let's understand this very, very well. They have been at it for the last 2 decades. and have perfected the art of manufacturing in terms of efficiencies, in terms of production lines, designing the production lines, optimizing it, and all of that, right? So I think it's great story thus far. The beauty of it is that there is a method to it, there is a technology associated with it, and it is definitely replicable, right? So if you really look at the components of cost, at the end of the day, when you look at a P&L, what are the components of the cost, right? I mean, there is cost of goods sold. So you have labor cost there, you have cost of electricity, you have cost of all of that. Can India be competitive in all of that? The answer to that question is yes, we can be. The elephant in the room that needs to be addressed there, very important, is can you be as efficient? The same amount of unit of electricity, the same amount of people, the same number of people, and a given period of time. Can you be producing exactly that much or equal or more? That will require time and learning. But is it achievable? The answer to that question is also yes. The other aspect, when you come lower down in the P&L, you start looking at the capital financing costs, other utility costs, and so on and so forth, which of course, again, China has mastered that art of investment also very well. Now, can India do a good job there? Again, the answer to that question is also an unequivocal yes. So I would say India is on a journey. It will take anywhere between, I would say, 2 to 4, maybe 5 years. In that period of time, you will find Indian companies as competitive in terms of price points and efficiencies as anywhere in the world.
Wow. That's a promising note. And
may I add a couple of comments to what Amit has said?
Yeah.
So look, I think India today, we are in the position where our energy needs are going to grow over the next many years as India grows to the third largest economy. The important thing is to bend the curve on climate and to reduce the energy intensity per unit of GDP. However, ironically, we will be adding coal at the same level as we're adding renewables. And we are also going to add nuclear, which is, not renewable, a clean fuel. So all this will be needed to enable India to meet its energy goals for the future. I wanted to pick up on a point that Amit said, where India has a lot of sunshine. Absolutely correct. And I won't add more to the renewables part of the story. But India also has a lot of agriculture. And we have about 400 million tons of agri waste every year. So this is where policy comes together with private sector, with innovation to see how we can solve India's problems. Or not solve may be too strong a word, address India's problems to the best extent possible. So just recently, we announced a project with Arvind Mills in Gujarat, where we are saying that they're going to take 50,000 tons of cotton stock, 50,000 tons of cotton stock, and convert it into biocoal, which can be directly used in the boilers as one-to-one substitution for fossil fuels. And this enables a sustainability journey. And Arvind is a supplier to global brands such as Gap, Marks and Spencer, etc. So it allows these companies to reduce their scope 3 emissions because they are buying goods from Arvind. And at the same time, we are replacing coal. India has used 1 billion tons of coal last year, and that also continue. But at the same time, you need to find alternatives which at scale can address these issues. If this 50,000 ton a year plant works, we are about to do 200,000 tons. So these are the growth opportunities. The second, biofuels, is bio-CBG, with the government announced a program called PATAP, which is called Sustainable Alternative Towards Transportation, Affordable Transportation. And we import 81% today of our mobility-related energy needs, to the extent that that can be substituted by bio-CBG, converted from waste. That's the classic circularity, waste-to-energy story. India using the resources that it has at its disposal to provide an alternative pathway to fossil fuels to meet its energy goals, its growth expectations, and climate.
There's another panel in this climate summit, which is Blue is the New Green, right? And I think the climate movement is finding this pragmatism here through its hard-learned lessons, where maybe it's not coal, but it's bringing renewability to coal, which is what you're highlighting. And being practical about and realistic about our needs. And I guess that's the other side of this. It's not just productivity, it's the resilience part that both of you are touching upon. And both these approaches, Samir, they're technologically led innovations, and Amit also mentioned technology and efficiency there. And on the technology side, it seems there's a soup of technologies. Electrolyzers here, perovskites there, and every battery chemistry possible is being there's permutations and combinations today. So, from the investor perspective, how are you making sense of this innovation soup in in energy transition?
I think you have to separate the good from not the not so good. I think the problem which you have, which is in an overpopulated sector, is you have to be much more careful and much more stringent in your analysis. And yes, we have seen all of these companies that you mentioned doing manganese zinc dioxide batteries, doing vanadium flow batteries, doing iron air batteries, doing all kinds of stuff. I think the important thing is to see, for us, the parameters are very clear. Can this scale in the future? Is it our expectation this will scale? B, is it affordable? And does it meet India's needs? And if the answer to these three questions is a yes, then we would take a very, very close look at these technologies. And one point I wanted to make is that, look, we think of climate globally. So we look at solutions also globally. And our perspective is that we need to use best-in-class technologies wherever they are in the world, to the extent that they can help India achieve its energy goals, whether it's energy transition and or energy security, in a meaningful manner. So we have looked at these technologies. I think we are careful. I think the only way you analyze this is that, do much more of upfront analysis, as well as talk to a breadth of people. I mean, nothing new that you wouldn't do in other spaces. But I would also add that in my 30-year investment career, I find climate investing to be the most complex, most intricate, most interconnected, with nuances that some we appreciate, some we find out as we go along. But we are admittedly in the risk-taking business. I don't have all the answers on day one, but when we have sufficient sort of information and confidence, we begin the journey with a smart entrepreneur and see how we can make them successful.
Right. When it comes to innovation, Amit, I'm sure there is multiple innovation initiatives and ways to deal with startups at Wari, but there's a new orthogonal area approaching. When we thought of energy, there was the infamous energy, water, land nexus. It seems we've added AI to that nexus, and AI is going to make tremendous draw on the grid, right? AI is now a capex story all of a sudden, and scaling up these data centers, right, is creating demand pressure on grid for energy. So, how do you see Wari's role evolve as AI and feeding and fueling AI, and the energy that comes with it will become a big part of the energy mix?
Well, our little small brain here in the body consumes most of the energy that we use. Likewise, data centers are going to consume most of the energy that we produce, and the more intelligent they get, the more guzzlers of power will they be, right? So, I mean, the estimates at this point in time are quite astounding. In just a few years, literally 5 years from now, we are going to consume 945 terawatt hour.
My God.
It is double than what we are today, right?
Right.
From just sheer data centers perspective. The US, if my memory proves me right, is roughly consuming around 2-3% at this point in time of its overall energy basket for data centers, and it's going to go to somewhere around 7-10% by the turn of this decade.
Right.
India is right now around 0.5%, and it's going to be around 3-4% by 2030. So it's the sheer amount of energy required by data centers is huge. And so if you really look at the overall energy basket, where will you be in a position to deploy this energy at speed and at scale at which these data centers are coming up, right? Because the speed is very high.
Yeah.
And so, yes, nuclear is a great idea. And by the way, this is not either or just one of these ideas, but
yes,
whether it's nuclear, whether it's even fossil fuel, whatever technology you talk about, right? its gestation period is anywhere between 5 to 7 years, right?
Right.
Whereas renewable gestation period can be literally a year's time, 1.5 years time, right? And so at this point in time, what is the most practical, the least cost alternative for you to create power stations that can power all these data centers? The answer to that definitely turns to be solar. And a combination of battery energy storage systems, it gives you a 24/7 possibility. And that's the reason why I guess I share the same optimism that Samir shared, that we are actually just at the beginning of this energy wave. You know, for developed countries, for developing countries all across the world, I would say I think we are just at the beginning of a big multi-decadal growth story.
Ah, that's encouraging. That's exciting too. And yeah, there is greater awareness that these data centers would not have amortization periods that we once taught, and, and the economics will yeah, there will have to be some synergy in the lead up times.
I would just like to add one more point to what Amit said. So I think he has talked about AI. We have come at it slightly differently, which is to say, look, AI will require a lot of cooling because of obviously the power it consumes. So there's a company that we have invested in, which is based in Europe, which does what is called direct to chip cooling, which is a new phase of innovation where you're cooling only the chip, and that reduces the energy cost of cooling substantially. So what the solutions we look for are ones where we say, look, can we keep the use of AI the same, but reduce the energy requirements so that you need less of solar, because then solar can be used or deployed to reduce sort of, India's overall coal consumption or India's overall footprint on fossil fuels as well. So there are technologies which are emerging, which can enable us to say, look, how can we use solutions? And in this case, it is a graphene-based solutions which cools only the chip. But this is just an example of the many innovations that we are looking at globally, which can allow us to say, look, how do we benefit from energy efficiency and look at solutions that can be scaled? And these are at price points which are affordable today. I mean, these are paybacks of under 2.5 years, actually.
Yeah, and it helps to have an integrated national grid, which is, I think, one of India's, something India can boast and be proud of. And Samir, something that I hear from you over and over again is invest in the best technology, and that can be from anywhere. You don't necessarily have to stay within India. And what I'm observing here is gone are the days where World Bank would observe a technology mature and then partner with a multilateral bank and create special purpose vehicles to give developmental loans. You're doing it seems a bit differently, where you're technology transferring in through investments. Tell us a bit more about how you're able to do that.
Sure. I think the model you mentioned is for the last generation. I think we are now in the next generation where, there are no boundaries as far as climate is concerned. So let me give you an example of how Indian technology is being used overseas and globally, and then vice versa in terms of how we are using best-in-class technologies overseas in India. In India, we have invested in a company called Indra Water, which is out of IIT Mumbai, which does decentralized water solutions for industry, allowing them to basically recycle the water. So Unilever is currently using them in Vietnam, in Indonesia, in Mexico, and in Egypt. And this is just the beginning. So this is a classic example of how an Indian company and Indian technology, we are exporting hardware and software to companies, to such large multinationals overseas. I think the reverse is true in hydrogen. We invested in a company out of Norway, which does what is called hydrogen efficiency, which doesn't distinguish between the colors of hydrogen, whether it be gray or green or blue, but says that whenever we are producing hydrogen, we, with our palladium membrane, can improve the energy or the hydrogen efficiency by 5 to 7%. So ironically, the higher the cost of the hydrogen you're producing, this benefits you even more because it gives you a quantitative result that is 5 to 7% better. That's an example of how we have been speaking to 20 largest companies in India who have seen merit in discussing this, and we are close to sort of doing a pilot in India using this refining technology. I see the world's converging more and more in terms of saying that, look, climate is a global issue. We need to look at best-in-class technologies wherever they are. The one caveat, though, Parikshit, that I might say, is that we look at the company only if it has a substantial portion or looks to have a substantial portion of a footprint in India. And by that, I mean 20%, because we sit in India, our core is to address India's issues. So if it is a company that is US to US, then it perhaps doesn't fall into our domain. We want to work with companies that, of course, can work overseas and, of course, will have a large presence overseas, but need to have a meaningful presence in India to enable India to achieve its climate outcomes.
Got it. Yeah, deliver the best levelized cost of energy wherever the technology may come from. And, in the final leg of this session, Amit, Samir's words are very, on the one hand, there's this knowledge is universal and it's never been faster to innovate, to discover. And we're living in these times when global supply chains are undergoing this reshuffling. How do you look at Wari's outlook in a world full of tariffs, trade wars, and this geopolitical reshuffle, and how you'll continue to supply energy beyond India under such a backdrop?
A great question, Parikshit. Uh, from our perspective, we consider India, of course, as an extremely important market for us. And we do consider United States also as an extremely important market for us. And so we'll be closely linked, associated, and invested in both these markets. Of course, India is our base. We are headquartered here in Mumbai. And we are manufacturing in the United States as well. We have a manufacturing facility in Texas, in a neighborhood of Houston. And at this point in time, we manufacture roughly 1.6 gigawatts of panels there, which shortly is going to move to 3.2 in that same facility. And we have also bought over Mayor Burger's assets related to module manufacturing, which is in Arizona. And so that gives us an even larger footprint in the US. So we'll continue to invest in the US, manufacture in the US. We've already said last, 6 months back, we'll manufacture solar panels, we'll manufacture cells there. And eventually we'll also potentially look at manufacturing battery energy storage systems in the US as well. So I think the best way to navigate through the geopolitical upheaval that we are going to go through is just understanding the rules of the game. And the rules of the games will keep changing. I think one constant in the rule of the game is if you are manufacturing in your key markets, you are probably okay. And I think that's the important constant we are having in our mind, and that's how we are moving ahead.
Great. Those are wise words. Thank you very much. I know we're at time, but yeah, I'm going to repeat that because I love how you put it. if you're manufacturing in the right market and focusing on the right problem to solve, you're okay. Samir, we would love to hear your thoughts on the same as well. You're clearly investing globally, but for India and from India for the world. So if you could drive us home, that'll be great.
Thanks, Parikshit. So let me take a different perspective from an investor standpoint in terms of the geopolitics. So as I mentioned, our focus is on innovation. Our focus is on addressing climate issues, which are global. And our focus is on India primarily. But of course, what we do or don't do in India affects the world. What the world does or doesn't do affects India. So we have to think of this as one continuum. So in that context, we invest with a lens where we say, look, is this technology that is applicable to India? And is this a technology that can scale in India? And our approach has been where we would invest a small amount of capital in the company overseas and then say that, look, if India works and you set up manufacturing in India, then we will invest not only 2x, but perhaps even 3x of what we have invested in your company overseas to say, look, if we can use this technology that can enable India to achieve its goals, then that's something that we'll be very keen to do. And yes, geopolitics and the headlines are what they are. We are focused on companies. We are seeing sufficient opportunities across the spectrum in terms of companies we invest in. And we effectively go about our business saying that, look, there's a principle we have, which I say, remind myself every day to say, look, do what you can with what you have. And I don't wait for trillions of dollars of headline news to say, well, we need 10 trillion and we have only X trillion, so we should be depressed. I said, no, we are optimistic about the future. We will deal with the situation as it comes. We will work with what we have, and we have very good partners overseas that we are working with, in India that we are working with, in academia that we are working with, and some very interesting projects we are going to announce in the few weeks ahead, including one where we convert from a wastewater treatment plant, we create energy, providing the nexus between water and energy to say how we can use the biogas from a wastewater treatment plant to get biogas and bio CBG. If this works, we have announced a plan to do 100 of these, which involves a $300 million investment. And one example of how do we think of energy inclusion. So a company we have funded called Metafin Clean Tech Finance is today providing rooftop solar finance in 4,000 villages in India, which are moving towards energy transition and replacing diesel with solar. The intent of this company is to go to 100,000 villages over a period of 5 years. This shows you how solar can change lives, change climate. And here we have done 50% of the lending to first-time borrowers, which says, well, we are also doing financial inclusion. And more than 46% of the borrowers are led by women co-founders, which means we're also progressing on gender equality. So the comment I'm making is reflective of the fact that when you're addressing solar, you're addressing many other secondary SDG goals as well, which together are very powerful in addressing India's problems at scale. So I think in addition to what we do at Peak in the fund, there are a number of these parallel, I would say, of projects that we are undertaking, which have in our minds the ability to move the needle on climate in a meaningful manner. And we are excited, and we are going to continue this for the years ahead.
Awesome. Thank you, Samir. Yeah, this mix of optimism, pragmatism, and realism is definitely what underpins the Indian way, and I'm so grateful and honored to be hearing from you two veterans today. So really appreciate your time, and thank you very much. I know you have busy days to get to.
Thanks, Parikshit, Samir, and Amit for that great session. It's really remarkable to see how renewables have taken hold in India almost purely on the basis of good economics, as well as the added advantage of local sourcing for power. For our next session, I'm sending it back to Sabriya in New York. Over to you, Sabriya.
Thanks, Sean, and I'm excited to introduce our next panel, Making Rare Earths Less Rare. If there's one thing the Trump administration and climate tech innovators agree on, it's the urgent need to shore up U.S. supply chains for rare earth elements and critical minerals. You can't make magnets, batteries, semiconductors, and countless other industry essentials without them. And yet, the U.S. has ceded supply chain dominance to China. The administration urgently aims to fix that with a broad array of policy and economic initiatives, many of which are providing tailwinds to startups with innovative technologies in mining, processing, and refining everything from lithium and copper to neodymium and dysprosium. We'll hear from two founders in the fray, Stillbright's Randy Allen and Phoenix Tailings' Nicholas Myers, as well as an investor focused on the sector, Orion Industrial Ventures' Molly Wilkinson. Our moderator is Dr. Douglas Wicks, former program director of the Advanced Research Projects at ARPA-E. Over to you, Doug.
Thank you for the introduction, and thank you to SOSV for having this panel at the climate conference. The major thing I want everyone to keep in mind is that nothing discussed at this conference happens without mining and mineral processing. Everything we're working on, whether it's AI, energy tech, carbon capture, alternative energy sources, nuclear, it all depends on materials that are mined out of the earth. And these critical minerals are right now of extreme importance due to the fact that they are the center of really of geopolitical rivalry around the world. The United States and Western Europe have really let their mining and mineral processing capabilities lag. And right now, we will find lots of news about China using large amounts of pressure from these critical minerals and access to them in trade negotiations. And it's really quite a serious issue that really could have major economic and national security issues for much of the world. Should China continue to use these as a weapon or an instrument in negotiations? And with that, I'd like to go to the panel and we can get started. And what I'm going to do is give everybody a couple of minutes to introduce themselves. And I'll start with Randy Allen.
Hi, everyone. I'm the co-founder and CEO of Stillbright. So Stillbright is commercializing a novel copper extraction method that is good enough to replace smelting. So what this means is that we can both get high recovery yields, say up to 99%, as well as the ability to get other critical minerals that are co-located with copper.
And Nick.
Hi, everyone. I'm the co-founder and CEO of Phoenix Tailings. And at Phoenix, what we're building is a full end-to-end supply chain for specifically rare earth metals, but also with the capabilities to expand beyond that. So what we do is we go from tailings, or a mining waste product produced readily available in the United States and Western world. We take that raw material and we process it all the way to the final metal and metal alloy. And we recently just launched our large-scale commercial operation for metallization, specifically doing that oxide to metal conversion stage in Exeter, New Hampshire, all free from Chinese technology, free from emissions, and built to power the global economy.
Thank you. And Molly.
I'm an investor on the Orion Industrial Ventures team, the venture strategy of Orion Resource Partners. Orion Resource Partners is an $8 billion global alternative asset manager focused on the metals and mining industry. We invest across the value chain with a variety of strategies, including construction and acquisition financing for mines, royalty-based production financing, public equity investing, and venture technology investing. As a member of the venture investment team, I focus on seed to Series B technology investments to enable an economic and sustainable critical mineral supply.
Thank you. So we'll move to a couple of questions for the panelists. Nick, I'll start out with you. You've gone from lab opening to opening a manufacturing site in 5 years. What's your secret in doing hard tech fast?
Thanks, Doug. Yeah, I will say things are a bit different when we first started with me, Tomas, and Anthony, Michelle, and Aunt Mikey, all working with mud in the backyard was our first starting point. It was 5 years ago. But honestly, it really comes down to the people, right? So you have to hire a combination of people that understand both the large scale up of systems, right? Now we're at the 200 metric ton production stage, one of the largest rare earth metallization facilities outside of China, currently operating and shipping product globally at the metric ton scale, right? You do need people to understand how that works. But you also need people that really understand how deep technology works and think differently. Every day when you're building in the sector, you have to challenge the status quo. So you have to have people that are going to do the same thing, right? And that's really what we focused on. We brought in the best people, the brightest people to help solve this problem, right? Step by step, stage to stage, making sure we can scale further.
Okay. And what lessons have you learned that maybe could even do it faster? As you know, I'm a very impatient person and have pushed teams to be faster. What should they know, that you've learned the hard way and gotten your scar tissue from?
Yeah. Well, actually, it comes down to the tech and operations. So when you build novel technology, right? So say you're building, what we do is stabilize chemistry. It's never been done before in history, right? You're de-risking the actual science of how does that work, right? That's the first thing that you have to do. But there are many ways to do that. And then there's a different thing called operations, right? When you're actually running a full production facility. That in itself is very, very challenging. People don't understand that there's different ways to run an operation. Many scientists, researchers, and early stage folks just assume that, you get rock in, you turn metal out. Once you have the science down, it's going to work. It's not really the case. Right now, we're running that facility in Exeter, but it took a lot of work to be able to get that up and running. We're running a 24-hour shift of a production that's never been done in history before. So the lesson I would say is bring on the ops people way earlier. Even if only one person, right? And myself, so I ran ops before, so it was very helpful. But I would say that we want to bring on more ops people early that have a mindset of what does it look like when it's supposed to be scaled. That will be very helpful as your researchers look to de-risk how does this run, right? Because many different things you'll see something as simple as, okay, your harvest of raw material. Traditionally, what we've done is we've done a, 5-pound harvest. Well, now with these new operation, we're doing 50-pound harvests. Believe it or not, 50 pounds is a lot for someone to lift at a given time. So you have to make sure your structure is set up in an ergonomic way that make you can actually run a process, right? And if we had thought about that a little earlier, we would be able to streamline that and be more effective.
Randy, a question for you about Stillbright's mission. Targeting copper is a very different and larger market than the rare earth elements. I mean, by orders of magnitude. Um, what do you see as the barriers to developing technology that may be moving millions of tons? Nick just talked about operations issues and lifting 50 kilograms of material, 50 pounds actually. You're going to be looking at tons.
There are lots of challenges that can be pinpointed. Coincidentally, we are in the market of bringing on a ops lead right now, so we're trying to learn from other people, and so and have already started to make some decisions on lifting heavy things. Our pilot scale electrolyzers, a couple 100 pounds. So uh, we had to navigate that early, but a couple of things that I would want to pinpoint as key challenges um, within this like massive market. We're talking, uh, you know, uh, 23 million tons of copper being needed every year. One is that we're not the first people to have the genius idea of trying to replace smelting. There's actually lots of attempts that have been done in the past. So to really get the buy-in from the majors, we need to be further at further scale than what you would expect, and that brings about a lot of skepticism for as we talk to the right people. Um, the other thing is that we want to scale up as fast as possible to basically take advantage of the push for critical minerals, especially around copper. Um, and so it's been one key thing that we have to overcome is going from our pilot scale, which is uh, relatively small, is able to produce 2 tons of copper per year, but then quickly get up to 10,000 tons of copper per year in just a couple of steps. And the only way we are able to do that is by surrounding ourselves with the right people. So these are like great advisors who have intimate knowledge of those past hydrometallurgical attempts to replace smelting. They're telling us all the different ways that these other systems have failed. And also, we need to work with other people who have the money and the desire to commercialize very quickly. So these are often the mid-tier mining companies that have a little bit of money and that can pay for our capex, and they've been really essential for our growth, our planned growth over the next couple of years.
Okay. I'm going to sneak another question in on you. And copper ore is notorious for containing lots of other things aside from a 0.5% ore. There's other critical minerals that are typically thrown out. Does your process address the other issues that are there, the other potential resources that could be there?
Yes, and we found that this was an essential part of all of our communications with customers. Basically, we say we can recover copper. One of the next questions is, well, what about the gold? And so that is something we had to prove out very early on in our process, and really highlights how we try to differentiate ourselves versus the other hydrometallurgical approaches that usually just focus on the copper itself. So for us, yes, we can process and recover the other materials of interest. Usually that is gold and platinum, but also other critical minerals that can be present, say like tellurium or and whatnot. So it's definitely something where we're trying to lean into the sense of full value mining, where we're able to get not just copper and the potential co-products, but also byproducts as well, like high purity sulfuric acid.
Molly, as the one on this panel that represents money, so we have two companies, one that's already moved into production, one that has aspirations to get there. Um, I have two questions for you. What differences do you see in investing in the mining and mineral processing space versus what the rest of this conference is about, the general energy and climate issues? What are the key differences that people should understand?
Thanks, Doug. Those are all really different businesses to invest in, and even between a company like Phoenix Tailings targeting rare earths and a company like Randy's targeting primarily copper, there are very significant differences. Compared to other energy-related technologies, mining and mineral processing technologies often have very specific and technical use cases where sector expertise is essential. In in our view, every mine and every ore body has its own unique composition and challenges. And at Orion, we've mitigated that somewhat by hiring a very expert team to assess each mine and each project. This can make stamp and repeat technology scaling assumptions very difficult, even as mining technologies must operate at a very large scale, depending on the commodity, thousands to hundreds of thousands of tons per year, with ore grades in the 0.5% or low single-digit percents. To mitigate this from the startup side, we look for early investment with strategics such as junior, mid-tier, or major miners, without IP loss or exclusivity to inform these technology development pathways and avoid going down blind dead ends. We also spend a lot of time on technology integration and ease of adoption. So, does the technology target a major pain point, or is it a nice to have in the context of a very large mining operation with lots of problems and lots of fires? At the same time, does it potentially compromise a 24/7, 365 high volume continuous mining operation? Well, that's difficult to implement too. Um, it's best if the technology is at least somewhat siloed to mitigate risk.
Nick brought up some key issues that he thought to go fast. How do you evaluate those, Molly? The team, really the emphasis on the team. How much of a challenge or how much of an emphasis do you put on understanding the founders and who they brought?
It's pretty essential. And in the mining industry and in mining tech, there's a dual role that the team has to play. They have to be experienced in operations, as Nick has said. They have to understand how to implement these technologies, but at the same time, they have to have an innovator's mindset and the speed and the drive to do things differently, which can be somewhat difficult to find in a senior leader who has been operating an asset the same way for decades. And we try to strike a balance. We want some experience, but we also want that drive and passion to change and to do things differently.
Okay, thank you, Molly. Okay, now I'm going to ask some questions for the panel in general, and I will go around. And the first question I have is, in the United States in particular, we've had a major change in direction with the new administration starting some 9 or 10 months ago. Um, you know, how do you see the administration's priorities impacting the mining and minerals processing space? I'll start out with Nick.
So I see things moving a lot faster. Historically, rare earths in particular are the definition of uncertainty, right? And my father used to tell me this all the time when I was growing up. But what does the market hate most in the world? Uncertainty. So thankfully, we're very excited to have a president who's very tough on China, is very push forward with American reindustrialization, and it's going very, very well, I think, across the board. And you're seeing a lot more investors pay attention to this. And ultimately speaking, you have to find ways to mitigate risk or increase return for investors. And that's how you get investors to play into the sector. And that's what causes growth. And that's what inspires the future of this industry. So the current administration has taken a lot of efforts to both mitigate risk as well as increase return by directly investing, in fact, in companies like MP Materials or the Nippon Steel deal, right? There's numerous different examples of this happening in the sector right now where you see that ability to both reduce risk as well as increase return. I'm hoping to see more in the future because at the end of the day, the mining and metals industry is a very capital intensive one, meaning that you're not going to be able to build it like you can in software. You can bootstrap things like, oh, bootstrapping in mining and metals doesn't really work at all. You have to find a way to bring in outside capital from both customers, from investors, and ideally and eventually government support in a lot of the way through. That being said, I think the private markets are very frothy and it's moving forward really quickly. So all positive signs right now.
Okay, thank you. Molly, your thoughts. You might even want to talk about some of the administration's trust that they put into Orion Resource Partners going forward.
Yes, thanks for that. As Doug was alluding to, we did recently announce a 1.8 billion partnership with the U.S. government and ADQ, the Orion Critical Minerals Consortium, to invest in critical minerals and emerging markets mining projects. And we're very excited for that partnership to unfold and to share more about it as we unveil some of the projects that we're looking to support. On both sides of the market, so the mining project development side and the mining technology investment side, government interest is really heating up, and we're very excited for this market to become more active over time. We're currently in what I would say the ecosystem's infancy for mining technology and startup investment, but there were a number of recently announced funding programs via the DOE, DoD, and other offices, especially the Mine of the Future program, that create a fertile environment for innovation, especially in processing technologies and sustainable extraction methods. We're excited to see those scale, raise private capital, and grow to development stage projects.
Randy, how does you're looking at the tea leaves tell you that this is going to be good or bad for Stillbright?
I mean, if you look at the rest of the climate sector, it's a little rough out there. But with mining in particular, it's actually been a lot of tailwinds for the sector, but for Stillbright in particular, there's a good amount of tailwinds around copper potentially becoming a critical mineral now. And so that we'll be able to tap into a production tax credit for that. But the key thing really is money. I mean, as both Nick and Molly brought up, um, the mining sector can be very capital intensive, and while we are getting a lot of attention from mining companies and off takers to help support some of that those development costs. Tapping into non-dilutive funding from the government is extremely transformational for Stillbright. So whether we're talking about scale up or the mine of the future, there's several opportunities that we plan to apply to and and put a lot of resources behind to try to tap into these resources, since that would drastically change the amount of money that we need to fundraise in the long term and really make it so we can accelerate our progress so that we can get commercial units out within the next few years rather than additional 1 or 2 years later.
And kind of coming back, it was mentioned a few times, the mine of the future. Secretary Wright has announced the Department of Energy's, mine of the future work, which is kind of vague at the moment. If you had the ability to give guidance into the people writing up the mine of the future funding opportunities, what do you want to see out of this or out of subsequent funding from the government? So what type of awards do you want? What type of size do you think makes a difference? in going forward. And I'll leave the money person to the last one at this one because she's just like, we want all the technology paid for and de-risked, I'm sure. Um, but Randy, you mentioned a little bit. What would you want from this mine of the future?
Yeah,
Activity?
so we've been really trying to showcase that we can leverage these opportunities when they're worth upwards of $10 million, say $50 million. That those are the types of awards that really change our trajectory, and so that those are the ones that would love to see moving forward. And so the other things in terms of the targets or the criteria for those rewards, being able to onshore production of critical minerals that's dominated by production in China, that's something that I think should be a huge target. In addition to showcasing the ability to recover other critical minerals, the more critical minerals you can get, the better. Those are the types of things that I think makes the most sense for the country, and just coincidentally aligns with what Stillbright is aiming to do.
Fortuitous to have your
Definitely.
being, to be lined up. Nick, what do you want to see come out? You've had a number of DOE awards in the past. Um, what do you want these to do to drive your um, company forward and impact on the economy?
Absolutely. So I'll speak a little bit broadly. We've been very thankful to have an incredible program director at RPE who's been very supportive, which we strongly appreciate. Um, but I think a lot of people get lost with what critical minerals actually are, and specifically rare earths, and how the value chain works, and that can cause some challenges when you're looking at the funding mechanisms. But you have the primary value chain, right? That's the concentrate, the oxide, the metal, the magnets. That's like the main thing for rare earths. You also have the secondary value chain, which is all the things that fuel that. That's hydrochloric acid, sulfuric acid, caustic. You have salts. You have other different components that layer into that. I also like to factor in that you also have automation components like robotics and other things like this that help make sure your actual infrastructure is successful. And then lastly, you have your tertiary, right? These are things like real estate, power, access to labor, all of these different things. And in each part of this, primary, secondary, and tertiary, you need to make sure the funding is available and the support is available to help build a cohesive industry. So it's not just about giving out large swaths of cash. Like, yes, SBIRs and grants are very, very helpful, especially at scaling up novel tech. But you can also layer in debt facilities for large production operations. You can do equity in certain cases. And you can also mitigate the risk of the system by enabling things like price floor guarantees, or just making sure that they don't have the same taxes. Like, there's a numerous different ways to actually approach this. And it's about looking at each stage of the value chain, primary, secondary, tertiary associated with it, and at what level is that technology and commercialization of the company, and making sure you have the funding mechanism tied directly to it.
Okay. Thank you. Molly, your thoughts about this mine of the future activities? What should Secretary Wright be focusing on?
For us, we're definitely interested in the mine technology proving grounds on the venture side. Having a actual mine site or mine testing facility accessible to a broad range of mine startups would be a game changer for the ecosystem. Now, of course, there are small scale versions of this, such as the Edgar mine in Colorado or Norcat in Canada. However, for most startups, it is difficult to access and operate on a mine site. Um, and it requires getting active permission in a way that is difficult to navigate and often makes for venture investors it difficult to evaluate the full technological progress of a company or technology. Having realistic de-risking and access to pilots, not constrained or entangled in minor or internal corporate timelines, would meaningfully clarify the path to building and scaling in mining tech.
Okay. Thank you, Molly. Okay, so as we come down to the last couple of minutes, I'm going to ask each of the panel members to say a quick sentence or two um, about what the other participants in this climate week should be taking away. So you're speaking to an audience that is not thinking about mining and minerals. What is, in quick summary, if you want these investors and entrepreneurs in other fields, what should they know about mining, as they take on their efforts? And Nick, we'll start with you.
Metals and mining are essential to every form of renewable technology, every form of modern technology. It's a completely bipartisan issue. You need it. The question here in the climate community is, do we want to support things that are going to help us in a short term that are fast, but also scalable, or are we going to ignore it and focus on other things? I think right now is a very important time for the climate community and everyone to come together and focus on actually deploying capital, deploying technology, deploying resources, deploying people, whatever it might be, into the mining and metals ecosystem, because it is a bipartisan issue. You can support everything that you do in this whole sector. All the portfolio companies that currently exist, whether it's renewable energy or electric vehicles or any type of thing, use the mine and metals resources. And we need to make sure it gets up and running fast, but also safely and good for the world.
That was a very good 2 sentences, Nick. Molly, your 2 sentences.
I think I'd echo and expand on that, because while mining in metals is essential to the energy transition into the climate, it is also essential to the broad issues of electrification and digitalization. And while we're in this AI bubble, where all my fellow venture investors, to some extent myself included, love to talk about AI and love to talk about its potential to make the hard things easy. Some things like mining remain very hard and very critical to powering these AI data centers and to powering our world. And in that respect, I'd like to encourage more people to go out and do hard things.
Okay. Randy.
Yes, piggybacking on the other sentences. Of course, copper is essential for running electricity, but one of the things that we've really tried to focus on nowadays is the criticality for data centers and AI, just to uh, make that connection that growth of that industry is going to be limited by the critical minerals that power those. And so making a connection to this hype cycle is generally good for other entrepreneurs. The other thing I want to highlight is one thing that we try to do is not just meet cost parity with producing copper. I feel like a lot of people who are in the commodity space, they think if I could just hit cost parity, it will be great. But I think that's just table stakes. You need to also seek out differentiation and value creation and showcase that there's a huge incentive for someone to move from the normal commodity to your fancy, cleaner commodity, generally speaking.
Okay, so as we draw a close, I would like to thank the participants for your involvement, and thanks to SOSV for allowing us to present this panel. Best wishes to all.
Well, it's certainly clear that the U.S. strategic vulnerability around rare earth supply is a huge problem across many sectors, renewable energy not the least. We have to hope that new mining and processing technologies can put the U.S. back in the game soon. For our next session, let's go back to New York City and our IndieBio office there and bring back our newest GP, Deborah Zajac, who I also introduced yesterday. Deborah brought 20 years of venture capital and startup experience in deep tech to SOSV and has worked with a dozen corporations on 15 venture funds as part of her job in scaling Touchdown Ventures, now Cerity Partner Ventures. Previously, she spent a decade at GE Ventures and GE's research labs investing in, spinning out, and building and partnering with startups. SOSV is very lucky to have such an experienced star on our team. Over to you, Deborah.
Thank you, Sean. I'm happy to be back on deck, this time to talk about a category that's a top carbon dioxide emitter. The name of this session is Goodbye Limestone, Hello Greener Cement. Cement production is the third largest source of man-made CO2 emissions. Dozens of startups have chased new technologies to solve for one or both of cement's dual emission sources, energy consumption and the chemical process of calcination. At Brimstone, CEO Cody Fink and team have all but eliminated the latter source by switching from limestone for calcination to calcium-bearing alternatives that still yield conventional Portland cement. At Cocoon, co-founder Will Knapp leads an effort to turn steel slag, a waste product from steel mills, into material for cement production, a form of industrial circular waste valorization that also reduces net CO2 emissions. Our moderator for this session is Katie Fehrenbacher, a climate tech reporter at Axios. Over to you, Katie.
Thanks, SOSV. I'm excited to be here to chat with Will and Cody about this huge opportunity and somewhat daunting space of cement and concrete. Cody and Will, how did you guys get into this, a little bit daunting space, the hard to abate sector, if you will? Cody, why don't I start with you?
Yeah, thanks for the question, Katie. So, first of all, I always take a little bit of issue with the hard to abate naming. I think that was named with considerable hubris when we felt that electricity was easy to abate. Right? I think that we're maybe 20 years on since that since that name has taken off, and electricity has not been cleaned up yet. So I think it is really just different to abate. Right. The key thing about cement, of course, is that the majority of the CO2 emissions associated with producing cement come from chemistry, not energy. Right. So today we make cement by taking a rock called limestone. That rock is about half CO2 by mass. We have to release that CO2 from the rock in order to get at the calcium that's in that limestone and turn that calcium into ordinary Portland cement. And for me, I happen to be a chemist, right? So that seemed like actually a much more straightforward problem than an energy problem. And I got into it because I wanted to have a large impact on climate, and I wanted to do something that matched my skill set. And I noticed that cement and sort of mined materials overall had less funding per ton of CO2 emissions compared to any other sector. And at the time, I was in my PhD trying to think of something to work on, and it seemed like the right cross-section of size of problem, few people working on it, so it could have a high marginal impact, and then also a problem that was well suited to my skill set.
Will, what about you? How did you get into this space?
Yeah, I think very similar to Cody. My background is geochemistry, so I was doing my PhD on all things sort of carbon removals, carbon sequestration, carbon mitigation, that kind of stuff. And from a technical standpoint, it was very obvious that the cement industry posed this huge opportunity for decarbonization, and can really push the needle on carbon removals and mitigations. And as a result of that, and at the end of my PhD, I was really looking for opportunities where I could do impact based work, and the combination of the size of the industry and the carbon abatement potential was a match for me. And that's why I decided to start Cocoon with my two co-founders, Freddie and Elliot.
Yeah, can you run a little bit through Cocoon's technology and how it works?
Yeah, so Cocoon centers around electric arc furnace slag, which is the slag that's made when steel is made in electric arc furnaces. In the UK and the EU, a lot of steel is made through blast furnaces, which is fossil fuel powered furnaces. But in the US, it's mostly electric steel these days. And that slag, that byproduct, is currently underutilized. So our technology takes that electric arc furnace slag and we turn it into what's called a supplementary cementitious material, which is a powder that can be cut with ordinary Portland cement in order to reduce the overall emissions of that OPC. So our electric arc furnace slag costs us about 80 kilos of CO2 to make it and make a ton of it in comparison to OPC, which is, approximately a ton of CO2 to make a ton of OPC. So yeah, there's a big carbon saving available there.
Okay. Cody, can you walk through brimstones quickly too?
Sure, yeah. So in some ways it's similar, right? We noticed that production of cement today use limestone. Like I mentioned previously, limestone is about half CO2 by mass, and you have to get rid of that CO2 into the atmosphere in order to make cement. Our whole philosophy has always been that, the only system that scales globally is the global financial system. So if you're going to decarbonize anything, it has to be a substantially lower cost and higher profit process. And part of that for building materials is you need to stick with Portland cement based cements. And that's because there's, considerable risk adjusted costs to using sort of novel cements. So we figured out that you have, in order to be lower cost and higher profit, you have to stick with making Portland cement. And I want to be clear, right? SCM is separate from cement. SCM is something that's blended into all Portland cement. So that is, very much compatible with that philosophy. And we said, okay, we need a different source of calcium. So we looked around the world and we realized that limestone was certainly not the only source of calcium. There's also these rocks called silicates, which many of them are calcium bearing. And that actually contains most of the calcium that's in the world, are these calcium bearing silicates. And we spent some time developing a process that can make ordinary Portland cements the exact same cement from these silicates. And these silicates have no CO2 in them, so you don't release the CO2 associated with the rock. The only CO2 emissions are associated with energy, and that could either be CO2 free energy or CO2 intensive energy. Regardless of the energy you use, our process is lower emissions, but by a substantial margin. Could be zero emissions, and even depending on the time scale you look at, could be carbon negative. But fundamentally, the core of the technology is a separations or refining technology that takes a rock, extracts the calcium from it, makes ordinary Portland cement. We also extract the silica and make supplementary cementitious materials, and we also can make a number of co-products. One we've announced publicly is smelter grade alumina, which helps juice our economics.
Okay. And one thing that I thought was particularly interesting that you said about kind of working with it in this current framework of the cement and concrete sector. I know previously iterations of startups have tried to kind of like compete directly with the industry, and there's kind of more of an emphasis of like working with incumbents or like working within the structure that's already created for the sector. And I'm wondering if that's a learning that has been learned over the past, many years of trying to scale this industry.
Yeah, I think so. From our standpoint, obviously we're a couple of rounds behind Brimstone, but we still have really good engagement with the cement industry, and principally they're very concerned about their carbon footprints, but also they're very interested in cutting the cost of a ton of cement, and being able to do that candidly with new technology is something that's super interesting to them. So I think what's a key learning for us over the past couple of years is that the carbon benefit is nice, but it has to be backed by some compelling financials as well. And I think Cody was kind of touching on that in what he said previously. But yeah, the idea of trying to compete with the behemoths in the cement industry is very, very tricky, very difficult.
Yeah. In terms of the opportunity here, I've noticed and has been reported on that hyperscalers are starting to kind of use low carbon concrete and cement for data center projects or just for operations, and kind of being a little bit of a catalyst to try out these materials for the sector. Why are they interested in this technology, and how are they helping the sector?
Great question. So as you and Axios actually reported on, Amazon and Brimstone have a commercial arrangement, and it's a pretty exciting commercial arrangement because it is actually physical offtake, or I say it's a commercial arrangement around our physical product. That is, critical for Brimstone, of course, because it's not just selling attributes; it's actually selling the material. And in order to create any attributes, you need to actually put the material in a building, or else the attribute's not created. And it basically just shows that if you make ordinary Portland cement, then it is possible to sell the physical product. That's still not clear for alternative cements, and that's Brimstone's strategy in a nutshell, right? Is that we want to make it easy for the customer to buy. The hyperscalers all have large climate goals, and they appear to be sincere about these goals. And they're also building an enormous amount of data centers. Amazon, who we have a commercial agreement with, of course, builds a lot more than just data centers. Everything from fulfillment centers to Whole Foods as well are buildings that Amazon builds. So they have their carbon footprint is especially heavy on the built environment because of that. But because the data center boom, all of the carbon footprint. So these hyperscaler companies have become quite good at procuring clean energy, either directly or through offset credits. So I think I was on a panel at Climate Week with someone from Microsoft who mentioned that the majority of Microsoft's data center emissions are actually associated with the building materials, right? And that's because they're so good at procuring clean energy. So, as long as these companies stick with their climate goals, which it seems like they are, they they certainly need to focus on building materials, and they're providing strong market signal for that these building materials are desired. And for Brimstone, however, things are like that. That is great. It is exciting to have that strong market signal, and it's very helpful. I think it speeds things along. But like Will was saying earlier, the only way to actually scale is to be able to have a cost competitive process, right? To be able to make these products at market rate or better than market rate, right? And be more profitable, because that's the only thing that's actually going to scale globally, right? Decarbonizing data centers and hyperscalers is not going to decarbonize cement globally. And you really need something that is cost advantaged. I think that in the beginning, with first deployments, technologies are often more expensive. And it is helpful to have that market signal to pull these technologies into the market. But regardless of that market signal, technologies that are lower cost tend to scale.
Yeah. And you mentioned Microsoft. They did an investment in Forterra recently, another company in this space. What are the challenges, the biggest challenges? I mean, this is an emerging sector. Nobody is producing this at a mass commercial scale yet. What are the biggest challenges ahead for you guys?
Yeah, it'd be interesting to understand Cody's perspective on this as well. But I think going back to the hyperscalers, it's very interesting because they kind of provide a new route into the market, or to garner offtake agreements, in relation to maybe 10 years ago, when you'd be looking for an offtake agreement from, one of the 5 or 6 cement majors in the world. And what that really helps you do, being able to procure an offtake from Amazon, is get that long-term data from, tilt slabs, properly engineered structures, in order to build confidence in the material, such that engineers will be able to specify it in years to come. I think, the biggest challenge that I see is really trying to speed up that regulatory process, and get the material in the ground, and show people that it's durable, and it's here to stay, and that it performs how it is expected to. And the hyperscalers like Amazon and Microsoft are they're really helpful in that regard, because they do allow you to have product in the ground that folks can come and see and say, yes, it's still there and it's durable.
And kind of, I know one challenge, the changing federal policy that's emerged this year. And, Brimstone recently got kind of caught in the crosshairs, had a grant canceled. Cody, can you walk us through the process of, when you kind of first learned of this, and then kind of how you are able to navigate it?
Yeah, so we had a $189 million award through the Department of Energy for a plant that produced supplementary cementitious materials, ordinary Portland cement, and smelter grade alumina. And that was a commercial demonstration plant, so a first of a kind commercial plant. And back in May, we were alerted via email that our award was being canceled. And I have to say that we, like, Brimstone philosophically believes that things that are lower cost will scale globally, and government support helps that move faster. A lot of times, that's not universally true. But if government support is necessary, then the technology will not have the market size and scale impact that we want it to. So our fundraising strategy and our deployment strategy has always discounted government awards heavily. And that served us quite well in this circumstance. Right? So at no point in Brimstone's history have we ever been depending on that money. When we've raised funds, we have, for example, if you need matching funds, we've always raised the full amount that is needed, not the amount is matching, and we will, count that money once it's spent, right? And not before. So, when that award was canceled, it wasn't like it was disappointing, but it wasn't a huge shock to our system because of that. So I think I don't have much advice for companies that are sort of navigating a award cancellation where they depend on those funds. But if you are in a position where you have an award and you think it may be canceled, or if you don't have an award but you think you might want to apply for some in the future, I would highly recommend not depending on that subsidy. And that way, the uncertainty associated with that subsidy goes away. I think there's also, like, you ask what some of the biggest risks are, and the biggest risks are associated with timeline. And Brimstone thinks very hard about how we can reduce timeline for and also reduce cost for building large facilities. And when you take federal money, you're forced to go through a NEPA permitting process that you may not have to go through otherwise, right? So Brimstone, we can use rock that is already quarried in existing quarries, which means that we don't have to build on or quarry public land, which means that otherwise we would not otherwise have to go through that what's called the NEPA permitting process in the United States. So not having that award probably actually saves us about a year of timeline. There's we were so there are potential benefits, right? Of course, there's more money that we need to raise, but it's actually Brimstone was planning on raising all of that money regardless, because that's our strategy. So it doesn't materially change. It did not materially change Brimstone's trajectory.
Okay. What are the next steps for your plant? I mean, this is the big commercial demonstration, scaling out the technology. What are the next steps in the timeline?
Yeah, so we're in an engineering phase right now, and soon to transition into a permitting phase. So that and then when we start building, we'll certainly need to raise, or in order to really start building, we'll need to raise more money.
What about you, Will? You're in the process of planning your pilot facility, I think. Can you tell me more about the next steps for Cocoon?
Yeah, so the pilot plant has now been constructed and is currently operational in the southern US. So for us, it's a lot of testing. We're still gathering data on the exact operating configurations, and really what we're particularly interested in is getting a really, really good understanding of how our one module that we've made, what the OPEX associated with running that is, such that we can double check our techno-economic analysis and take that step before we scale up to, I guess, scale laterally, because our technology is modular. So yeah, it's a lot of testing and a lot of hard work on site.
Cody, do you have any kind of lessons learned about, since Brimstone has gone through that specific process? Like, what are the things you need to pay attention to and not trip up on?
Well, I think it sounds like Will is quite well prepared for this, right? The key thing is validating the techno-economics, right? And that requires a healthy dose of realism, right? And it also requires a healthy dose of creativity.
What do you mean by creativity?
Yeah, so the healthy dose of creativity is we have to recognize that industrial processes have not really been built in the United States for 50 years, 70 years, right? I think the last major cement plant had pretty dismal economics that was built in the United States. That was in the early 2000s. The last major like oil refining technology, I think, was an ethylene cracker in Pennsylvania in the early 2000s, but that wasn't a full oil refinery. Like there hasn't been an oil refinery built in the United States since the 70s, right? And same with the fertilizer plant, right? So the traditional engineering model is clearly not working for capital deployment in the United States. We have to take lessons from countries that are deploying capital well, right? Like, just take that, India, China, these are companies that, are building things. And, there's a few things you can learn, right? Like basically, you can take in as sort of a first principles approach, right? And so what Brimstone does is we look at a buildup of the costs, we see where they come from, and then we calculate what we might call an inefficiency index, or someone might call an idiot index, which is the ratio of the estimated cost to the minimum possible cost that's like bound by the laws of physics, right? So the ratio of the cost of the materials to the cost of the equipment, or the ratio of the cheapest labor that's on Earth relative to the what you're being charged for labor, and try to figure out how you can learn from these things in order to, reduce the cost of deployment so that we can actually deploy technologies within the United States and everywhere else in the world, and decarbonize the entire world's production.
What does this sector need to scale? Like, what do you need? Is it more financing? Is it better policy? Is it more aggressive off-takers? Like, if you had a wish list, what would it be?
Probably all of those things, I guess. The thing that probably keeps me up a bit at night is the folk funding. I think that's super interesting point. It's been, it's a rare point in the world history that, so many different and new technologies are being built for the first time. And, how you actually finance that and de-risk it, and, that's all very, very interesting. And I don't think it's necessarily clear how you do it outside of, taking the equity hit and raising privately. As Cody alluded to earlier, it's best practice not to rely on, public funds and that kind of thing. So yeah, the folk for, debt financing for folk, I don't know if that's a reality soon. But yeah, that's a super interesting area for sure.
Yeah. So first of a kind financing, essentially. Like, Cody, you're going through this right now. I mean, do you have things you can comment on in terms of like creative financing with opportunities?
Yeah, so all the things that you listed, Katie, I agree they're all helpful, but I think they can actually, I kind of like the economist framework, where economists are very good at translating everything into money, right? And I think that all of those things, whether it's, offtake policy, government support, removing permits, finance, like all of these things, they're all translatable into money. Like, what do we really need? We need more capital, right? And what's going to unlock capital? Like high risk adjusted returns. Right. And we need to think, as companies, we need to think very carefully and very clearly about how to achieve high risk adjusted returns. So at Brimstone, in our piloting effort, we spent a really long time, or I guess let me back up a little bit. Right? Large capital intensive things are going to be long timeline, right? Whether it's a data center, or it's a cement plant, or it's a steel plant, or an oil refinery, or a skyscraper, right? These are big, expensive buildings, and they take a long time to build, right? And there's no one has ever done anything differently. Not Tesla, right? Not OpenAI, right? And I think that tells us, and you can look at like what you think the minimum amount of time that all the tasks that are involved in building something takes. It tells us that maybe you can shorten the build time from 5 years to 3 years or something like that, but you can't shorten it to 1 month, right? So the building these big plants, it's going to be capital intensive, and it's going to be long timeline. So how do you get investors comfortable with that? And Brimstone's philosophy is like, if you're going to put a lot of money in, then you don't want to be risking that money, right? Especially if there's a relatively long timeline. So at Brimstone, we say, well, you need certainty of return, and you need high return. So we spent a long time trying to figure out how we could put what's called TRL-9 unit operations together. That is to say, pieces of other plants that have scaled fully in other industries doing the same or similar chemistry, and how we could put those together in a new way to do the chemistry that we want to do. And by doing that, we take the tech risk and we bring it down to nearly zero, right? Because you're doing the same chemistry with the same piece of equipment. You're just integrating them slightly differently for a different rock. This is actually a very, very common thing in the mining industry. There are new plants built all of the time because no ore is exactly the same. So you always need to put some new equipment together slightly differently, or I should say, old equipment put together in a new way. So Brimstone, spent a long time thinking very carefully of how we can have very, very low technical risk in order to make our, TA and economic assumptions both very rigorous and very believable, and also have very, very low risk in creating that return. And then we also thought, how could we make our returns as high as possible? And one of that is co-products, right? One of the things that we say is our process actually makes seven times as much product per ton of rock mined than the conventional industries that we're displacing or displacing, right? That's SCM, OPC, and smelter grade alumina. And but that is so one of the reasons why we added that alumina co-product, right, is because it really was able to, juice our returns without increasing technical risk. So I think really, when you've seen, large capital deployments that are long timeline, like think of it data centers or a, electric vehicle factory or something like that, these big, capital intensive deployments, they are relatively certain technical risk and relatively certain return. And if you can, and so Brimstone spent a long time creating those things, and that's I think that will serve us well in our capital deployment strategy, and certainly serve investors well when they want to make money.
Yeah, I think that's one of the key learnings across kind of climate tech sectors, when you're making actual physical materials or hardware, is to bring in that higher margin product. Whether it was Tesla starting with the Roadster, or companies like yourself selling alumina, so you can actually make a higher margin um, to continue to operate and survive.
That's right. And I would also say that, the higher margin is important, but the other thing about the Roadster that's not talked about as much is it was very low tech risk. As in, they didn't need to invent a new type of battery or a new type of drivetrain in order to make the Roadster. They could basically take things that were off the shelf, and that made a very expensive car, right? But that was fine because it was high value, right? And so the low tech risk combined with the high value and high return is really, I think, the secret, the sort of secret sauce for scaling. And that's what Brimstone has been working on and is scaling now.
Okay. What are you optimistic in for 2026, for this low carbon cement and concrete sector?
I think what the hyperscalers are doing is, it's super, super interesting, and, it's inspiring. Like being able to be a part of what is, the next generation of technology and, data centers and AI, and have a big part in the decarbonization or building those low carbon assets for these huge companies, and how invested they are in actually doing it is it's super inspiring. And I think every day we all get out of bed at Cocoon because we know that we're having big impact, and the hyperscalers provide a channel for us to realize that impact. And that's special.
Okay. Cody, what about you? What's inspiring you?
I'm optimistic about an enormous amount of things. So Brimstone's scaling, right? It's amazing. Right? We have a process that's got, that according to our pilot data has great economics, and we've got a process that makes fully on spec commodity products using TRL-9 unit operations. There's very little technology risk, very little product risk because of those two things. And it's a point that 5 years ago, I don't know if I thought we would be here in 5 years, right? And we are, and that's pretty incredible. I'm very excited about it.
Excellent. Thank you so much, Cody. Thank you, Will, for your thoughtful conversation. That's going to conclude our session. And back to you, SOSV.
Thanks, Katie, Will, and Cody. It feels like we're tantalizingly close to solutions for cement. I think the industry is ready to embrace them. As in so many decarbonization categories, it's all about getting these new technologies to market in ways that existing players can easily embrace. For our next session, I'd like to invite Kira Colburn, SOSV's Director of Communication, to do the honors. Kira joined us in March this year from venture firm Workbench, where she was a star for 5 years, and prior to that, she was at the great PR firm Spark. We're very happy to have her here at SOSV. Over to you, Kira.
Hey, Sean. It's a privilege to introduce the next session, as it's a service I hope we can all use one day. Personally, I'd love to use it to get to New York City's airports faster. This session is headlined Joby's eVTOL, From Moonshot to Market. eVTOL, by the way, stands for Electrical Vertical Takeoff and Landing. And as it says in the name, essentially, it's an electric plane that takes off and lands vertically. And Joby is the frontrunner in this field, with over $800 million in VC funding between 2013 and 2020, and subsequently $2 billion more in SPAC and PIPE rounds. Today, Joby is on the verge of offering commercial air taxi services in select metro areas, has 2 operational manufacturing plants, one in California and one in Ohio, and a slew of key strategic investors and partners ranging from Toyota to the U.S. Department of Defense. Joby's path to success has many lessons for first-of-a-kind decarbonization technologies pushing to commercialization. And next, you'll hear from Joby's Chief Product Officer, Eric Allison, who will explain how Joby's tech evolved. Our moderator is Kirsten Korosek, the transportation editor at TechCrunch. And now I'll hand it over to you, Kirsten.
Thanks for joining, Eric. We're here at SOSV Climate Tech Summit. And the focus of the summit had me thinking about how electric vertical takeoff and landing aircraft companies have positioned themselves over the last few years. And I'm wondering if, from the beginning, was commercializing sustainable air travel the starting point for Joby when it was founded in 2009, or was there another underlying mission?
Yeah, thanks, Kirsten, for chatting with me today. I think it's a really great question, and really, Joby was founded with this vision of creating a new type of transportation and some new type of mobility, letting people move through flight in their daily lives. And so, and really the kind of catalyst for this was the technology that was developing and kind of the technology arc that had been improving over the last couple of decades. Really, I mean, people have tried to do personal air vehicles, vertical takeoff and landing in different ways in the past, and it's never really worked. And in some sense, it was really the technology change, which is that set of technologies that many people that are watching this are super familiar with, right? Batteries, high both power and energy density batteries, and the electronics that can actually harness that energy in the batteries and turn it into real work in high efficiency electric motors. And then all of the compute wrapped around that to make amazing machines possible. And that's why we have EVs. That's why we have, the oodles of toys that my kids have in the playroom that have little batteries and do things. Essentially, it's that same set of technologies really that we saw in the early days as having the potential to be applied to small aircraft in a new way, and ultimately, I think in the long arc of things, large aircraft. But right now, really focusing on small aircraft that can do this new mission of vertical takeoff and landing, so mobility that is enabled by lower operating costs and much improved acoustics, which that technology allows. And that's really the driving force. And in some sense, then the fact that you have an all-electric solution that works for that is like, in some ways, almost a side benefit. I think it becomes a primary, really important thing in terms of the economics, in terms of the utility, actually, because there's actually really interesting side effects of landing all electric things in terms of the kind of emissions profiles and where you can land as a result of that. But that's in some sense almost a benefit of this overall technology arc that enabled the mission that we were really going after.
I know acoustics has been a big part of it. So was that part of that early mission, or was it all about, hey, we want to solve this mobility issue, full stop. How do we do that? And then it started from there, looking at flight and, like, what is that origin mission for Joby?
Well, acoustics really can't be taken away from that mobility mission.
Yeah.
In a lot of ways, because we have vehicles, certified aircraft today called helicopters, that can take off and land vertically and that can transport people. And it's just that they have an acoustic footprint that is kind of just the physics of how they operate. And that is something that, I think inhibits the broad kind of like a larger market growth that could happen, even outside of the economics. I think economics also, because of their complicated machines and you have to do a lot of maintenance. And as a result, you have to pay for that essentially on a per hour basis is how we usually think about this. I think that you can't really separate these things in a sense that the idea of having a machine, a type of aircraft that can actually do this vertical takeoff and landing mission, this air taxi mission, in a way that's acoustically much less intrusive, is one of the really fundamental enablers of the new form of mobility.
Mm-hmm. You talked earlier about how it was almost not secondary, but a secondary benefit in a way that the technology that you landed on, not to use a pun, on a talk about air flight, but around the electrification. And I'm wondering if, as you've looked at the industry, has that sort of technology first and sure, sustainable and with emissions in mind and things like that, but has that technology first sort of positioning helped you with investors and even on the regulatory front?
I mean, I think that it is it can sometimes a purity of mission in a way. Like we know like the product that we're trying to build, right? We've been working on this for a while, and we know the enabling technologies. We believe we do anyway. We're still working on bringing it to market, but we've been working on this set of enabling technologies that we see the pathway to achieving the product that we're trying to build, and that's really been the focus. And so all of the efforts, all of the work that we've done toward this, I think it have been along those lines, right? And so I think that the all electric nature of it is really important. Don't get me wrong. I mean, I think that is really enabling of that mission. But it's really kind of comes out of the technology. It's like a new set of technologies that you can apply in this new and novel way. You could never build this aircraft. I mean, you could do it, but it just wouldn't be economically viable with traditional technology, because traditional motors and, I don't actually, maybe it's not even possible traditionally, because you'd have to like cross shaft all these propellers together to try to like build redundancy mechanically into the whole thing, or you just have oodles and oodles of parts from traditional power plants. It doesn't really close. And so that's in some sense the power of the technology kind of arc that we're on, that we're trying to really develop on to make this new product possible because of the advancements of these underlying technologies.
Yeah. Joby is also pursuing this gas turbine hybrid vertical takeoff and landing aircraft. That's a mouthful, that can fly autonomously for defense applications. And why pursue, another powertrain, another fuel source, and even another application?
So we're building. I think it's part of like this the vision of the mission that we're trying to do, right? So we're building this set of foundation technologies, and the all electric air taxi, which is the primary thing that we're working on certifying, was the thing we're working on certifying in the primary path to market, is all of those technologies are necessary, and so we're working on that overall certification of this aircraft. So that means the batteries, the motors, the cables that connect these things together, like the way that the electricity and the signals, the network signals, are distributed throughout the aircraft, the actuators, the electromechanical actuators that are different than anything else in the market. So we're designing, building, and certifying all of those parts. But then when we have that electric air taxi done, we have this set of like really advanced, extremely high performance certified parts that we can then do other things with. And like adding in another fuel source, whether it be a gas turbine or a fuel cell, like a hydrogen fuel cell, which we demonstrated last year, actually, about a little over a year ago in some work that we were doing with the Air Force and under Agility Prime. It's actually like relatively easier than doing this whole thing from scratch. So, we're adding in one more component and then opening up a new set of use cases potentially. And I think that that's pretty interesting that we're able to take that foundational set of technologies and then, either extend capabilities, expand into a different market segment, but still leveraging that core set of things that we've been designing, building, and certifying all these years.
Well, that's like the interesting. I'm sure investors were happy to see that, right? Because there's a diversification, but there's always that balance between not getting too distracted, right, from the central, project, and then these other things that you mentioned, you can kind of apply to. So, are there other applications that you're looking at or even thinking about, maybe even experimenting with beyond the defense application and sort of the core mission right now, which is that urban air taxi service?
We certainly have small teams looking at other future things, future extensions of this, whether or not it's future versions of the commercial air taxi that extend into different markets or different things. And I think that if you look at things like the demonstration that we did with the hydrogen fuel cell, or this work that we're doing and the demonstrations that we'll do with a turbine hybrid, it really, like, those are the proof of concepts in a sense, like very small efforts relative to the overall arc of what we're doing. And they point the way to potential product extensions of this in the civil space, as well as interesting applications in the defense space. And we're taking a hard look at all of those things as we build our future product roadmap.
I understand that these things could change, and you might get down the road on certain one of these and say that it's not the right time. But what to you are the most intriguing, that have, right, at least right now, that you're most excited about, or have some promise at like a very early stage of looking down these various other roads?
Well, I mean, I think that if you look at what we've done and talked about publicly, it kind of gives a good sense of that in a lot of ways. We actually brought in a couple of years ago a company called H2Fly in Germany, which has done a lot of work on hydrogen fuel cell integration and flew kind of one of the first liquid hydrogen fueled small aircraft and demonstration flights a few years ago. And that technology actually fueled fueled the work we did last summer with the hydrogen fuel cell demonstrator that we flew down or out here in California. And then we brought in house a company called X-Wing last year that is working on certified autonomy and maybe more broadly autonomy. They had been working on applying autonomy to existing aircraft. We actually that work kind of resulted in something that we've talked about recently. They flew in an Air Force exercise for the Refer Pack, showing essentially we flew thousands of miles remotely piloted, essentially, or remotely operated, I think is the better word, with our technology called Superpilot. We had a station in Guam, and the aircraft was flying over Hawaii. We had a safety pilot in it as part of that, but most of it was flown from Guam, basically. And so I think that there's interesting applications and extensions of that, and certainly those technologies, we see the arc of how they come together, and in future iterations of our product, enhance the basic vision of the all electric air taxi and extend that into other things.
Yeah, I want to talk a little bit about autonomy and where Joby stands on that, because my understanding is that the urban air taxi, this is going to be piloted. But there has been, just now, there's been talk and conversation about eventually having some flights autonomous. And I know that there's, of course, the ones that you're applying to defense. But what is the specific approach to autonomous flight that Joby is taking and working on? And, what is the timeline for that?
Yeah, so we think autonomy is going to be a really important piece of the puzzle down the road. We made the decision early on that it was not the right thing to include in our initial certification because the regulatory frameworks really, and still haven't yet, I think, evolved sufficiently for doing certified autonomy for a passenger carrying aircraft used in civil applications. And I think a lot of people are working on that. We continue that work that the X-Wing team has been doing, and that we're leveraging it into other segments as well. I think that's a really important piece of it, right? This is a highly regulated space, and so we have a lot of innovation in our all electric air taxi that we're driving into the market, and so we think that the fastest and best way to get to market is with a commercially rated pilot that will be flying these air taxis. I think that in the longer arc, there's certainly, autonomy is going to play a role here, whether or not it's in making the aircraft easier and easier to fly, faster and faster to train pilots to fly, or something else that's a bigger step change. I think that we'll see as both the regulations and the market evolves on this, but that it's something we're paying pretty close attention to, and again, with our work with X-Wing, actually doing quite a lot of technical work in the foundations.
So is it fair to say then that you are actively working on autonomous systems, but certainly not in first product, but through your work with X-Wing and maybe in other ways that you are actively working on autonomous flight systems? Or is this more like in the lab moment? It's not as taking as much time of the company?
No, we're certainly actively working on it. I think the demonstration that we did as part of that ReferPack flights show that, right? That was active work that we were doing, and it kind of flowed out of the work that the X-Wing team had been doing and has been continuing to do as they're part of Joby.
I know that there are a lot of companies out there that are specifically working on like automated flight or automated safety systems within the cockpit. And I'm wondering if there are any safety systems that Joby specifically has innovated on or has partnered with to sort of level up existing safety features that you see in a more traditional aircraft today.
Well, it's hard to separate that question out from the kind of fundamentals of the entire aircraft, really.
Yeah.
This aircraft is architected differently than any traditional aircraft is, right? So we actually have essentially built fault tolerance across the propulsion system, across the computers, across the sensor suite. It's a fly-by-wire aircraft. And so in some sense, it's wired for autonomy from the very beginning as well, and except that we have pilots inside flying it, right? And so it's really hard to separate that out. We have a very distinct and very clear set of requirements that we've worked with the FAA to kind of refine and write down essentially. That's appropriate for this type of aircraft because they haven't certified one like this before. And we're driving hard against that and every day engineering the systems to meet that high bar that the FAA sets.
Yeah. Well, as I mentioned earlier on in the conversation, Joby has been around for about 16 years now. When Joby started, it was pretty small, pretty quiet. Today, it's quite different. A publicly traded company doing public work and doing public demonstrations, including recently in California. And I believe that Joby has done something more than 600 test flights this year of varying durations and distances, but not quite yet at that commercialization. So, here's my cheeky question. What's taking so long, Eric?
So, we are working through the FAA certification process, and it is a difficult process, and it's difficult for a reason, right? It's because there's a lot of T's to cross and I's to dot, and so someone asked me recently, like, what's the hardest part of this process? And I kind of said it's just like you have to do it. It's like you just have to do the hard work. That's part of what certifying an aircraft for civil application means. And that's part of kind of the what the public expects when we actually launch into service. And so, we've been doing all of that hard work. It means lots and lots of analysis and testing and lots of testing, right? And we're in this phase where we are continuing to work with the FAA to, they have to review every test plan for every component of the aircraft that we have. And we're writing these test plans and they're reviewing them. We submit them to them and they finally approve them. And as they approve them, we're doing the tests. We've been doing tests before that because we, doing it to figure out like how we should write the test plans, right? So there's a lot of developmental testing that happens, but it has to be true for everything. Like the FAA has this type certification process is effectively a design certification. It is, and so it's creating an audit trail from the very top level safety intent requirements that the FAA sets forth for this type of an aircraft, which is something, again, we had to work with them to figure out what that is. And that's that certification basis that's published actually was published in the Federal Register. And then translate that all the way down to what are the exact tests you're going to do, and did you have acceptable results on those tests, to build this audit trail that the design down to the smallest bolt essentially in the design conforms and meets that requirement at that top level safety purpose. And only then can you build ones that you can actually then use for commercial use. So that process is very intensive on purpose. It's just the way civil certification is done.
Right. And I think that most people can agree that that is good, that it is an arduous process. My understanding is about 5 steps, right? Or 5 levels, I guess. And Joby right now is midway through the 4th step. Is that accurate?
Yeah, that's right. So we, the FAA has not, I mean, they have a published guidance on this whole process, and a lot of it, then people who do it understand how to do it, right? So there's a lot of kind of experiential knowledge, I would say, as part of it. We because there's a lot of scrutiny on this process, there's a number of folks who are in this situation who are working towards certification of these types of aircraft, and I think there's probably more attention to the type certification process as a result of this than maybe there has been in the past. And so we decided to try to provide a more granular scorecard in a way for what we're doing. And try to, so that we could talk about this on a regular basis in terms of the progress that we're making in this. So we broke it down into these 5 steps. They mapped to the FAA's published guidance, but really they're auditable, and it's essentially based on things and documents that we're actually submitting and getting approved by the FAA. And so the step 4 that we're on of the certification process is this test plan submittal. So test plans, again, we're writing these detailed test plans, and for everything that we've agreed upon with the FAA that has to be tested, which is essentially all these components and subassemblies and assemblies, et cetera. And then we submit those test plans to the FAA and they accept them. And so we report both on our submittal. So how are we doing in terms of submitting the exact test plans to the FAA, and how are they doing on accepting those? Because they have to review them, and we go back and forth, and then eventually they accept the test plans that we submit. And so we're making great progress on that. I think well over 60% through that from a submittal standpoint from our last kind of public publication of those results, and the FAA was approaching, I think, 50%, 40-50% of the acceptance. So the exact numbers are published in our quarterly reports on that.
Got it. Well, it seems like a timeline then is kind of difficult to predict. Do you have any expectations of that? Because you're really at the mercy, in a way, even though we can all agree that that's a good thing, at the federal government and their process. So do you have a sense of your timeline for the United States?
Yeah, so we are, you're right, that is not something that's fully within our control. I mean, what's in our control is like doing the work and getting it in front of the FAA as fast as possible, right? And so that's kind of the way we've architected everything that we do. So and then responding as quickly as possible when they have comments, and so that we can go back and forth. We're really driving toward a critical milestone, though. And so there's a thing called TIA, which you've probably heard other people talk about. We've been talking about it a lot. It's called a type inspection authorization. So really, this is a huge step in the admittedly somewhat opaque type certification process that we are driving toward. And this really means, so as we're writing those test plans, right, one of the sets of test plans we have to write are the flight test plans. So when you actually have the entire aircraft assembled, what are the flights we're going to do, the series of flights that we're going to do, flight tests, and then what are the expected outcomes of those flight tests that we're going to do to prove the different things that we have to prove regarding the performance of the airplane, different mechanical performances, et cetera, et cetera. And so the FAA actually has test pilots that will fly our aircraft and execute those agreed upon test plans. And that's called TIA, essentially. There's going to be a whole series of these test flights that will happen. And so we're driving toward the first of these important FAA piloted test flights in early next year is what we've been targeting for this. And so that's a really big gate that we were driving to get through. We see it as kind of entering the last lap, kind of the final lap of the type certification process in a way. From what we've looked at data wise, companies that enter that final lap, that get to the TIA step with the FAA, eventually finish. And so I don't think there's an example of a company not finishing the type certification process once you enter that final lap. So we think it's really a really big gate. It's not won't be done yet at that point, but it's a really important gate to get through that indicates the maturity of what we're building and shows that we're in that final lap to getting this type certification done.
First of all, I know that Joby is planning to actually go to Dubai first, and I'm wondering if that is still on track to start carrying passengers in Dubai in 2026.
Yeah, that's right. So what we've done is we've worked out an agreement with the two different agreements essentially in Dubai. So Dubai has a regulator for transportation, and actually that it's called the RTA, the Road Transport Authority. Traditionally, has been a kind of the taxi regulator, kind of the surface transportation regulator. Though they're actually have gotten the right to regulate the air taxis as well. And so we've been working really closely with them for a number of years now, and we'll be the air taxi provider for Dubai once we have our Dubai UAE kind of qualification and certification done. And so there's another entity that GCAA is called. So it's essentially the FAA for the UAE, which is a federal level regulator there. And so what we've done with them is taken the work we're doing with the FAA, and they're devoting extra resources for doing that final review step, which is kind of the step 5 you think of as the process, which is we have these test data that we've generated there, and then there's a subset that really matter for initial commercial operation. And you can think of cold weather testing, not so important in the UAE. It's kind of a good example of that, where they're going to be devoting extra resources to review the test results and get us essentially a provisional qualification to be able to start doing some commercial operations as quickly as we can finish that subset of tests and prove that this is everything is working exactly as we intend it to work. And so that's really exciting. We've been working very, very closely with them and are targeting starting to carry passengers in 26 under that framework.
And lastly, you've been involved in this industry for long before you were at Joby. You were head of Uber Elevate, and you're at Zee-Aero, which holds an important place in the history of electric aircraft development for sure. Looking back to those early days and seeing where this still nascent industry is today, is right now where you expected the industry to be, or has it taken longer than you expected?
I mean, I was a grad student, essentially like fresh out of grad school, starting working on this back in 2010 at Z. So I don't know that my expectations of timeline were accurate, but it's probably a good thing, right? In a lot of ways that we get working on amazing innovations. And I think if I could see the attention, the amount of funding that's been brought into this industry, the attentions at the highest levels of the FAA, DOT, the overall excitement, I think, and enthusiasm across the government for what it is that we're building here. And then I would say outside of the US and the globally, the response. I mean, we have an aircraft in Osaka right now that's flying daily, multiple times per day with our partner, ANA, for the Osaka Expo. And we've got, they have 100,000 plus people on a daily basis coming in to the expo, and I think our test pilots are kind of minor celebrities now in Japan as a result of these test flights that we're doing, and just seeing the enthusiasm, seeing the momentum that's building, seeing the fact that this vision that we've been building toward over all these years has traction, and people want this to exist. It's amazing, and I would be. I wish that my younger self could have seen that then. It would have just had that much more enthusiasm and drive to make this happen.
Great. Well, thanks so much for joining us, Eric. And back to the SOSV Climate Tech Summit.
I wish we had a lot more time to talk about Joby's rise. One theme Eric mentioned was the very specialized technology they had to invent for electrical flight, which is now interesting parallel commercial applications. We've seen that theme many times. It's a great product, a great byproduct of climate innovation. For our next session, we will bring back Stephen Chambers, whom you met yesterday. He's an SOSV general partner and managing director of our spectacular IndieBio New York location. Over to you, Stephen.
Thanks, Sean. It is now my pleasure to introduce the next session, which is a topic entirely new to the summit, but very appropriate indeed. The session has a bit of an oblique title. When the well is dry, we learn the worth of water. That's a quote from none other than Ben Franklin, and it's very applicable today. Water insecurity is a growing global anxiety, driven in various measures by climate change, groundwater depletion, industrial demands, and pollution. And as the price of water rises, new technologies are entering the market to help fill the gap between price and availability. The summit's first ever session on water focuses on 3 technologies in very distinctive markets. Craig Carlsberg's Tidal Vision is scaling chitosan-based treatment to clean water in massive volumes. Robert Bergstorm's Ocean Well is using deep-sea technology to deliver desalinated seawater using much less energy. And Brian Sheng's Aquaria pulling water from air to deliver independence from water utilities. Our moderator for this session is Candice Amore, founder of Climate Vine. Candice is another super veteran moderator for the summit. Thanks for joining us again, Candice.
Hello, everyone. Super excited to be talking about water for many reasons. One, it's so important. Two, I think it's just going to be much more of a bottleneck in the coming years than I'm willing to sort of face. And 3, because we have 3 awesome founders here who are all doing very different things in the water space. So we have Craig Carlsberg, who is at Tidal Vision. We have Brian Sheng at Aquaria, and we have Robert Bergstrom at Ocean Well. So because you 3 are really touching on different parts of the water space, doing very different things, but all, doing something near and dear to our planet and very important for the climate and water in general, I wanted to give you each a chance to introduce your companies, introduce what you're working on, introduce really the pivotal role that you're playing in this space right now, and help other people understand why it's so important and fantastic. So, Craig, why don't you start with us?
Sure. Yeah. So I'm Craig Carlsberg. I'm the co-founder and CEO at Tidal Vision. We're an industrial biotech company specializing in integrated biomolecular solutions that allow the treatment of water to be done far more efficiently and agriculture production to be done far more profitably. We specialize in one biopolymer, a derivative of chitin, the second most abundant biopolymer on Earth. And we really focus on integrating these in the end application. So although we're a biomolecule company, we also use hardware and automation to maximize the impact of our technologies in the real world.
Excellent. Biomolecules, hardware, software, I'm guessing, all the different pieces, sort of fully integrated system. So that's fantastic. Brian Sheng, why don't you share what Aquaria does?
Thank you. Sounds great. So I'm Brian Sheng, CEO and co-founder of Aquaria. We think the future of water supplies is going to come from the sky. There's actually more than 200 times more water in the atmosphere than what humans use in totality. And so we build a device that allows us to extract the moisture from the atmosphere at scale, energy efficiently, and then supply that to homes, communities, and now even scaling up towards commercial applications as well. The whole idea is it takes there are a lot of great solutions for water today, but they're typically bigger projects with bigger capex and scale. But we want to decrease that and mirror what solar and batteries have done for power infrastructure. And so Aquaria is doing that for water production.
Do you consider yourself industrial biotech, or Craig? That's the word that you use. I don't think you would call yourself that, Brian. But is it? What's the sort of phrase that you would talk about? Because I think about my dehumidifier, and I don't think you're in that category.
Yeah, we talk of ourselves as deep tech, but to be honest, the way I usually talk about it is we're solar and batteries for water. I think that's the easiest way to understand it.
I like that. Excellent. Robert, tell us about Ocean Well.
Thank you. I'm founder and CEO of Ocean Well, which is designed to bring more drinking water to the world. As the climate warms, the amount of drinking water that's available is falling, and a number of different factors are causing water to becoming scarcer and scarcer. We think that although we need all technologies, that for large quantities of water, it has to come from the ocean. And so we have designed a system that is a little different than standard desalination, but it uses all of the same equipment. Just ours is 3/8 of a mile under the ocean. And we do that because there are some issues dealing with standard desalination, which involve cost, which involve environmental issues like strong brine and killing sea life and so forth. We are able to address all of that by using natural pressure to drive the process. And as a result, we are able to generate a very mild brine that is not harmful. We are able to leave the salt and the sea life in the ocean and charge less in the process.
Excellent. And that charging less piece is what we're going to go into. So, one note though, before I go into that question, you all are in this sort of clean water or water, scarcity to abundance space, right? All in different ways. Craig, I think the biopolymer, obviously clean water and agricultural sort of applications. Brian, this sort of distributed water as a resource or distributed water resource space. And then Robert on desalinization, right? And the providing more clean water. And so that's one through line at least. But I think another through line is that each of you is in some way, with your technology, changing the economic logic of water. And we can talk about where water is today and how it's economically thought about, and where you see it going or where it is going right now. But there's some part of the water solution and the water space that makes me think that if we think about clean energy and how it was able to be investable and scalable over the last decade, we're seeing maybe a similar sort of financial innovation era for water, right? And so my question to each of you actually, given your different solutions, but that all of you are economically viable in different ways, I want to learn more about what you've learned about making climate resilient water investable and scalable. And we're gonna go backwards this time. So Robert and Ocean Well, you've got those sea pressure water farms. They produce fresh water. It's a fascinating sort of way to desalinate. I'm curious what you think about the economics of it.
Well, the economics of the process is separate from the economics of the financing of it.
Okay.
I'll leave the economics of the process with just one thought, and that is we are doing something that requires 40% less energy. And as a result, we save quite a bit of money on electricity. But as far as financial innovation, which I think is a great question that you ask, and coming from the viewpoint of seawater desalination, it's really important because these are really large financings. They're 50 million to 5 billion. And right now, every one of every part of every project needs to be underwritten individually. It's all custom, and that's inefficient. And we plan to do a lot of these. So our goal is a much more efficient, high certainty process for the lender and the developer and the client for the water. So for efficiency, we need to be as standardized as we can be. You need a standardized product. You need a product that performs the same way every time, which deals with the operator, and standardized credit qualifications. We don't have that today. Big water infra like ours is a one-off every time. Different engineers specifying different equipment, different processes in unique configurations. If you think about it in home building terms, everything is a custom home and everything is stick built on site. Second, the investors that you're dealing with, all of them have different underwriting rules and biases, which is a recipe for disappointment for people in the process. It slows it down, it adds uncertainty. And third, the project operators are all different, which affects success. And finally, the counterparty risks are different. So today we've got a pretty inefficient process. It's costly, a lot of second and third guessing, sometimes fourth, and fuzzy underwriting rules. So we hope to change that. Our vision is to use standardized desalination modules built in a factory, which is designed to reduce the product risk. We're going to operate these ourselves to give a consistent track record to the lender, reducing operation risks, an agreed upon credit underwriting ratio, where when risk goes up, loan to value goes down. We'll be working with a small group of lenders so that we can continually become a team, if you will. One developer, which will be us, so we can build trust. And that is going to be a much more efficient system. It's the work of a number of years. And when we get this financial machine operating, it's going to allow for a much more efficient investment and scalability. And that's going to benefit everybody involved in the mission of making more water for the world. Thank you.
No, thank you. What I was going to come in and say is that I think there's a lot of parallels with solar, for example. The soft cost of solar, more than half of the cost of solar, right? I think almost 3/4 of the cost of solar. And what you're talking about are the soft costs of getting a project like this going that don't necessarily need to be there, but because of the systems, sort of financial processes that you have to go through, they are. And so it sounds like you all are becoming the developer of your own technology, kind of owning this vertically a bit more to be able to do this in a repeatable process that makes it, more economically possible, given that it's really great tech and it should be out there. Brian, why don't you tell us about the work that you're doing? And so you've already compared Aquaria to solar and batteries for water. Solar and batteries are much more investable and scalable these days than they were back in the day. And so how do you think about this moment of making what you're working on investable and scalable for the sort of distributed water space?
Certainly, and I totally agree with what we just said about modular and repeatable modules. Luckily for me, I don't have to make up a theory of change because we've sort of watched the development of solar batteries the past couple of decades, and kind of putting a statistic out there. 2024, more than 70% of new global power generation came in the form of solar PVs. But it's flexible. It's you can put it almost anywhere, and so, and of course, over time, that cost has come down to reach parity and get lower and lower. And so, I think that's how we think about the financial engineering and the value proposition of our approach is that we do have that flexibility, giving water production that larger size, smaller size flexibility. Today, for example, our modules range from something that you can plug in right into your house to supporting the entire water system of a single family home, all the way to 40-foot containers that can produce 10,000 plus gallons, per day. Now, of course, that's still much smaller than typical larger water size project, but that's the entire point. Is that we're following that flexibility so that your capex can range from thousands of dollars to tens of them, if not 6 digits, 7 digits, etc. And as we do that, then we're also taking down the cost of water production by plugging in to existing, let's say, solar resources, balancing the grid. A lot of the natural movement of kind of the trends of more abundant power, we can also tap right into that, again, because of the flexibility of the location of our deployment. So I think it's two different arrows pointing in opposite positive directions, one with energy crisis becoming a lower and more abundant, and Aquaria's ability to tap into that while decreasing the cost of our technology over time, um, all with the same playbooks of financial engineering behind it as well, meaning we actually also created the first, I guess, uh, air water loan, if you will, the first federal loan that allows homeowners to adopt our technologies for $0 down, kind of again like the early solar loans that catalyzed that. So we're following a lot of the same playbooks to make that happen.
Were you saying that for the energy that you need to use for Aquaria, you're also able to use solar and battery, given that it's modular, you can place it in different places? Was that part of your response?
Correct. Yes, that's correct.
Yeah, I think another point. So be modular, be repeatable. Those are those are some things that are clearly rising to the surface. Another is this water energy nexus, right? So Robert, you said you guys can desalinate with 40% less energy. Brian, you're thinking about the cost of energy and where you're placing Aquaria. I think this sort of intersection of the amount of water it takes to create energy, the amount of energy it takes to create water is bubbling up as a theme as well. Craig, tell us more about how you think about this generally at Tidal Vision, again, when it comes to making climate resilient water systems scalable and investable.
Yeah, I think we come at it from a completely different lens. I think both Brian and Robert are focused on water production in really innovative and unique ways. We're on the water treatment side. So I think one of the things when you look at water is I think it's a misnomer to talk about a water treatment industry. The reality is consumers need water, communities need water. Every single industry that produces the goods and services necessary for sustaining humanity need water and water treatment going into their factories, process water in their factories, effluent leaving their factories, all needs to be treated once, twice, or three times for literally everything. So uh, our approach is very different. There has not been a significant breakthrough in the chemistry, which is the largest part of the OpEx of water treatment. So if you're in the business of just distributing traditional water treatment chemistries, you typically think about your business in volumes and price. And it's the same tools that have been used for the last 70, 100 years. We've come in with not just a displacement for traditional coagulants, but one that lowers the total cost of operation by 50 to 90%. And, and companies that operate water treatment facilities think about the total cost of operations. They don't think about the volumes of the chemicals and the price of those chemicals. Their job is to lower those total costs of operations. And that's what we're doing. And we're doing it for three very different markets in water. So we have three different commercial teams. One that focuses on high organic industrial, so primarily food and bev. One that focuses on power plants because power generation is the second biggest consumer of water, only behind agriculture production. And then our third is our stormwater and environmental water, where the water needs to be treated. It's already contaminated and it needs to be discharged into the environment. And the environmental benefits of our product, that was the first market we entered because of that. And then as we reached our next scale, we were able to get into the larger wastewater and industrial applications. So.
Awesome. So Brian and Robert create more more fresh water. You create more clean water. Either way, we get more clean, fresh water, which is great. And I think lowering the costs. You all mentioned this in different ways, and I think just going back to the three spaces that you focus on, Craig. Well, one, I think wastewater is everything. I think of climate as everything. So climate, water, everything is everything. We need these things to survive. So I totally understand that and totally agree on that. Industrials, food and bev, agriculture is the first and also the biggest user of water. So your first customer. Power plants, again, that water energy nexus, the amount of water it takes to create energy and vice versa. That as your second one, and then stormwater. So that makes a lot of sense that you'd want to think about wastewater there. There's an emerging theme, two themes, well, many themes that I'm sort of looking at. So the modular, repeatable, I think that's something that we can talk more about, sort of the cost savings. I think the sort of financial models that you all are seeing that are working, that we can go down. But I'm going to start first with the theme of water and energy. And so thinking about the emissions footprint of clean water, of fresh water, and I think understanding where we are in climate where we want to reduce emissions, where electricity prices are likely going up in the next few years, where that's gonna have some sort of effect potentially in some of the costs here. And just again, from a climate perspective, we don't really want clean water to then, create larger emissions, which then make it harder, Robert, to your point, to have fresh water because of the climate. And so, Craig, why don't we start with you? If you have any thoughts on either how your solution lowers the footprint of emissions of clean water in a way that's scalable and how it does that, or if there are examples of that you've seen in the water space.
I mean, for us, it's there's definitely a clear, tangible decarbonization impact of treating polluted water. Just the LCAs on our chemistry versus that which we displace in these systems, we've done that. But I think it all boils down to being scalable to economics, and I think. Brian and Robert are both great examples of what I like to say is that there's not really a water scarcity issue, there's a water economic issue. And because there's plenty of water in the ocean, and I learned today there's plenty in the atmosphere 200 times over. But it's the economics of actually getting it where it needs to be. And in our case, it's enabling in some cases more water reuse because we're able to treat the polluted water so much at such a lower cost than was priorly possible. Um, so I think all these things are interconnected, and I liked the modular lessons as well, because at least in stormwater we very much had to modularize the deployment of our chemistry fully contained in shipping containers with the sensors that analyze the water quality, dose the appropriate amount of our biopolymer, track the performance remotely for O&M, because some of these environmental stormwater applications are in very remote environments and there's not always operators on site. So all these things are important. I think if you just look at the history of I think we're at the next. I think humanity has the potential of this huge leap in water efficiency and water abundance, and it's going to take a multi-tiered approach. I think there's been multiple big leaps in humanity before that we can be inspired by. Solar and batteries is one. I think of like silicon, right? How that's transformed. And it took the integration of so many things, not just the production, not just how to modify this, not just how to make the chips, but a real integrated approach that has changed the efficiency of so many industries. And again, every industry needs water.
Just to clarify, I think what you're saying is that the chemicals that you're displacing take a lot more energy to create than the biopolymer that you all have. Is that part of the equation?
Correct. Yeah.
Great.
Partly we're extracting it from a waste stream, ours, so it's a circular economy input that we developed a zero waste extraction process. All that plays into that claim, but yes, ultimately.
Yeah. Zero waste for wastewater, circular economy. That's brilliant. Love it. Economically, it seems to work out really well. And then you guys are doing a modularized approach for stormwater, which makes sense. Doesn't have to be as modularized, I'm guessing, for big power plants or for, agriculture, food and bed. My follow-up to some of what you're saying is how vertically integrated are you? Because I think, Robert, you were starting to talk about the economics and how, you guys are going to be developers essentially and really realize that you have to take over more parts of the process, right, of getting this done, not just own the technology. And so, Craig, I felt like you were starting to go in that direction or start saying that that's something that you do. But how vertically integrated have you been historically? Are you going to be more in the future? How do you think about that that question strategically?
more than I originally wanted to be. So we founded this company on this more efficient and first zero waste process for extracting this biopolymer that makes all these efficiencies possible. And we thought, great, we'll just scale this process, and companies, of course, will come flocking to buy more of this material and figure out how to formulate it and apply it and reap all these benefits of it because it has these unique properties that were well known. Uh, that did not work out that way at all. I often joke, but it's not really a joke, that patience is a virtue, just not one of mine. And so for us, we had to then, after developing this very novel extraction process, starting with literally the raw material that we're diverting from landfills, we then had to develop this platform for synthetically modifying this biopolymer. Just like synthetic biology is done with microorganisms and gene editing, we're modifying the functional groups, the ratios, the monomers, the molecular weights to make all the end performance possible. And then we thought that was going to be enough. And we got some initial success. But we really learned, like, we can't even go through traditional distribution companies that distribute the types of chemistries that we displace at better margins, because they're not necessarily structurally able to create the value for the end user. Two, their like sales teams are based on revenue, right? They get variable comp, which comes from volumes and price of the same 5 types of chemicals that have been used for 100 years. And we come in and say, if you apply this, it's not only going to be applied at like on average 1/30th the neat dosage, but then you're going to use so much less of the following chemistries, like 80 or 90%. You're going to have, uh, and so, hey, we can do that in a way to increase gross margin dollars, but your entire sales team is based on gross revenue. And the only way to create the win for the end user is by lowering your revenue. And that was just too much for them to wrap their heads around. So in our case, we had to vertically integrate all the way to the end user. We've pretty much given up on selling to the typical service providers and operators. We've tried educating them on how to use our technology, showing them case studies, but it just every part of it is just not set up with how they operate. And so yeah, we've had to all the way vertically integrate. Our customers are the power plants, are the companies making the food products and the beverage products, are the ones who have some sort of stormwater that needs to be treated. So.
Mhm. And I'll give you a shout, Brian and Robert. You might just shout out yourselves, but because I don't have all the stats on your companies. But Craig, you guys told me that your company has over 300 employees, growing 100% year over year,
Yeah.
and have over 800 customers, which is impressive if they're larger customers. I mean, it's impressive regardless. But those are some, larger customers. And what struck me is that, one, the incentive system for selling to the service providers just didn't work, and that's counterintuitive, right? Like that's something that you had to learn by doing, unless you had all the knowledge. But no one ever does when they're starting. And two, you've got this circular economy company, and you're building your own circular sort of system where you're like, doing the wastewater, selling it. Like you've got to sort of do that full system model. So I think that's great. But Brian, I'll go to you if you had any thoughts. And the question was essentially thinking about the water energy nexus and the idea of lowering the carbon emissions or the emissions footprint of clean water, of fresh water in a scalable way. And so, you already talked about setting up Aquaria modules or systems with clean energy, for example, and being able to do that at the source. Are there other things that you think about when it comes to lowering the emissions or lowering maybe the climate impact of what you guys are building?
So, Candace, I'm going to stir the pot a little bit before I answer that. I disagree with that frame completely. Uh, I don't disagree with the frame, of course, that we should be more, in general, less emission free, but we should not be viewing water abundance through the eyes of decarbonization. Water already faces, despite the need for water, we face essentially two really large challenges. Number one, water as a commodity is extremely undervalued and subsidized. So it's not market value water. That's one huge problem. And the second one is when we think about investments or kind of innovation in water, there's just a lot other industries that are way more carbon intensive. And so the comparison for water and decarbonization, it's not, it loses the value of the impact that water creates. Like Craig says, we need water for everything. It's not about carbon. You don't care about carbon emissions if you need water. If you have no water, you die in 3 days. Who cares what the carbon emission is? Like, that's not the point. So that's why I started the pod is like, yes, that's important, but within the context of how little investment and attention is placed on water, it shouldn't be forced through the lens of these, other frameworks. It should just be no water for water security, water for water abundance, water for clean water for all. And yeah, so no, I'll stop right there. But I don't view it through the decarbonization lens.
I think that's great. I think that's a great response because one, you brought up that the market value of water is so undervalued. And that's something that I'm guessing there will be some corrections for in the coming years as we're facing more scarcity. Scarcity, I know that water prices have already gone up a little bit. My friends' bills are all, going up when it comes to water. I don't think it's anywhere near, obviously, the economic value, like it's priceless, right? And so I'm curious about that. Maybe that's something that we can talk about is the market value of water potentially. But the other piece is, I think what you're saying, Brian, which is compelling, is don't put the onus of decarbonizing on water, right? Like water has enough issues. There's like enough of a lack of focus on water. There's enough of a, understanding that we're going to need more water in the future than we have today. And we don't have enough people solving it. So I think that's a very, I accept that reframe. And I think that it's a good one to really keep in mind. Robert, do you have anything to add?
Well, I agree with Brian that water trumps other things. But on the other hand, if you have an opportunity to have the same amount of water and generate less carbon, that is a good thing to do, right? And that is something I don't think we can take our eyes off of. We've got to do that. In our case, we've tried to do it a couple of ways. One is just reducing the gross amount of electricity that we use. And that does reflect in the price, but it also reflects in the amount of electricity and the carbon from that. The second is that we are with a with that big of a reduction. Suddenly, our industry and we do use a lot of electricity. I mean, it's just because the amount of water that we generate is so great. Becomes in reach of solar, and it hasn't historically been. So that is another advantage from a CO2 point of view. And finally, to the extent that we can make our systems work in a demand response manner, which the desalination industry is not set up for that. An onshore desalination plant, you do not want to shut it off for any reason. And it is, so we have designed ours so that we can do instantaneous demand response without damaging the system. So, yeah, I agree. Water is 3 days. I mean, after the third day, you don't care too much about CO2. But if you can do it, it's worthwhile doing. And we're trying to do that.
Excellent. Thank you for that answer. I'm going to do very rapid fire and I'm going to hold you all to like 30-second responses. Note that the first one is going to be a last sort of counterintuitive thing that you learned and you want to pass on to the audience. The last one is going to be people resources, other ways to sort of think about water if we want to dig into the topic more beyond, of course, your company. So 2 questions, rapid fire. One is a last counterintuitive thing that you've learned that you want to share, and then resources, people, websites, whatever you want to share with the audience.
Counterintuitive, huh? Well, I would say that the counterintuitive thing that I've learned is that in order to get water to the inland of the United States, you don't necessarily have to ship it there. You can exchange it. so that water on the coast allows more water to be kept in the Colorado River, for instance, without any pipelines, without any pumping. That's super counterintuitive to most people.
So Robert, I actually in my research in university, which was kind of like what made Aquaria happen. I had researched what you were doing, and when I saw what you guys were doing and coming online, I was like, wow, that's awesome. So I think it's like the counterintuitive thing is that there's actually so many crazy cool innovation around water and how it's produced that most people just have never heard of, and I think some of those are starting to come online in the past couple of years, and when I first saw the news online about Ocean Well, I was like, oh wow, that's actually coming to fruition too. That's awesome.
Thank you. We are, we still are climbing the mountain. We haven't gotten over to the top yet, but we're going to get there, and it's going to make a difference.
Craig, do you have anything to add in terms of counterintuitive, surprising, and then any resources that you'd want to share?
Yeah, as far as counterintuitive and surprising, I think it depends who you ask. All three of us are entrepreneurs, and so we're probably a little bit more on the spectrum of early adopters or innovators compared to the average person in the population. What was really counterintuitive to me is how much you have to make the trialability of a new treatment risk-free to end up getting adoption. You have to actually figure out how to frame your technology as lessening risk to drive the change. And that maybe isn't surprising to others, but was extremely counterintuitive lesson that I had to learn over the years that has really shaped our go-to-market strategies. So
Yeah, I think it has to be cheaper and better is true in climate, it's true in water, and especially when you're thinking about selling to utilities or those large organizations, they want it to be
cheaper and better is the entry stakes. That will not be the sale. You have to be cheaper and better and
Less
risk-free
risky.
or less risky, ideally less risky. And that's a harder burden, but without that, good luck, especially with really big industry decision makers.
It's a very conservative industry, and one where it is very difficult to make a change. But once you've made that change, then that inertia works in your favor. So keep it up, Craig. You're going to be doing great. And Brian, you guys, I mean, as the climate warms, the amount of water in the atmosphere is growing dramatically. And there are a lot of places that desalination simply can't reach. So more power to you.
Thank you, Robert. I think that's an awesome place to end. And Robert, I think we would all say the same thing back to you with Ocean Well. We need what you're doing, and we're excited about what you're doing. So thank you everyone for being here. Craig, Brian, Robert. I learned a ton. I'm really excited about the solutions, and can't wait to keep up with all you're doing.
We're going to hear a lot more about water in the years ahead, and it's great to know innovators like these are ahead of the curve. As long as we're quoting savants like Ben Franklin, let me add Plato, who posited, our need will be the real creator, which is so true when it comes to water, amongst other things. Well, believe it or not, we're down to our penultimate session of the second day. The summit has really gone by quickly. For this one, I'm bringing back my colleague Andy Golick, partner at SOSV's HACS program in Newark, New Jersey. Over to you, Andy.
Thanks, Sean, and hello again from New Jersey. The next session's title is, there's a fourth state of matter, right? That is plasma, of course, and most of the universe is made up of it. But on planet Earth, we're just beginning to figure out plasma's applications. If fusion energy ever takes off, for example, plasma tech will be at the core, and today, semiconductor manufacturers use plasma to etch the finest circuits. David Garcia, CEO of Y Plasma, is developing plasma actuators to precisely control ionic wind from solid-state devices. Emily Carter, Senior Strategic Advisor for Princeton Plasma Physics Laboratory, or PPPL, and Scott Shu, Fusion Partner at Lower Carbon Capital, are at the forefront of research efforts. In this session, you'll hear about that work and the new HACS Plasma Forge, a joint project between SOSV and PPPL to translate plasma science into hardware, decarbonization, and next-gen manufacturing. Our moderator is none other than my colleague, Duncan Turner, SOSV General Partner and the Managing Director of SOSV's HACS, right here in Newark, New Jersey. Over to you, Duncan.
Thank you. Well, I'm very excited to host this next panel. SOSV recently announced a $49 million collaboration with PPPL, that's the Princeton Plasma Physics Lab, and the NJEDA to fund plasma companies. I got a lot of questions at the time that we announced that. We announced we're going to do 25 companies, and people were asking, are there really that many companies to invest in this area? How many fusion companies can you invest in, and what other uses are there for plasma outside of fusion? Well, today, those are all areas that we're going to discuss with our distinguished guests. I'm excited to introduce them all. We are joined by three people who each have deep domain expertise in these areas. Firstly, I'd like to introduce Emily Carter. She is part of the executive management team for PPPL, where she's senior advisor and lab director for PPPL's Applied Materials and Sustainability Sciences Directive. Essentially looking at new uses for low temperature plasma and others beyond that area. A disclaimer, Emily's husband also is a founder of another fascinating company that we actually tried to invest into but missed it, called Princeton New Energy. They may come up as a part of this discussion. They are in the battery recycling space. Second guest is Scott Hsu. Scott spent 17 years as a researcher at Los Alamos Labs, where, among other things, he led research on magneto-inertial and inertial confinement for fusion. More recently, Scott was a senior advisor and lead fusion coordinator at the DOE under the Secretary for Science and Innovation, and is now at Lower Carbon Capital, where he is a fusion partner, leading investments into the fusion space. And lastly, David Garcia. David is the CEO of Y Plasma. It is a HACS company. It's a spin-out of the Spanish NASA. I'm not going to try and say that. Their technology is centered around semiconductor cooling with a range of other different directions. So we have three people here, all with different perspectives that can help guide us on some of the exciting possibilities for plasma. Now, spoiler alert, this is not all going to be about fusion, but I am going to start with Scott, because most people think about fusion as one of the areas which is most important as we think about plasma science. Scott, we've seen a huge amount of interest from investors over the past year or two into fusion. I'm curious just to get your read on why that's happening right now.
Yeah, thank you, Duncan, and thanks to SOSV for hosting this event and for having me here. Yeah, I'd like to answer that, I guess, by pointing at the alignment of two factors, perhaps the greatest alignment we've had in the history of fusion. And that's the alignment of both technology push and maturity, as well as the market pull and market interests. If you look at the past, 50 plus years, even 70 years of controlled fusion research, it was probably dominated by the science and technology push, people working very hard to figure out how to create a fusion energy source here on Earth. And for most of that time, that's what the scientific community has been working on. But in recent years, and perhaps especially the last 10 years or so, you see the scientific advances in fusion as perhaps best exemplified by the scientific energy break-even achieved on the National Ignition Facility at NIF. That kind of shows a very high degree of scientific maturity in the plasma physics. But then you also see very recently offtake agreements that hyperscalers, utilities, et cetera, are actually signing with our private fusion companies, really signifying the market demand. So maybe I'll just leave it there for now. But those two factors, I think, are really answering the why now question.
Right. And PPPL has been a huge contributor into this field. You did your PhD there, I believe. Be great to understand kind of how they've contributed to this breakthrough and what you see as their role going forward.
Yeah, PPL, of course, has a historic legacy in this field of plasma physics and fusion, having been stood up in the 50s when controlled fusion first started. And PPL, many of the leading approaches to fusion were in fact invented at PPPL, as well as the scientific discipline of plasma physics, seeing great advances at PPPL through many decades, starting in the 50s, going through the 60s, 70s, and world-breaking experiments in one of the leading concepts, the tokamak, occurred at PPPL. In fact, I was there as a young graduate student when the TFTR, the famous tokamak experiment, had its record deuterium-tritium experiments in the mid 1990s. Yeah, so PPL has a great legacy in fusion, but looking ahead, it also is also driving kind of frontier conversations in plasma theory and modeling, the use of AI, and as one of my colleagues here on this panel will discuss in other applications of plasma physics.
I could also just jump in and say that all the fusion companies, or almost all the fusion companies that have been stood up in the last 5 to 10 years, have come to PPPL for the expertise that exists there, both in modeling and design and in situ diagnostic capabilities that are critical to bringing fusion someday to the grid. And in fact, the major experiment that PPPL has going on right now, which is another tokamak design called a spherical tokamak, is scheduled to come online next year and will be key to testing out this more compact design of a reactor.
Awesome. Do you feel like the best ideas have already happened in this space and now it's a case of us just engineering those, or do we still have a huge amount of discovery waiting to happen within this field?
Well, maybe I'll chime in first. I'm sure Emily will have more to say there. I guess I'd like to answer that question in two ways. I mean, firstly, we are never out of good ideas, and perhaps even the best ones are still to come. And I think we need to pursue both kind of two tracks here. One is continued innovation and discovery in plasma and fusion sciences. But also there is the appetite right now, to take everything we've developed and learned over the many decades and try to accelerate our efforts to actually putting fusion energy on the grid. And so I think these two efforts should, proceed in parallel. And in fact, in my time at the DOE, starting at the Advanced Research Projects Agency at the US DOE, I really tried to emphasize both aspects.
I would say it's been remarkable and important that there is this interest in having startup companies, and because it has focused the attention of both scientists and engineers that are not necessarily at those companies, but are at PPPL or at other parts of the national lab university ecosystem, such that I think we will end up getting to commercial fusion faster as a result of this push. I think that you asked the question, Duncan, whether or not there are still questions left to be answered. And I think what's interesting is still right now, there are lots of questions to be answered with respect to different designs and what are the optimal designs. And in fact, as Scott pointed out, I think that in this case, both physics-based modeling and artificial intelligence is going to be helpful in trying to do that. And we've been at PPPL at the forefront of looking, for example, at what's called the stellarator design and looking at using artificial intelligence to help us understand what will be the best possible designs there.
Right. And at what time do you think that the supply chain needs for this industry are going to start to overtake as a concern beyond looking at the various scientific application of some of the technologies that have developed thus far?
Well, supply chain is growing in the level of attention that people are paying to it. And I think in part because of the timelines people are really trying to adhere to. In many ways, if we want to keep working toward demonstration of fusion energy, here in the next decade, some of the supply chain needs also have rather long lead times in themselves. And so I think this is the right time to start looking at the supply chain. In fact, in the investment world where I am now, we are very much looking at the supply chain. We're looking at it from a couple different perspectives. One is we're interested in finding ways where fusion supply chains can leverage other adjacent existing commercial markets, because that's where the revenue streams are that will help, kind of supply chains development and scale up happen sooner. Because even if we do put fusion electrons on the grid in the next decade, that's still a few years, few years off, and the revenue stream is not quite right around the corner. And we hear that many supply chain providers are interested in scaling up their manufacturing capabilities, but they're not quite ready to take on that financial risk at this very moment. So we're looking for ways, to kind of partner with the supply chain providers to find a way to de-risk things for them financially at this stage. There's particular areas of the supply chain in particular that will take more concerted efforts than just market solutions. For example, the fusion fuel supply chain involving deuterium, tritium, and lithium-6. These are materials of interest also to our national security enterprise. And it's likely that we will, want to be working hand in hand with the U.S. government for the right policies in allowing commercial sector to enter, into the activities in producing fusion fuel supplies.
Emily, your work at PPBL spans some truly exciting new areas outside of fusion into the low temperature plasma technologies. I'm just wondering, as I hear some of these supply chain questions, I'm wondering, what are some of the other areas that you're looking at? Is supply chain part of that for new materials? What are some of the exciting breakthroughs that you're seeing as a part of the work that you're doing there?
Well, in some ways, working with low temperature plasmas is much easier than thinking about all of the issues with respect to fusion plasmas. And just to make sure everybody is on the same page, when you have a fusion plasma, you're talking about essentially something that is like the interior of the sun, only hotter, because it's in a smaller area and has to be more dense here on Earth. And so, in this particular case, when it's this hot, hundreds of millions of degrees, all of the electrons that atoms usually contain have been stripped off, and you have nuclei plus electrons in a soup, a gaseous soup, and that is the plasma of a fusion plasma. Very high energy. On the other hand, low temperature plasmas can be things that can be even at room temperature. And in that case, you have essentially this very gently produced plasma that involves neutral atoms or neutral molecules in a gas where maybe one electron has been stripped off. And so that you end up having molecules that have that are positively charged in a soup of neutral molecules or atoms and some electrons. The beauty is because you have this relatively low energy, if you like, charged soup, you have the ability potentially to tune the energy associated with the electrons and those charged, positively charged molecules or atoms independently. Now, that's something we're particularly excited about. Those are called non-thermal plasmas. And those non-thermal plasmas offer up the opportunity to be able to tune manufacturing. And so one of the things that we have done at PPPL is to launch an initiative we refer to as electro-manufacturing. The idea is to displace the typical, potentially displace the typical industrial processes for synthesizing chemicals and materials that are typically done using combustion of fuels to create a lot of heat. But that's not a very efficient process. Plus, you don't have a lot of sensitivity with respect to turning it on and off. And the beauty of electricity is that you can flip a switch and you can control, at least at the second time scale or even less, how much energy the system is getting. So we have a whole series of different projects, some of which involve plasmas, but others use electricity in different ways. And so, for example, with respect to plasmas themselves, remember the plasma is formed by essentially sending a discharge through, a current through, and setting up a voltage and setting a current through, like lightning. That's how you create plasma. So it comes from electricity. But then once we've made the plasma, we're looking at things like making ammonia. Why is ammonia important? Well, ammonia provides half of the fertilizer so it's really important for feeding the world. And right now, it's done by a process which is over a century old, works very well, but is very energy intensive. And so electricity is much more energy efficient than is any thermal process, any process that involves heat. So that's one area. Another area has to do with using electricity essentially as a heater itself, as a resistive heater, something called joule heating. And we're doing some really novel experiments and modeling that look at how to optimize turning on and off the heat, which you can do with electricity easily, to optimize, for example, ammonia synthesis. With plasmas, we're also doing things like making hydrogen from methane. That's something which has been that is in the process of being commercialized by others, but we're looking at processes that could be more efficient than what's out there. And then there's a couple of other ways in which electricity is being used to synthesize chemicals. For example, you can use electricity to power light-emitting diodes, LEDs, and then use that light to do what's called photocatalysis. So it's essentially just using the light energy to be able to convert certain particular chemicals to other chemicals to synthesize chemicals of interest. For example, hydrogen, a clean way of producing hydrogen. And then lastly, something which is already commercialized, long time scale up is in terms of use of electricity, is something called electrolysis. And so we use electrolysis today. It's where we get all of our aluminum metals from, for example.
Right. Yeah, and so that's kind of transforming the industrial sector. Also, if we look at like semiconductors and microelectronics,
Yes.
plasma play a huge role there and something which is strategically important for the US. I was wondering if you could touch on some examples there, particularly within microelectronics.
Exactly. So in fact, in our directorate, we have sort of 4 avenues of research, one of which is this electromanufacturing, which is mostly focused on how do we transform the chemical industry. But then we have actually the most mature part of this research diversification effort at the laboratory beyond fusion is in microelectronics, the science and technology of microelectronics production. And why is that? Because about half of all steps in microelectronics fabrication involve plasmas in industry today. But right now, it's done in a way which is a bit Edisonian, in the sense that there isn't as much deliberate science built into the processing to understand, for example, what is the plasma doing? How can we control the plasma to produce precisely the features that we want? And so there's our scientists are working with the best tool developers in the world for this kind of synthesis, and are essentially working on developing ways to do real time in situ, so inside the reactor or right next to the reactor, diagnostics that tell us what the plasma is doing, and ultimately using modeling and AI to have real-time control and adjustments to get to essentially the feature sizes of the next generation of chips.
And as if that wasn't all, there's also research into an area which is I guess something which people have been a little bit concerned about, but you're starting to shed some scientific light on, which is that of geoengineering and particularly aerosols in our atmosphere and how those contribute to global warming. I'd love for you to touch on some of the work you're doing there as well.
Sure, happy to do that. But I should just, if you don't mind, I'm going to follow up a little bit on a related area beyond microelectronics.
Please.
Is in the area of quantum technologies, quantum materials and devices. And so it turns out that we've now been standing up a platform to synthesize what's called quantum grade diamond. And we're working with the leading company in the world that makes this material. But they've come to PPPL because of our expertise in in situ diagnostics and modeling to work with us to help make their processes better. Why diamond as a platform? Well, as we all know, diamond tends to be fairly pure, and it's an opportunity actually to control what are called quantum bits. That is essentially a next generation or next generation beyond in terms of the kinds of both electronics and computing and sensing devices that the world is looking forward to. So we work in that area as well. And then so there's microelectronics, quantum, electromanufacturing, and then finally there's the area that you mentioned last, which is aerosols, which in fact is tangential to plasmas. Aerosols, this was something that I realized when I was recruited to do this work at the laboratory, that when I was thinking about the expertise of the people at PPPL in plasmas, what are plasmas? I described them to you before, but essentially they're charged complex fluids. Well, aerosols in the atmosphere are also charged complex fluids. And I thought it would be very interesting to see if we could bring the expertise at PPPL and at Princeton University and in actually at the Geophysical Fluid Dynamics Lab, the NOAA lab that is a mile from PPPL, that are experts, world-renowned experts in climate science, climate modeling, together to talk about what is it that are the open questions in terms of understanding how aerosols interact with clouds, how they interact with light. Why is this of interest? You mentioned that there is a concern about them. And that is because there are proposals, and in fact, there have even been some companies that have stood up to inject into various altitudes up to the stratosphere some kind of aerosol that might reflect sunlight. Why? Because we might need someday a Band-Aid to make sure it doesn't get too hot on the planet for us to survive. I personally hope we never have to do it, but I'd rather understand the science. I think it's our responsibility to, in case someone less cautious than me, some state actor or non-state actor decides to do it, we sure should understand the science behind it. And so we've stood up a program, and this program is actually joint with the Simons Foundation. It is actually an international collaboration that is looking at the very fundamental science associated with how light interacts with aerosols that are composed of different kinds of materials. Aerosols are just small particles. Why is this? Where did this idea come from? I'll just mention very briefly that it was noticed that when, after volcanic eruptions, one of the most recent ones was in 1991, Mount Pinatubo had a giant eruption that put sulfur dioxide and sulfuric acid aerosols up into the atmosphere and all the way up into the stratosphere. They spread out all over the Earth. And they reflected sunlight. They lowered the temperature of the Earth by more than half a degree for a couple of years. That one eruption. So that got people thinking. People had thought about it even before that, but there were a lot more people thinking about it after the measurements proved that it was so. That this might be something that in the future might have to be a Band-Aid before we are able to reduce the amount of greenhouse gases to eventually get rid of the sources that are leading the Earth to warm more than is optimal.
We do quite a lot of work in maritime decarbonization, and there was some talk around this as well there that they've actually reduced the amount of aerosols coming out of the emissions of ships, and therefore that was a concern, even though it's doing good for the world, it's actually increasing temperatures. Is that something that your center has looked at as well?
It's exactly right, Duncan, that here we cleaned up the sulfur in the
Yes.
fuels, which is lovely.
Yeah.
But in fact, because of that, then we don't have these sulfur aerosols that were contributing to, they had a cooling effect. And so we were reducing the amount of cooling going on as a result of that. And so that may be contributing as well to the warming that we're seeing.
Wow. Well, David, I'm sorry, we've been looking at all of the for the future, but you're doing something right now. So you have a company that's just going to market with plasma actuators. When we first met you, you were actually pivoting quite a bit, looking at different areas, and you settled on one. I'd love to just kind of talk about the different areas that you evaluated and then why you picked the one you went with.
Yeah, I mean, plasma actuator is something that is well known from even ages ago, and but basically for different constraints into build them and operate them in our real life, because our life is about low voltage, not high voltage. You need high voltage for plasma actuators. It was tough to get them in market. So when we started a company, we evaluated different use cases as they are useful for, as Emily said, many applications, but most importantly, plasma actuators were known in the early 2000s for active flow control. That basically is improving aerodynamics of any surface. That's the first application we evaluated. So basically, it's reduced drag on vehicles, on airplanes, trains, everything. But the application that took our attention was improving the lift on wind turbines. So improve the performance of wind turbines, distributing the air through the blade using plasma actuators, interacting with the air and distributing the air better to produce more wind energy. But also our team in the Spanish NASA, so Antonio and Mario, who are the scientists that basically were the fathers of the patent of the actuator that is part of our know-how, they were also working on thermal management. So the same actuator can produce heating and cooling, and thermal management is a problem all over the place, in every single sector. And the good news about our tech is it's so small, it's very tiny, and can produce plasma with very low energy. Okay, so as Emily said, using electricity, high voltage, we're able to produce plasma. We can control the electrons and produce different effects on the surrounding air and produce something called ionic wing. The ionic wing is very useful for heat dissipation, and this is where we raise the attention in the electronic cooling sector. As I mean, with the rise of AI, everything produce more heat, not only the chips, the GPUs, the CPUs, also the memories, the whole stuff. And there's no other solutions rather than the traditional fans and, of course, sophisticated liquid cooling systems, which are much more expensive and difficult to implement. So we found basically a need in the market that our technology could solve, and that's the area we've been focusing on. Apart from that, plasma actuators use case, we also evaluated our sanitizer, or even sanitize, vertical farmings. Also, we evaluated propulsion systems for satellites. This is something MIT also has been working on. So use the atmosphere air to produce plasma for propulse the satellites very close to Earth. And also electrostimulation and medium activation, something that Emily has explained in detail during her time.
Well, I can say as an investor, moving from wind energy to data center cooling is definitely strategically a good move at this time. I was wondering, like, what has the reception been from investors, and what kind of bottlenecks are you seeing as you're being, a deployment in this new field? Do people understand it? Are they asking more questions? What do you need?
Well, to be honest, the big problem we're facing is that nobody is familiar with the tech. So it's a completely new thing. Nobody, even people, struggles to understand, because how this consumes so little and produce so high effect. So what the transition of energy from one thing to another, from electricity to the effect you produce in terms of heating or cooling or whatever. And you need to understand a little bit fluid dynamics, boundary layer theory, and all that. So we struggle to people to understand that, but when they see the tech in action, this change dramatically, because they see a very small piece of thing reducing temperatures of the stuff in 30 degrees in less than 2 minutes, and that's amazing. So very small strip producing things like that. So, but I think we were lucky because 1 year ago we engaged with a relevant chip manufacturer that has been working on plasma cooling for some time. So we were speaking the same language, and this accelerated, for us, the development, the solution for that sector, as of course we were not experts on electronics, but these gentlemen were able to basically work together and share the same know-how and accelerate the path towards get a product ready for the market, validated by them, who are a relevant player in the market. And I think that was crucial in our development right now. And where we are, of course, happy for it. Yeah.
Great. Well, amazingly, in this panel, we've managed to hit all of the investor buzzwords. I think quantum, AI, semiconductor manufacturing, fusion. What else do we get there? And industrials and chemicals. So if I was just, I think we're just missing geothermal. So if I was to ask you all, if we think about ourselves in 20 years, which of those will plasma have played the biggest role in, do you think, and impacted society in the biggest possible way? I would love to start with Scott, then David, and then end with Emily. 30 seconds each.
Yeah, well, of course, I'll put a plug in for fusion. I mean,
I thought you might.
Fusion on that time scale, certainly, I think has a very plausible chance of providing, starting to get to the point where we can start scaling up, providing abundant, sustainable energy. And that will not only meet growing energy demand, but I think it really can unleash new markets too, that our present energy sources haven't been able to do supply energy for. But I think I'm very excited about all the different things that Emily mentioned as well, and I'll defer to the others to speak to those.
Well, of course, I mean, fusion is I mean, if it happens, in the short term, will be a paradigm shift. Totally agree with Scott. However, I mean, I think low temperature plasma got an opportunity to improve efficiency in many sectors in problems that have not been properly solved before, and they are much more easily to implement. In fact, they're appearing more startup like us in these different verticals I just mentioned before, and there's more papers on low temperature plasma being published lately. So I think it's something in the rise, and everything will benefit the industry, that's for sure. And as much we took more attention on this tech, I think more beneficial to people for the whole different applications, including, I think, fusion.
Emily, I can't wait to hear what you're going to say.
Well, I hope, like everyone on this call, that fusion is here in 20 years. I think it would be fantastic. And that we're really getting electricity onto the grid at that point. I think there's still a lot of work to do. And so I'm certainly hopeful it would be transformative. I do think it's lower risk to go looking at the low temperature plasma. But a lot of it is, to be frank, a lot of it is at lower TRL, and that's the case, especially in the chemical space. That's that is the case. There is a company that I know that is working on that does use plasmas to produce hydrogen from methane, they got a very large loan from DOE, and I wish them well. I hope they continue. There is, and you mentioned this already. I'll just say very very quickly a full disclosure that I'm going to mention a company that I am not directly related with, except through my husband, who is a co-founder of this company that has shown that plasmas can be used to do direct recycling of lithium-ion battery cathodes in particular. And I think that is going to be a huge win later as we continue to electrify and we have these lithium-ion batteries that have important critical minerals and critical metals like nickel and cobalt. I think we're going to be in a situation where, and lithium obviously, that we will want to recycle those batteries rather than do mining. And so I'm excited by the idea that we can use plasmas as a key step, not the only step, but a key step in direct recycling of lithium-ion battery cathodes, which is the part of the battery where all the expense is.
Amazing. Well, thank you all very much for educating us on this exciting field. And I look forward to in 20 years' time to seeing who was right.
Thanks, Duncan, David, Emily, and Scott. The whole SOSV team is very excited about the Plasma Forward project and our collaboration with the Princeton Plasma Physics Laboratory. It will be great to see it take shape next year and to welcome our first 5 startups to a new facility near Princeton where the Plasma Forge will take shape. If you want to learn more about the Plasma Forge project, there is a live breakout session happening just about now with our SOSV colleagues Ji Ke and Susan Schofer. Just go to the agenda to find the link to the Zoom for that session. And now for our final panel of the summit, can Kenya lead an African green industrial revolution? In past years, we've spoken with leaders from places like Singapore, a resource-scarce city-state betting on innovation, and Iceland, which already runs almost 100% on renewables from hydro and geothermal. Today, we turn to Kenya, maybe one of the most compelling climate innovation frontiers in Africa. Kenya already sources 90% of its electricity from renewables, dominated by geothermal. But here's a striking contrast. Kenya's total electricity consumption is about 10 terawatt hours per year, which is 1/3 of what a single major tech company like Microsoft or Google uses globally. And per capita energy use in Kenya is roughly 60 times lower than in the US. Kenya is running a remarkably green system on a small scale. The big question now, how do you scale that up, maintain reliability, and become a hub for climate technology? We're honored to have with us today Ambassador Ali Mohammed, Kenya's special envoy on climate change, representing President William Ruto, himself a scientist by training and a vocal advocate for Africa's climate ambitions. Moderating the conversation is SOSV partner Ben Joff, who you met earlier. Over to you, Ben.
Ambassador, welcome and thank you for joining us. So in our first part of our conversation, I'd like to ask, why Kenya? How do we go from the local reality to global leadership? So Ambassador Ali, Kenya is often described as Africa's climate leader. The country already gets about 90% of its electricity from renewables, mainly geothermal, wind, and hydro. And President Ruto has made climate action a defining part of his foreign policy. What's powerful in Kenya's story is that climate change isn't abstract. It's a lived reality with repeated droughts, devastating floods, livestock losses. Could you start by telling us what makes Kenya's climate journey unique, both in its leadership and in its vulnerability?
Well, thank you very much, and so glad and delighted to join all of you for this engagement. And I'm really happy that the good work that Kenya is doing over the years, especially my president, President William Ruto, is being recognized. But what makes our journey unique is that we anchor on our potential to both grow our economy and prosperity and address our concerns and vulnerabilities. As you rightly point out, climate change is a real and present danger for Kenya and indeed for most parts and all parts of the world. And along with other emerging and developing countries, we continue to call for fair and equitable climate finance. Yet we also recognize the potential we have to cost competitiveness, provide climate positive solutions at a global scale as an economic proposition. We have the young entrepreneurial population. Our average age is 19.8 years. The relevant natural assets and resources and the renewable energy offer an untapped potential to be both a green manufacturing and industrial powerhouse and to remove atmospheric carbon at a global relevant scale. We do not just look at how we grow without adding to our emissions, but we also look at how we grow by leaning into green solutions, from climate smart agriculture to green mobility, institutional development, clean cooking. I just finished a 2-day workshop bringing together a large ecosystem of people who are investing in institutional clean cooking, so green hydrogen and its derivatives, fertilizers to boost our yields, e-methanol for shipping and aviation, and carbon removal. Kenya is offering bold climate leadership through initiatives like the Accelerated Partnership for Renewable Energy in Africa, in short called APRA, and the Africa Green Industrialization Initiative to power a new era of shared prosperity and sustainable growth across the continent. This platform additionally enables us to enhance energy access, reduce emissions, and create inclusive economic opportunities. By focusing on this notion of climate growth, we hope to offer the world a sustainable perspective of climate positive growth. We're also realistic. A strategic anchor on our economically viable potential is the only path with real Kenyan and African agency to design, fund, and execute our response to climate change on our terms, in particular in today's geopolitical reality that we all live in.
Ali, you mentioned the growth challenge. Today, Kenya's total electricity use is about 10 terawatt hours a year, which is roughly 1/3 of what Microsoft or Google use globally, just one of those companies, and about 60 times less than the average person living in the US. As Kenya's economy and population grow, how do you plan to meet that rising demand while staying on track for the goal of having 100% renewables by 2030? What are the next frontiers? So you mentioned green hydrogen, but how about things like the potential for geothermal, solar and wind, battery storage, nuclear interconnections? Can you tell us more about that?
I think all those are possible options, and we are exploring all. To use an old metaphor, we must fire on all cylinders, and we will. We have unique geothermal potential and experiences. We are the sixth geothermal leader in the world. Our installed geothermal capacity ranks 7th in the world. Now it's actually ranked 6th and even exceeds that of Iceland. That allows us to cost competitively and quickly build out renewable baseload. We also have onshore wind with some of the world's highest and fastest capacity factors. Our Electrocana wind farm is the largest in Africa so far and has an average capacity factor of 55 to 60%, well above the global average, as you know, of 25 to 45%. And we have significant untapped potential to expand. We also benefit from our many sun hours. We are right in the tropics. The equator passes right in the middle of Kenya, and very low seasonality, which means solar can deliver reliable year-round generation and much lower storage and needs than elsewhere. For comparison, the lowest capex standalone for BES configuration using only wind, solar, and battery storage to provide reliable 24/7 power could be as much smaller in our country than it would be, for example, in other countries, at about 1/3 of a system needed to deliver the same output in industrial heartlands of Germany, just for comparison purposes, or around 35% less than, say, Spain, which also enjoys some more sunny than Germany. Crucially, this expansion will only happen when it makes real financial sense, which means it must power our economy. Painfully, retail energy demand to address energy poverty does not always make for a compelling business case, even if the development outcomes are undeniable. The difficult truth upholds the paradox of high energy poverty alongside high untapped renewable potential. That is really the tragedy and the paradox of the African continent and Kenya, including Kenya. Therefore, we must attract large-scale industrial anchor demand to strengthen the business and investment case to build out renewable generation capacity. And we must plan that capacity is always in ways that help address energy poverty and create opportunities for diverse and distributed new green economic activity. This also ties directly to our push for electric mobility and institutional clean cooking, as I said earlier, transitioning as catalytic enablers for low carbon growth. Given our demography and geography, a green, prosperous Kenya will combine grid, mini grid, off-grid solutions, both connected and captive industrial deployments, and renewable energy with proper load balancing that require renewable baseloads such as geothermal as well as battery storage. The only way to achieve this quickly and sustainably and at a scale is by anchoring on solid economics, prioritizing activities where we can be regionally and globally cost competitive, and working hard both to remove the barriers holding that potential back and to realize it. And that is exactly what Kenya is prioritizing currently.
So you mentioned the need to anchor this green industrialization in economic activities. At the recent Africa Climate Summit, President Ruto spoke about green industrialization, that Africa shouldn't just export raw minerals, but build industries powered by clean energy. So what does green industrialization mean in Kenya's context? Where do you see the most promising opportunities in manufacturing, critical minerals, agri-tech, digital infrastructure that could turn clean power into jobs and exports?
To answer that question, green industrialization is not a Kenyan innovation, but for Kenya, as I believe it is for all of us and all of us in the world, green industrialization in Kenya's context will have several levers. Again, we must anchor on where we hold the greatest cost competitive potential. For instance, many African countries import large volumes of chemical fertilizer, organic fertilizer, and our smallholder farmers often face some of the highest prices globally for this essential input to their farms. To increase yields and avoid further land clearance, we must improve soil health and fertilization, therefore. However, relying solely on imported chemical fertilizer is both economically and financially unsustainable. So what is the solution? Advancing green fertilizer production in Africa, in Kenya, alongside alternatives such as biochar blended organic fertilizer, which adds further value to bio-waste and provide a durable carbon removal, enhances our agency, strengthens our trade balance, and improves food security. At the same time, the precursors of green chemical fertilizer production, and here I mean green ammonia and green hydrogen, have many other downstream applications, including the production of sustainable synthetic fuels for the aviation and maritime industries, where global demand is growing even as supply remains constrained. Combining export-driven and local use cases can reinforce the resilience and viability of investment models while delivering immediate, diverse, and tangible local economic and development benefits. Kenya's geology and geothermal resources offer rare advantages for green industries that need steady 24/7 power and heat. While global discussions on green industry focus mostly on electrification, many industrial processes also rely on heat and green hydrogen, can provide the high heat needed for activities like mineral refining. Our geothermal fields are supporting advanced technologies like direct air capture and carbon storage. It's no surprise then that Kenya hosts Africa's first DAC, direct air capture machine developer. Octavia, it's called the company, Octavia Carbon, and Great Carbon Valley, pioneering green industrial hubs offering ready opportunities in carbon capture, storage, and green digital infrastructure. Our nation, Kenya, is also a hub for electric mobility, innovation, and manufacturing, attracting investors, talents, and technology from across the world. Currently, we have over 40 companies in different businesses in the sectors from manufacturing to assembling and charging infrastructure. This sector has so far attracted approximately US dollars 400 million that have flowed into Kenya's electric mobility sector since 2021 from global partners. And I invite all of you to consider investing in Kenya in these sectors and other related sectors.
So, Ambassador Ali, you mentioned the startup Octavia Carbon piloting direct air capture project in Kenya, and that's a great example of using Kenya as a test bed for innovative climate technologies. There's another very global trend for which Kenya is very relevant. We've seen companies like Microsoft investing $1 billion in a geothermal powered data center. So that might also bring some new customers able to not only take advantage of the energy potential of Kenya, but also finance the energy production itself. So, what can founders and investors coming to Kenya expect in terms of infrastructure or policy support or access to renewable energy? And what areas of innovation would you most like to see come next?
Well, as I said earlier, what makes us, Kenya, so attractive is our integrated range and potential, our existing green grid, our massive untapped renewable potential with a lot of baseload potential and heat generation, our suitable geology for carbon storage, and our young entrepreneurial population all give businesses a chance to kickstart development. And our policy focus on climate positive growth, which we adopted at the first Africa Climate Summit, means we approach all of this as an economic opportunity, one that needs to be invited, requires collaboration, and demands flexibility and innovation, which we are determined to offer.
So earlier in our conversation, you also mentioned the challenge of getting the climate finance. And President Ruto has been quite outspoken about global climate justice, saying Africa is paying for a crime others committed with carbon emissions and changing climate. And is accused wealthier nations of breaking a climate blood pact by failing to deliver on promised funding as well. From your perspective, how can Kenya and other African nations unlock fairer, faster, and more affordable climate finance without falling into debt traps? And do you see progress in reforming global institutions or mobilizing private capital for green infrastructure?
We are going to COP30 in a few days from now in Belém. And a number of our countries, including particularly people from the finance sector, are just coming back from the meetings in Washington discussing these issues of finance overall and climate finance also included. Just as in the energy conversation, we must continue taking both and approach. The loss and damage that is suffered by all of us, and I've just been sympathizing with the people in the Caribbean who are currently experiencing one of the worst hurricanes, Jamaica, Cuba, and others. We also all suffer from these severe impacts of climate. And so the loss and damages suffered by climate vulnerable populations, many of whom contributed least to this crisis, is profoundly unjust, and as it's rapidly increasing, we need to, of course, adapt. And the bill of adaptation for countries like Kenya is always increasing. Such inequity cannot sustain long-term global stability or genuine collaboration, and we must and will continue to press firmly for fair, and equitable climate and development finance as an essential pathway to solution and to development. At the same time, I must add, we are neither naive nor unrealistic. The pool of grant-based capital has never been sufficient to meet global needs, and it is shrinking rapidly. And we've seen a number of developed countries are cutting their ODA. Each type of capital comes with its own expectations, and unless those expectations are met, funding will not flow. To attract private investment, the available instruments must deliver on risk-adjusted returns. Fortunately, we possess not only inherent climate competitiveness, but also a growing local and global toolkit for de-risking investments. Concessional and grant funds can be channeled into guarantees, insurance mechanisms, or fast loss structures, while a rising body of African institutional capital, notably our pension funds, can provide localized de-risking capacities. And we are discussing with a number of them. Collectively, we have enough data and experience to make far more nuanced assessments of African risks, avoiding the outdated practices of painting the entire continent with one brush and imposing excessive risk premiums on the unknown. Africa is already taking its own challenge through the creation of, for example, the African Credit Rating Agency, enabling more accurate and context-specific credit evaluations instead of relying distant evaluators who hardly come to Africa. These are tangible examples of financial reform progressing even amid growing resistance to multilateralism and coordinated global action. Yet much more remains to be done. Let's be honest. There are countless innovative ideas emerging from the financial sectors, particularly around sustainable and climate-aligned debt instruments. Kenya was proud to be the founding country of the Independent Expert Review, Debt, Nature, and Climate, and we co-chaired that process, which eventually identified many such opportunities. What is now most urgently required is political will for implementing the recommendations of such independent groups. In financial reforms, as in global market access, the absence of that will continue to constrain Africa's capacity for climate-positive growth. Our broader vision also prioritizes mobility, e-mobility, universal access to clean cooking, universal health coverage, and so forth. And many opportunities are already viable and actively attracting investments. However, far greater and faster scale will only come with stronger global political resolve to open markets and mobilize finance, not by throwing vast sums of grant funding or subsidies are the problem, but by creating the right incentives, transparent metrics, and innovative blended finance tools to overcome investment hurdles, unlocking capital, and accelerating transformative impacts. And there are positive things that are already taking place, and we continue to push this agenda at the global level, and we will continue to push that also in the upcoming Belém conference. And we invite you all to support the fairness and the equity that Africa and the global South countries are pushing.
Thanks, Ambassador Ali. What you describe about the necessity to reduce the risk and actually makes me connect what Kenya to some of our other speakers at this event who are maturing startups that are trying to be evolve from a risk capital to more like project finance and eventually become bankable asset classes. And I see some parallel between what you say on those companies who are maturing and need to do that to unlock the largest pools of capital. In closing, finally, if you were speaking directly to the climate founders, investors, and innovators tuning in today, why should they look to Kenya? What's your message to those building the next generation of climate technologies about what's possible when they partner with Kenya and Africa?
I will tell them Africa, Kenya is open and ready for investment. If you're a climate founder, if you're an investor or an innovator, you typically need three elements to achieve the best return on your investment: abundant renewable energy, skilled human capital, and the right physical environment, whether that means available land, favorable geology, or access to critical minerals. Africa in general and Kenya in particular possesses all the three in abundance, affordably, sustainably, and crucially with minimal competing use. In Kenya, you will find a location where your data center, your steel plant, or direct air capture facility will not be vilified as energy-hungry obstacle to the green transition, will not face decades of permit battles, and will not struggle to attract young dynamic talent in an overstretched labor market. Here, innovation is not restricted, it is welcomed, empowered, and celebrated. We look forward to sharing that future together with you. And you are most welcome to Kenya. You will find Kenya ready to receive you, and you will be amazed how your investments will prosper and grow.
Ambassador, thank you. It's great to hear your words of focus on construction rather than obstruction. And Ambassador Ali, thank you very much.
Most appreciated, and thank you very much for the opportunity.
We've reached the end of our second day on the SOSV Climate Tech Summit main stage. I hope you've learned a lot and taken away some inspiration from all these intrepid founders and investors. As I said in my opening remarks yesterday, no matter what the prevailing view in Washington is, there is no doubt that the atmosphere is warming and that the consequences will become more and more apparent to everyone on the planet. That will eventually make the work to decarbonize and even remove CO2 easier. But in the meantime, we should take just a bit of comfort from the knowledge that the momentum behind decarbonization, especially in energy, has already led to big reductions in forecast emissions and will continue to do so with the deployment of decarbonizing technologies. Whether that's wind and solar in some parts of the world, or fission, geothermal, and maybe even fusion one day in the US. There is a lot to look forward to. Thanks for joining us, and let's get back to work.